Is this thing good? This thing should be good, yeah. Should be good. Is this thing good? This thing should be good, yeah. Should be good. Okay. Amazing. Amazing. Right in time for the daily candle. Oh shit. Whoops. Oh, I never opened Discord. God damn! God damn! What is this thing? What should we call this? What do we call this? Well, Vanguard, right? Let's do Vanguard, suppose. Given the fuck what they did today. Whoops. Yeah, in terms of these trades, right? I mean, it turned out to be a pretty good call closing out the shorts when we end up getting that candle close up here. Talk about this exact scenario, right? Potentially round tripping the whole thing. Well, there you fucking go. Also, we talked about like this squeeze, right? So far, so good, right? In terms of like coming up to this next zone, we're kind of just sitting here building value above the value area high so far. And we just filled the CME gap, so we can start going from here. We're not. They're not TP on the long here. There's just no reason. There's just no bearish edge, right? We were just blasting through the zone, no dibs, just squeezing. So kind of just let that be. We gotta be a little bit careful though. Right now we're not hedged anymore on these things because like the remainder of the shorts got closed out when we came back up here. I had to stop at the entry and that's it. So we start to lose this, probably gonna open them again. Make sure we have an alarm there actually. Also, let's mark out yesterday's VWAP. VWAP. Yeah. No, also interestingly enough, actually, like on BitGet, they added like traditional market equities. So I was playing around today, trading with that stuff. So I want to see what liquidity is like. Pretty shit. Pretty shit. The interesting thing about it though is they have like extremely low fees. They have like a 90% fee reduction on that. So it's basically no fee trading. I suppose they want to incentivize people to like try it out. But it's definitely sketchy. I was playing with like literally like $100 trades and like we weren't getting like filled right away kind of thing. So definitely very sketchy to trade that with size. Or maybe just because I was looking at like Reddit and some other more obscure ones. Curious how like Nvidia and Google are. Boom, 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 boom. Pretty interesting though. Like, it's a pretty lengthy list actually. Like, let's just go, kind of go look through this thing. Cause I thought it was they added like the Mag 7 basically, but I guess they've been updating it ever since. There's Tesla, Meta, Apple, Circle, Strategy, Amazon, Google, Microsoft, the Qs, Nvidia, Robinhood, Coinbase, Reddit, Futu. I don't even know what that is. AppLovin, Palantir, Oracle. I don't even know what some of these are. Acupuncture Pick. Anyways. Alibaba, ARM, Eli Lilly. You can trade silver, gold, McDonald's, MasterCard. Like basically like most of the, what's it called? Like a lot of the NASDAQ 100's in here basically. Basically it though. And they have GameStop, I guess. Which it was pretty nice, right? Like the low fee trading like that is so nice. Because like even with the reduction in fees that they give me, it's not at the entry, right? So like the only way to get like really low fees on here is if you do the trades via their token. Can't say I'm a huge fan of. Anyways, we'll worry about that later. We have our alarms set on this stuff. Yeah, we got hella alarms. What else is on there? This thing did the retest and wins. Yeah, I was also playing with this stuff from that video yesterday, collecting some data on that stuff. Yeah, how did this thing finish? Also, honestly, in terms of TPing here, like I have a TP set here right now. But I might cancel it. I might cancel it, honestly. If we're gonna sit here and consolidate for a bit. Because this 98 zone's looking so goddamn juicy. In terms of like all the data I was looking at earlier, I'm guessing we should probably catch up on some of that. Actually, let me update this first. Moving outside day to the downside. It's a little alarming. Soon. It's a little alarming, right? Right to value area high, and the rotation's all the way down here. I'm just thinking if I want to open like a hedge right now regardless and just kind of eat the loss if we go up from here. We'll give it some time. We'll give it some time. How much would we be losing? If we open the hedge here, it'd be what? Probably behind the old line to be safe. It's quite a difference. Was this always on here? Let's fucking go. Go what? Shout to the mouth. God damn. You there? Yeah, I am there. I'm here, I'm alive. Are you there? We're not, we're not. We're not. Just thinking, I'm just thinking. Shit's quiet? Is it quiet? Shouldn't be different than usual. I start screaming out loud if you want. Blow out your ears. My voice. It should be good. I can't tell though. I didn't change the settings, did I? Well, let me lower this first. Kind of drown this out a bit. I have a screenshot of all the settings somewhere. I need to find it. It should be the same as always. Maybe it did change. Let's try and find this thing. Damn, I have so many screenshots on here. Damn, where is this thing? It's gotta be before all this. Oh, here. 2015. Wait, it's even higher now. Okay, what about now? Is it better now or no? We're not. We're not. I got to hear myself, right? Where is this thing? Blah 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 blah. I got to hear myself, right? Where is this thing? Blah 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 blah. I mean, I can hear it. I don't know how loud it is. It had it on the wrong device. I don't know why. Maybe that changed it. I'm not sure. That's annoying. I don't know why OBS does this. Sometimes it just like resets half the settings when I don't change anything. You're gonna push here? Maybe. I mean, so far so good. Kind of building value above the value area high from yesterday. But also like setting up a potential nuke to the downside, right, value area high. And we have like an outside day, so like even more probable. Always say maybe. Of course, no one can predict. Anyone that sits here and tells you, yeah, we're definitely going to the upsides, doesn't know what they're talking about. No one can predict the future. Like Trump could have a heart attack and just die right now. We're going straight down. Some like Bitcoin whale can decide to sell like 1,000 Bitcoin right now. We're going down. How do you want me to predict that? Megaphone been playing out all day on the NAS. Megaphone? Oh, like a pattern? I don't know, I don't really trade patterns, so it's kind of like irrelevant to me. There's a megaphone, cool. If not, I don't care. All I know is that there's a massive gamma strike right here. We cannot get past it on the S&P. Actual data, actual math. Well, I don't trade imaginary patterns, especially on the low time frames. I mean, it's very relevant whether you trade it at all. I don't know about that. Like, think of how many people are trading on different time frames. The chart's gonna look completely different on different time frames, and then you also account for like, are you using the wick? Are you not using the wick? Are you using the wick and no wick? I think we should do it. There's some serious up and down swings. Like, where are you even drawing a megaphone here? Like this? Or like this? Does this even qualify as a megaphone? Broadening top. Yeah, I don't know if this necessarily counts. I mean, is there one on the lower time frame or something? This is what I mean, right? Like, where is this megaphone? I don't even know what you're talking about. I don't even know what you're talking about. But like, they're supposed to be like this, yeah? This is not a megaphone pattern. Like the two lines have to be sloping in different directions. So I'm not seeing one here, but so I'm not sure what time frame you're talking about. During the day worth of trading. During the day. This? It's also not a megaphone, right? There should not be this much white space in a megaphone. You should probably go on the Bukowski website and actually read what qualifies these patterns or doesn't. Spend some time nerding out on the definitions of actual patterns. At least if we're trying to trade the statistics behind them, or else you're just trading imaginary lines, right? No actual math behind it. Damn, I'm hungry. I'm hungry. Okay. Boom, 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 boom. Let's get caught up on anything we missed at the gym in the news. I don't think there was a whole lot, right? Can't imagine there was a whole lot. What is autopilot?
Marco got the levels mapped out, that's fact. Fibs on chart, arm loading at the crack. 6-6 tap, I double my stack. Ops all green, then it all went black.
An investment app?
Hit that field, now I'm in advance. Entry sweet like a late night text. Wit touch deep, now the chart say bless. Gold then bounce, hold then run. Math got
A
me
copy trading app? Interesting.
the base for the kill. Stack gets bigger when the wit get real. I don't flinch, I don't blink when it hit. 702, I'm sitting in the pit. Trap line hidden, tag that price. Order get filled, chart looking nice. I might ladder from the 6-6 clean. Then that more down to 7-8 mean. Pull back wicked, out start stress. I stay cool, that wick so blessed. She roll my wood while I count these racks. Price touch once, ain't never come back. chase, we placed in chill. Golden pocket, got that thrill. Golden bounce, price come dance. Hit that field, now I'm in that van.
Okay, nothing interesting, nothing particularly interesting going on.
Wick touch deep, now the chart say bless.
Ba-ba-ba-bum, ba-ba-bum.
Math got me on like I'm holding a drum. 618, yeah, that sparked my thrill. 75 here.
In the meantime,
Pull back, moving like you know my play. I'm just chilling, watch the tape replay. They rush by as I wait for the K. Get that field, then chart obey. 6-6 fib, got ops and fear. Price bounce off, then disappear. Marcos don't flinch, Marcos don't sweat. Big field hit, it ain't touched yet. Bad bitch with me rolling up again. I'm just laughing, looking at the 7-2 bend. Wick come kissing that deep retrace. I just flipped that back to base. Golden bounce, price come dance. Hit that fib, now I'm in advance. Entry sweet like a late night text. Wick touch deep, now the chart say bless. Golden bounce, hold and run. Math got me armed like I'm holding a drum. 786, now the trap gon' steal. That field was major, now watch me chill. Stack get fat when I play them songs. Fibs on point like I'm throwing stone. Golden pocket.
I think we haven't seen one of these yet.
Vibes.
Might as well watch this.
Yeah, Marcos, you sure of that? Ha! Bottom in, baby. Now we dancing. Oops. Short the floor, you crazy. Price went moon, now you shaky. I bought low, now it pay me. You went short, now you hate me. Mad short, why you do that? Now you crying in your group chat. Not so tired.
Oh yeah, this guy. Okay.
Wig, now flew past.
Bum, 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 bum.
They said bearish, I said bet. Tap that fib to place the nets. While they panic, I just flex. Profit hit, now cut the check. You fight trend, I
At this right here, all the
This guy has taken free
It's loud as hell. Loud as hell.
short the floor. You crazy. Price went moon, now you shaky. I bought low, now it pay me. You went short, now you hate me.
Let's create a new Google Doc for this. Yeah, I really not make a single note from yesterday's video. What a waste of time that was.
Bottom call, I ring that bell. Up short low, straight into hell. With that dip, that's where I dwell. I stack gains while they just yell. Short the floor, you crazy. Price went moon, now you shaky. I bought low, now it pay me. You went short, now you hate me. You were floor, hey, don't do that. Now you crying in your group chat. Math so tight, I don't do cap. Cut that wig, now I flew past.
Okay, let's change this. Pause this. Let's resize it a little bit.
$3,000 to over 7 figures.
2019 was a scratch year for me. I just lost money because of all this bullshit. What happened with me when I started out, I never asked the question why. Like, why are we respecting the indicators? I should have asked the question why. So that's where I shifted my focus to the buyers and sellers. That's what creates the market.
His name is Jay Ortani, known as one of the most transparent traders in the industry.
What took me from say 3K to 7 figures now is not what will take me from 7 to 8 figures. I took my profits a bit too early. Still, I made like $20,000 on this. That is crazy. Like, easiest trade of my career.
Today on Chart Fanatics, he is breaking down his entire order flow strategy that allowed him to take $3,000 to over 7 figures.
Tesla is a major contributor to my PNL, my 7 figures PNL. About 700K or 800K has come from this one stock alone. My edge is right here. My edge is lowering the risk because I size up. So if I size up, I want my risk to be controlled.
He's going to show it all, step by step, with trade examples and even live trading examples.
Now you guys can see my order window. I covered my position at 955, overall making $50,000, approximately $49,000 on the NVIDIA trade. But because I took a loss on Tesla as well, overall I made $44,000 on this day. I would say the con of this strategy is nothing, honestly, because everyone says
I
that,
think I've
okay,
seen
the
this
con
guy
of the
on
strategy it
YouTube.
won't work.
I've seen this guy on YouTube. Does he have a YouTube channel? Jay Atani? Seems awfully familiar. Maybe, maybe not. I mean, he has a YouTube channel. Seems active, so maybe we have come across him before. Don't remember where. Looks very familiar though.
work in this market environment. This is going to work everywhere.
Hey guys, before we get into this incredible episode, I want to say a massive thank you. Full email in, and as well as on the website, you can go straight there, chart for now, and we have exclusive updates for that. The very world and the delivers, aka Jaw Trades.
Thanks for having me on. Thanks
My
for having
absolute
me.
pleasure.
I've
Thank
been
you for
waiting for
being
it for a while, but yeah, thanks for having me on. And you just landed in Dubai this morning.
Yeah.
So he just had a coffee. So
Yeah, we're gonna try and stay alert for this
Yeah,
one. Definitely, I'm very excited for it because one thing I forgot to mention is the way you describe this playbook and this strategy is almost the DNA of the market.
market DNA, yeah.
And I think that is, one, intriguing, but two, I am very excited to learn about it. So where do you think we're best to begin?
So yeah, so when we look at the market, we think about the market because when I started out, so I'm going to share my journey first and what happened with me and why I lost money for the first few months. So when we look at the market, when you start out, like I started out, you have to look at, a lot of people just look at the indicators and stuff, like indicators, and then you look at like bull flags and bear flags. That's where you learn, because when you search online how to trade the stock market, that's what you get. Indicators, bull flags, maybe Fibonacci levels, and a lot of different like head and shoulders,
Shout to the Fibs.
knee and shoulders, whatever. Different kind of names for the patterns, like whatever, Dragonfly Doji. That's my favorite name, Dragonfly Doji. But me being me, I always want to know like what happens under this, like what happens when you make a head and shoulder pattern. So what happens like when you see a 50% retracement when you look at the Fibonacci, or what happens when you see a bull flag. And a lot of bull flags, I would say, if you look at bull flags, 50% of them are going to work out and 50% won't. Or maybe 60% are going to work out or 40% won't, depending on the market conditions.
Yeah.
But for the first few months, I was too based on indicators and I was losing money. And even if I look at my journal for the first few months, it was basically, my journal was I lost money because there was a strategy. I remember that strategy. So if I talk about that strategy, it was if there was, like on the 5-minute chart, if the 9 and the 20 EMA are crossing each other, that's a reason to short it, or maybe long it. It's a sign of reversal.
Yeah.
Have you seen that strategy ever? Like, have you?
I've seen like crossovers, yeah. and then,
Yeah. So that was my strategy. So my whole journal was, for the first few months, this is the 9 EMA, this is the 20 EMA. If they're crossing each other, go short. And then I kept on losing money. So I started with like $3,000 or $5,000. I had a full-time job, so I could fund the account. But the good thing is that I started with good risk management.
Yeah.
So basically, when I was losing money, I was losing like $10, I was losing like $20. So I also had a full-time job to sustain. And eventually, yes, I was able to make money. But then this happened in 2019, and 2019 was a scratch year for me. I just lost money because of all this bullshit. Not saying that it doesn't work, it works, but you need to first focus on, like, I trade bull flags, I trade bear flags, I trade the indicators, I use indicators, but your strategy can't be based on indicators.
Yeah.
You need to focus on what happens with the market again. Let's keep it blue. So the market is made up of, like, what is market? When people talk about stock market, like, what is market? When you say stock market, it's just a marketplace for the buyers and sellers. That's what it is. Like, buyers
True.
and they meet sellers. For example, you have your supermarket downstairs. It's the same thing. You are a buyer at the supermarket and they are selling something.
Yeah.
So it's the same thing, buyers and sellers for the assets. For assets is the stock market or the futures market or the forex market. In the forex market, you trade currencies, buyers and sellers. In the stock market, you trade stocks.
Yeah.
In the futures market, you trade futures of the indices or whatever, or the crude oil futures or whatever. But that's what creates the market. The buyers and sellers, they create the market. The indicators don't create the market. So that's why I was losing money, because buyers and sellers, they create the price action, and the price action then creates the indicators. For example,
Got you.
if I focus on 9 EMA, what is 9 EMA? Like on the 1-minute chart, you're seeing these, like, say 9 bars on the 1-minute chart. So it's going to take, like, there's a formula 1, 2, 3, 4, 5, 6, 7, 8, 9 here. So this is, say, the 1-minute chart or the 1-day chart. Let's say 1-day chart, because people like to focus on the higher time frames. 1-day chart. What is 9 EMA? It's going to be like the 9 exponential moving average of all these prior price action. And then you are trying to predict what's going to happen later.
Yeah.
But if something happens in the market, the panic is high, like recently, I don't know when this is going to go out, but the tariff news and the war news,
Yeah.
the market won't be based on indicators. Like, it's going to drop. And what happened with me when I started out, I never asked the question why. Like, why are we respecting the indicators? I should have asked the question why. Like, why are we respecting the indicators? So that's where I shifted my focus to the buyers and sellers. That's what creates the market. And I started focusing on the market depth and the level 2, which is basically more prominent. It's more useful when you're trading stocks and futures. But in Forex, you don't have a reliable way to
DOM.
look at the volume.
Yeah.
So I tried Forex, did not work out for me. There are a few Forex traders that are good, not everyone, but there are a few good Forex traders, but it wasn't working out for me because my edge is right here, focusing on the volume by price and looking at the buyers and sellers. So that is
in the forex market is not centralized, right?
Yeah.
So there's no like specific data that you can rely on versus in futures and stock markets all centralized. So all the orders are in you're seeing all the orders that
You're
there
seeing
are.
all the orders. It's centralized, and the stock market and the futures market is always like very regulated and everything. So you can actually see real time volume. And I have like 2 or 3 platforms, because if I trade one platform goes down, I have the other platform.
Gotcha.
And the number of orders, for example, this is like $100 level and this is 99. It's going to be same on both the platforms. But if you look at Forex, it's going to be different with like different platforms because of the broker and everything. So there is no centralized way of looking at the volume in the Forex market. In future,
That's
is.
the one thing I think about crypto is that like everything is so segmented, right? It's like every exchange has a different contract. So you have to like either use like aggregated ones or find edge and which ones are more useful than not.
Stock there is.
And this is why you call it the DNA of the market. Because
Yes.
as you said, like this is where you're actually seeing the buyers and sellers, and everything else on the left-hand side, which most people are focused on, especially when they come into trading. But a lot of people end up staying around that. And some people make it work. But for the most part, I do think that having this understanding, even if you use, say, Fibonacci or Head and Shoulders, or whatever it may be, even the indicators, is that this will then give you the confidence, the actual confidence of knowing what's happening, why it's happening,
Yeah,
why is this formed, as you said. And is that why you call it the DNA?
Yes, like we are made up of DNA, the market is made up of DNA, and that's why I call it the market DNA. And one simple example I can take, because we talked about that just now, that this bull flag, say for example, the market opened up at 9:30 a.m., right? Say Tesla, after elections, Tesla had a crazy rally from like 220 all the way to like 480 or something, right? Crazy. It was making a bull flag at 220 as well, pushed towards the upside. Maybe it was making a bull flag at 480 as well. But this has a way more chance of working out than this bull flag. Why? Because there are more buyers here.
Yeah.
I'm going to talk about more buyers and more sellers, because there's a buyer for every seller and there's a seller for every buyer.
Yeah.
If you think about it, like, because for like my brain is always, it keeps asking the question, why? Like, why does this happen? Because when I was focusing on it, I was just
yeah, so there's a buyer and a seller, but one of them is initiating, right? Like either the buyer is being aggressive or the seller is being aggressive. So you need to differentiate in that regard.
not getting the answer to the question why. So now at 220 there are like more buyers, aggressive buyers, that's what I like to call them, because like there's no such thing as more buyers or more
True.
sellers, because if you want to buy something there will be a seller.
Yeah.
I'm going to talk about that as well. But say for example the market opens up at 220 and Tesla moved from like say 220, the ATR of that stock, which is the average true range, that is how much a stock moves on an average on a daily basis based on the prior 14 days. Say it's $20, so it goes from 220 to 240. So for example, it starts at 220, it moves, it makes a bull flag, pushes towards the upside. This is like it goes from 220 to say 235. So this bull flag has a way more chance of working out than a bull flag that is say moving from 235 to 240, because it's very extended now. So the buyers are like, okay, we don't want to buy at 230.
It's just which one is more willing to step into the spread. Well, doesn't matter the reason. Just, you either hit the bid or you didn't. You either have a limit order or you have a market order.
I'm going to wait for it to come back down to 220. So if you see a bull flag at 235, that is a way, like that might work out 10% of the times. But if you see a bull
But
flag
like, think
at
about it. Like, there's a lot of people that are just market ordering in on the stock market. Like some random person that doesn't actually care about stocks, right? They're just gonna go. Oh, today's the second week of the month, and this is when I DCA into fucking Apple. Let me go put in market order $100 worth of Apple fractional shares. They're not even aware what the fuck spread is.
220, that will work out 90% of the time.
So context and positioning matters a lot.
Where the buyers and sellers are, what's it
If neither want to step in the mid area, adjust barcodes. Not sure what barcodes means. Like sit sideways. I mean, someone has to do it, right? Even if it's like the market maker just to provide liquidity. Or else the market doesn't. If no one's marketing, the market doesn't move. Like if I'm sitting here with a limit order and someone's sitting here with a limit order and no one is marketing on either side, like nothing's gonna move the price. It means it bounces back and forth across the spread. Like that's a role of market makers, right? To kind of add liquidity in those scenarios like that, and then they're the ones making money off the difference.
is the market sentiment. So yes, bull flag, bear flag, indicators, Fibonacci, everything works. Like in a bull market, Fibonacci levels, it's one of my favorites, because I don't have to look at these levels to know that, okay, if market moves from 0 to 100, it might find some support at 50, which is the 50% Fibonacci retracement. So I don't need this fancy word to talk about that. Like it's pretty much, okay, If something goes from 0 to 100, it might find some support at 50. So that is like pretty common sense. And the indicators, so even if you look at indicators, like I talked about the 9 EMA and the 20 EMA. So say in 2024, we had a crazy bull market. Like 2023 was a bear market. 2022 was a bear market. 2023 was pretty much stagnant. 2024, we broke all-time high. SPY itself, like SPY average yearly return is like 10%, which is the S&P 500 for the new viewers. S&P 500, which is the top 500 companies in the US stock market, on an average, it moves like 10% in a year.
Yeah.
That is the return if you just invest in SPY every single month, every single year, or whatever, right? That moved 30% in 2024, which was an exceptional year for the market, like 30% in 1 year. So now I saw a lot of traders when I look at these videos online, which I was doing as a beginner trader. I made this mistake that, okay, the market is moving 30% in like 1 year. So yes, your moving averages are going to hold like the 9 EMA. This is the 9 EMA. And the market is just riding because we had a 30% push towards the upside. People are buying at the 9 EMA, taking profits, buying at 9 EMA, taking profits.
How
buying at
common
9 EMA,
is this
taking
9
profits.
EMA? Like, who the hell came up with the 9? Is there some like reason? Who popularized the 9 specifically? Is there some like famous person or like fund they should do this? Is there a reason the 9 EMA is popular in trading? Nine is super common. Yeah, why though? Like, why not like 10, for example, or 8? That's interesting. What about 10? I mean, in terms of like calculating the actual EMA, I can't even speak. The EMA line, when you use 9, like the first candle is 20% of the weighting, and then the remainder is 80%, which is like perfect numbers. Whereas if you use like 10 or 8, that's not the case. I suppose that's interesting. Seems like more of a self-fulfilling prophecy thing than anything, but
It's going to work. 2024, it worked nicely. What happened in 2025? Trump happened. So Trump happened in 2025. So this 9 moving averages, maybe it's pulling back. You are buying right here, and then he's talking about tariffs. It's not going to hold.
Yeah.
And how are you going to know? By looking at the buyers and sellers. So yes, the indicators work, but they won't give you a sustainable kind of, like, for me, I always wanted to day trade for a living.
Yeah.
So I can't day trade for a living if my strategy is based on, okay, 1 year the market is uptrending, the next year it's not trending, or maybe Trump is coming
True.
up with something. My biggest trade was during the tariff thing.
Interesting.
Like this year, I made like close to 6 figures. I can call it like 93K. It's close to 6 figures. I was up more than 100K plus unrealized, but I realized it with $93,000. So Trump had a tweet or something, like he posted on X, that we are pausing the tariffs for 60 days or 90 days, something like that. That was a fake news apparently. The real news came in after 2 days, but on that fake news, I made like $93,000. And that did not respect any of the indicators. Did it
That was
respect
based
any
off
of the
the
indicators?
buyers and sellers.
Yeah.
the
Did
DNA,
it respect the MACD or the Fibonacci? MACD is amazing, man. This
I
is
mean,
what I
obviously
remember I
not,
started with.
right? Like, who thinks that's gonna do that? Like, it's just not like fucking concrete lines in the sand. The price is just gonna magically respect. Bit of a weird take, but
Like watching YouTube.
perhaps he's speaking in hindsight. He thought that's how they operated.
If the green and the reds are crossing each other, it's green time to buy. So when I think about it, I'm like, okay, there is a guy like Warren Buffett, for example. Like he wants his guys to invest his billions of dollars.
Yeah.
He's like, okay, if the MACD turns green, buy. Does he do that?
No.
So I keep asking the question, why? Like, why does this happen? So it's just about buyers and sellers. And when the Trump tweet kicks in, I made like my biggest trade was without any indicators. It was just looking at the buyers. I actually entered before the tweet came in because of like a technical setup. It was a bull flag. But then I saw that, okay, this has a lot more potential towards the upside. The tweet came in. It kind of helped me. So it was at the right place at the right time.
Yeah.
And I had my biggest trade of the year and biggest trade of my career. So that is
Nice.
how I look at the market. The market is made up of buyers and sellers. And the buyers and sellers, for example,
When you just look at this example here, in terms of like 2024, and a trader, let's say in that year, following that sort of thesis of the EMA and buying, and it's working out, and they're feeling great. How important do you feel it is to be able to adapt to market conditions, not get sort of married to one strategy that may have worked for a period of time?
Very
Is that
important.
why essentially the market DNA, looking at level 2, looking at the buyers and sellers, is actually very, very positive really for traders, regardless of your style, because that is universal. That will stay. That being able to identify those buyers and sellers is not going to change, regardless of the market conditions, of volatility, what's going on. You will always have that understanding, and it will always be useful information. Versus, as we said with that example in 2024, that worked that year because of the conditions and just the way the market was moving. So therefore, you had this strategy that worked for that year. But instantly coming into 2025, we saw a shift in the market, and now that strategy that worked, right? And there might be a trader out there who that was their first profitable year. They felt really, really confident. They came into 2025 thinking this is going to be the breakthrough and continuation of that. And then now they're probably there, maybe disheartened, maybe blown out their account, because that's the usual case that happens to a lot of people. Is that why it's so important to just have that understanding, especially if you're a stock or futures trader, right? Have that understanding of level 2.
Up to 6 million in futures funding. That's only for the future. Any traders a million in a note and their pay 100K account, but up the code C.
Example, I know a few examples. I know a lot of traders also will see that on social media. So the traders on social media won't ever blow up, because then they are making money from social media as well, right? So even if they blow up, they are getting money from social media. But the thing is, I have personally seen a lot of traders, in 2024, they made like trading SPY, which is the S&P 500 ETF again. So SPY is the ETF of S&P 500, which is the index, and ES, which is the features of this index, which is the most heavily traded future in the world, I think. And then there are like other type of futures, crude oil and everything. But yeah, so basically ES is one of the main futures that people trade.
Yeah.
NQ tracks QQQ, which is again the NASDAQ 100 ETF. So this is QQQ right here. So I know personally a lot of traders, they were trading like, they made like 80, 90K on one trade trading SPY in 2024, buying the 9 EMA pullback, and the market moved 30%. And especially if you're trading options, we're going to talk about why I trade options and stocks. And I want to get into futures, and I'm going to talk about the reasoning why as well. But in 2024, they had like 80K, 90K day, but now that thing is not working. Like the 9 EMA pullback, Trump tweet, it drops like crazy. They keep expecting a pullback, and they are losing 80, 90K instead of making 80 or 90K. So that is something we need to be concerned. And that's why I feel like if you just focus on buyers and sellers, that's what creates the market. And if you focus on this, you will be able to understand any market for that matter.
Yeah.
So I'm going to take a recent example. Do you game, Riz?
Do I
Like,
game?
Yeah, do you game?
I used to. I don't get as much time anymore.
I know
This
it's
guy's a
weird
gamer
question to
too?
ask, but yeah, a lot of traders are actually good gamers.
Yeah.
And that's why I'm not a gamer. I always want to get into gaming. I have like a PS5 and something,
Oh, he's
but I just
not.
game it like once a month or something. I want to get into Go gaming because a lot of good traders, they game
To
a lot.
improve the speed and reactions.
Yeah, my speed is good, but just like gaming, I feel like a lot of good traders are doing it, so I should do it. I try to get into it. I spend so much money on gaming, but I just don't game. But recently, we had the launch of Switch 2. Do you know? Nintendo.
Yeah, the new one, right?
Yeah, Nintendo. It's not Nintendo.
Don't worry.
Switch, 2. So it was released like 2 or 3 weeks ago. I don't know when this episode is going to go out, but yeah, 2 or 3 weeks ago it was released, and everyone was expecting the scalpers. Like, okay, say for example, you want to sell this. Everyone was expecting that, okay, the supply won't be that much. That is the gaming market. Like I talked about the stock market and the futures market and the supermarket and the gaming market. It's the same thing, which can be applied to the stock market. You have to
Same
just look at
principle,
same concept, buyers and sellers. This idea won't respect the 9 EMF, that's for sure. But say for example, you're looking at Nintendo Switch 2. So in Dubai, in UAE, the price was like, it started around 3,000 dirhams. That is the first day of the launch, which is going to be around $800 divided by 3.67. Everyone was expecting that it's going to be low in stock, and it started out with like $800. Whereas the MRP that was set by Nintendo was like $449 for the normal version and $499 for the one with the Mario Kart bundle.
People
I
were
know,
hoarding
I'm
it,
not
I
even a
guess.
gamer and I still know everything. I was thinking of buying it, but I was like, okay, no, I don't game. I don't want to waste more money on gaming. So the first 2 days, it was $800. The next day, I saw like this week itself on Amazon and everywhere, it dropped from 800 to 700, dropped to 600, dropped to 500, and now it's basically you can get it for like 2,000 dirhams, which is basically like $500-600. So like this is say 1, 2, 3, 4, 5. Say number of days, which is the time period. This is maybe the day. Started at 800, dropped to 700, stayed at 700 maybe for a day, dropped to 600, and now no one is buying it right here, dropped to 500 again, right? A lot of volatility when you look at Nintendo Switch individually, which is what I trade, which is, say, for example, the stock.
Yeah.
Now, let's talk about futures. So I want to get into futures because I'm going to tell you the pros and cons of the stocks and futures. But when we talk about futures, say ES. ES, as I mentioned, is S&P 500, right?
Yep.
So it kind of averages out these kind of anomalies. I call these the anomaly stocks, the stocks in play. Like if you talk about Nintendo as a stock, Nintendo Switch 2, it had a lot of volume and volatility for the first 5 or 6 days.
Mhm.
Now, if I look at the gaming market as a whole, PS5 and plus Switch 2 plus Xbox, whatever, Nintendo is going to rise. Like if you look at the average price of that, it's going to maybe slightly increase slightly, but the average is going to be pretty much like this, right? It's going to cause a bit of fluctuation in the average price, but this is way more volatile compared to the futures,
Of course,
which is the whole gaming market. That's what you're looking at. Like now, if I take an example, because I'm going to take an example of Tesla, because my 80% of the profits have come from Tesla
Really?
up until this day. So let's take an example of Tesla, and this is ES. Similar. Tesla is the Switch 2 here.
Yeah.
And ES is the PS5, the whole gaming market as a whole, like the whole gaming
Yeah.
market. So I'm going to do this. So now Tesla is going to be a lot more volatile compared to, say, ES,
Mhm.
just because it's more susceptible to different sort of news.
Of course, yeah.
So I call these, like, I don't call these, a lot, like everyone calls these like stocks in play.
Mhm.
These are stocks with news catalysts, stocks with some sort of play. Like in November this year, last year, 2024, we had the elections.
Yeah.
Trump won, and Tesla went from, like, I know a lot of traders made bank on it.
Yeah.
I was not able to make, I had November was a really good month for me. I think it was 6 figures month for me, but I was not able to capitalize it nicely because of like personal reasons or whatever. But yeah, 220, it went from 220 all the way to like 480, something like that. Don't quote me on that. Around 200s.
The
to
Trump
480.
pump.
Yeah.
That is like 100% increase in the stock price. If not 100, like it was more than 80% increase in the stock price. In the same duration, like in 2024, ES went up, which is the whole S&P 500, the top 500 companies of the stock market. That increased like 30% in the whole year. This happened in like 2 months.
Yeah, true.
Right.
Yeah. Mhm.
So a lot more volatility
Mhm.
in stocks compared to futures, because futures is looking at the S&P 500 as a total, the stock.
Yeah, it's like a basket, right?
Yeah.
Versus this is individualized, so
Yeah.
you see that volatility even more so. And then one other thing to mention, across both is when something is in play or has a lot more transactions or volume, it will have more of an impact. So, say for example, let's go to the gaming example, right? Let's say if the Switch made up 40% of the overall gaming market, that then coming down would then create more volatility here. But let's say if it's very balanced, let's say we have 3 different console options there. So let's say it only controlled 33% of the overall gaming market. This happening will have less of an effect. Still have an effect, but less of an effect because it's more balanced out in terms of the overall volume and transactions, right?
Yes, exactly. So S&P, like,
How do these 30-minute candles print? Interesting. Kind of coiling up. We're gonna break out of here, or what's?
like ES, as I mentioned, ES is the future of S&P 500 index.
Yeah.
It's called S&P 500, which includes 500 companies in total, but it's 503 stocks, which is a weird thing because a few stocks have like multiple offerings. Like Google has Google GOOGL and then maybe GOGL, something like that.
Mhm.
They have multiple offerings. So they have like 3 stocks, have 2 offerings. That's why there are like 500 companies, which are the mega cap companies. They
Yeah.
don't move a lot except some sort of news. But in total, there are like 503 stocks. So now this is going to move by maybe 1 or 2% or say 3% a day.
Yeah.
Tesla can move like 5 or 8% a day.
Exactly. Yeah.
Now, the other thing is that when we look at the strategy, which I'm going to get to a bit later, is that why do I stick with stocks and futures and not Forex? Because it's going to be a counterintuitive sentence because stocks are a lot more inefficient than futures and Forex. So
Okay.
this is a fact. It's like, okay, if you
Yeah,
look at
fair enough.
Forex is going to move like maybe 1 to 2% every day. You
Yeah,
trade
yeah.
Forex, right? 1 to 2% every day.
Exactly. Yeah.
When you look at futures, they can move from like on a good day, if there's like a tariff news going on or something, 3 to 4% on a good day.
Mhm.
But usually, if you look at an average, as I mentioned, 10 years on a yearly basis, but 2024 it moved 30%. In 2025, because of the market and the tariff news, dropped 20%, and now you're practically near all-time high. So that is good. That is more than what happened with the Forex. I know with Forex, like because I keep track of AUD USD because I used to live in Australia.
Yeah.
During tariff, I transferred a lot of money from USD to AUD because like the chart was like this. It dropped like 7%.
Yeah.
7%, it happened like in 4 years. Like after 4 years, if there's like a war going on or something, then we are going to see a lot of volatility here in the Forex market. 7%, which is still not that high. But if you look at futures, 20% drop, 20% push towards the upside. If you look at stocks, like for example Tesla and Google also, like Google had a bit of news or something. Like stocks are more susceptible to news,
Yeah.
and that's why they're inefficient. Like the efficient market won't move a lot.
Mm-hmm.
These are the efficient market. Like Forex is the most efficient market because it's controlled by the banks and
Yeah.
all over the world, because banks are making or losing money on the foreign exchange because of the Forex market.
Exactly. Yeah.
Right. So it's going to be very efficient. It's only going to move 1 or 2%. Imagine like Forex moving 15% in one day. The banks are going to go bankrupt. The companies are going to, like the countries, the economy is going to be unstable. But no one gives like, okay, if Tesla moves like 20-30%, that doesn't affect the overall global economy. Now futures, as I mentioned, it's average. It's less efficient than the Forex market, but it's still very efficient because it's a basket of companies.
Yeah.
So if one is moving, the other one is going to compensate for it. So it's basically moving like 20% in like a few months. And that too because Trump is in the office. But if Biden was in the office, it was just like
It was way
steady.
less,
Yeah,
yeah,
way
yeah.
less. But when you look at stocks, like stocks get a lot of
Individualized
news,
stuff.
man. Like Tesla, Google. I remember Google had a news. We're going to look at a few examples as well. That Google had a news one day. It dropped like 7 or 8% in one day.
Yeah.
Google, like a company like Google, dropping 8% in one day.
Mhm.
I can't imagine Forex moving like that, except there is a exception kind of thing that, okay, there's a war going on or something
Yeah.
that happens once in a few years, which is crazy. Like since 2020, there has been like 4 kind of wars. But like Tesla had moved from 220 to 480. That's not going to happen with Forex or the efficient market.
Yeah.
Stock market is the inefficient market. That's why you get these anomalies. I call them the anomalies. I love this word because I want to look for anomalies in the market. Like no one, like everyone is looking at these, but these are the anomalies because this is going to give me insanely high risk to reward.
Yes. Let's take a break for a minute there, guys, because I want to sponsor.
And the
They
low
have
caps,
challenges,
right? You
and
didn't even
get
mention the
empowered.
low caps in the stock
when it
market.
fall, you can get one of these. Get your subscriptions. You can tell you that it will next US trading for the prices. If you see,
Like I remember when I started out, they look at Forex. You know, like a lot of beginner traders, they will look at Forex because of the leverage.
Yeah.
When you look at Forex, it's like 20 to 1 leverage. I don't know how much is it.
way more.
Way more. Okay.
500 to 1,
500 to 1.
Yeah.
500 to 1. That is insane, right?
Mhm.
But do you have any edge?
But it's not that crazy because like it doesn't move at all, right? So you kind of need it to be able to like make money on those moves.
That's what, like, okay, you have the leverage 501. Why do you have the leverage? Because it's very efficient.
Mhm.
It's only moving 1 to 2% every day. So, but do you have any edge right there?
Yeah.
There are a lot of good Forex traders because it's very easy to size up on it,
Mhm.
but only very select Forex traders. It's very difficult to make a living trading Forex because it only moves 1 to 2%.
Yeah.
But you can size up exponentially
Mhm.
because of all the volume in the Forex industry. Compared to futures, like futures, when you trade futures, I don't know, you get like 10 to 1 margin or something like that, or say 5 to 1 margin or 20 to 1 margin. That's what I know about futures. Maximum you can go like 20 to 1. It depends from broker to broker or everything.
Yeah.
When it comes to stocks, it's basically 4 to 1 on most brokers. A few like US broker, like what I use, Interactive Brokers, they offer 4 to 1.
Mhm.
And that also depends on the stock. Like if for example I was trading GME or AMC in 2021, it won't even be 4 to 1 because it's very inefficient.
Yeah. Got it.
So it's going to be lower than that. But if I'm trading stocks like Apple, Microsoft, they don't move a lot on a daily
They'll
basis.
give you a
So
higher-
even in stocks, the leverage is going to keep coming down as the stock becomes more inefficient.
Mhm.
So if by inefficiency I means that if the stock is moving very big,
Yeah.
like it's very volatile, the margin is going to come down because no one is giving you 500 to 1 margin if they know that you are in risk of losing their money.
Yeah. Yeah. Yeah.
They want to make money.
Mhm.
So they know like this 500 to 1
That's the
margin.
other thing with Forex as well, right? Because like with futures and stocks, you put your money in a broker, that money is on the broker. Those orders are going to the market. Or with Forex, depending on the broker you choose, your money might go in. Well, it'll go into the broker, but it won't go to the live markets, right? They can B-book you. So
It's called
they can-
B-book, A-book, right?
Exactly,
Yeah.
yeah.
I learned about it recently. I made a video as well.
I
about
mean,
that,
I don't
but
know.
it's-
I don't know how people always get into Forex. Like, as soon as I started learning about trading, everything I read online made it seem so sketchy. Like, all the brokers are sketchy. They abuse the spread. They're booking all the orders. Blah blah blah. Never even got into it. Not even once.
that's again probably another reason why they can offer such leverage.
Yeah.
And then the barrier to entry is significantly lower when it comes to Forex.
Mhm.
But to your point though, Lance Breitstein,
Yeah, I know.
he said the exact same thing, and yeah, this puts it out beautifully in terms of very visual as well. But said like there's no edge in Forex, for the same reason. I think a lot of people didn't understand why,
Yeah.
but for the same reason in terms of it's very efficient. And when people hear that again, I don't think they understand why. Now they will, thanks to this demonstration. But it just goes to show that it is extremely true. Anyone who's been trading, say, Euro USD over the last few years, or even the last 5 years, it's been literally in a range,
Yeah.
in a large range.
Yeah,
for the last
I
5
look
to
at
7
AUD
years.
USD, same thing. Like it's
Yeah,
moving between
yeah.
1.5 and 1.6 basically. It reached like 1.58. That's why I transferred a lot of money from USD to AUD. So I actually made money on this. So you can call.
Which one did he say? The Euro USD. I'm a real gun runner. Shot 20 ratchets a day. You are
But for the same reason in terms of it's very efficient.
special.
And when people hear that again, I don't think that is extremely true. Anyone who's been trading, say, Euro USD over the last few years,
Euro USD. just touch on this chart, right? And none of this is the exact chart, but like nothing wrong with range trading, right? Nothing particularly wrong with that. Before there was such easy access to online trading, there were like forex prop firms that really pushed it. Hmm. Yeah, I guess that makes sense. Yeah. Yeah, because prop firms are like I mean, I don't know how new they are in terms of becoming mainstream, but seems like they've been blowing up more as of late. At least like even from when I started, which is not that long ago. Because I remember when I first started trading, I didn't even know what prop firms were, and then like once I realized it was already too late, like I was already trading my own money. Mm. But I always read like horror stories of people that like aren't getting paid out, blah blah blah. Whereas like that doesn't seem to be the case nowadays. Degenerate gambling always comes at the end of an empire. I mean, and there's always degenerate gambling, right? Regardless of the state.
Or even the last 5 years, but literally in a range,
Yeah.
in a large range.
Yeah,
for like
I
5
look
to
at
7
AUD
years.
USD, same thing. Like it's
Yeah,
moving between
yeah.
1.5 and 1.6 basically. It reached like 1.58. That's why I transferred a lot of money from USD to AUD. So I actually made money on this. So you can call me a forex trader, but I'm not. But yeah, so I used to live in Australia. That's why I have like an Australian account as well. But yeah, I mean, I transferred a lot of money from USD to AUD. If I do it now, it's gonna be like a few 100,000 extra or whatever, right?
Wow.
So it's like foreign exchange. Yes, I made money, but I'm not a forex trader. That happened like once in a blue moon.
Pretty
But
pretty
now,
good thing to make
for example,
note of,
so
though,
this
to
is
be
500 to
honest.
1 margin.
On
Let's
a
not take an
higher
example. I'm
time
gonna
frame,
take
we're seeing some
examples here.
swing like that.
With 501 margin, say if I look at the example AUD USD, what is the most volatile forex pair according to you?
One of the most volatile forex pairs would be like GBP and NZD,
Okay,
right?
So,
Or even GBP AUD.
Okay.
Yes, they're more volatile.
so basically, I think GBP is a lot more volatile. That's why compared to it, anything else is going to be very volatile.
Yeah, but then I don't know what it is about the AUD, because if you do Euro AUD or Euro NZD, they're very volatile as well.
Okay.
I think there's just the pip movement is much larger
Okay.
in comparison to AUD USD or Euro USD.
So how much does it move on an average on a daily basis based on the percentage? Say this is the
Percentage wise, I would say in terms of pip wise, it'd be like 100 to 150 pips a day. Percentage wise, it would probably be on more regular 1 to 2% moves.
Okay.
Versus Euro USD and AUD USD, for example, on a regular basis, probably move 0.4, 0.5%, right? So on a slightly higher side, I would say 1%. I'm guessing.
Does this guy make money
But I
trading,
know
or
on
is
a-
he
on
just like an
average pip
interviewer?
movement, Euro USD will do like 50 to 60 pips a day when we haven't got large volatility. GBP NZD, GBP NZD on an average day. So again, with no volatility, we'll do 100, 120, so almost double that.
Okay, that's nice. So say for example on the higher side 2% a day. I don't know about like a lot about pips because I tried forex like once or twice, did not suit me a lot. So yeah, say 2% a day it moves, right? So basically it as you mentioned, it's like trading in a range, and you're getting like 500 to 1 margin right here. Because it's very efficient. Again, it's very efficient. But if you look at stocks like Tesla is still a mega cap stock. A lot of traders trade penny stocks. They have made millions from penny stocks, which is like another kind of inefficiency in the market. But yeah, if you look at Tesla, say for example, Tesla and Google one day, Tesla had a news recently. I'm going to take a few examples as well.
Dad
later.
owns the
Tesla moved
entertainment
from
company. Anyway, either way, I don't care. I'm just curious because like, you don't really hear him kind of speak too much about his own trading, and apparently he's a forex trader, which is interesting.
same example 250 to 480. It's very inefficient because no one like what's the value of Tesla at the moment? Like it's approximately $1 trillion in market cap. But if you just look at Tesla at the moment as a car company, it's very overvalued. But people are investing in Tesla looking at the future prospects.
Yeah.
The robocabs and the robotaxis and everything, the AI, the robot they are doing. I don't know like what's the name of that robot. But yeah, that's actually moving and dancing. Elon posted a tweet about that the robot is dancing. So people are actually investing in the future scope of this company because just as an automotive manufacturer, it's very overvalued.
Yeah.
But now this moved from 200 to 480. In one day, it was moving like 7 to 8%. Aggressive, like 7 to 8% in one day. Do you think you have an edge? So now when a stock is moving 7 to 8% in one day, that means the price action is going to be really good.
Yeah.
It's trending. So do you think you have an edge here compared to this one? Like even with 500 to 1 margin, because eventually you're going to put in like $100, you're going to keep blowing up your account.
Yeah.
You have an edge better right here because it's more trending market. Even with 4 to 1 margin, even if you start out say with like $5,000 or say $500 or whatever, you have a better
I
edge
don't
there.
know if I agree with that, right? Like, Like you can simulate these gains trading the range on leverage. So I've never traded forex, so I don't know exactly what you're trying to get at here. Like, is he saying it's hard to trade the range, even though you know it's a range, it's still hard? I don't know. Gotta go to the airport, enjoy homies, people never wrong. Yeah, never wrong, right? You're just the goated trader, a gazillionaire. We're all just peasants.
Because you have a strategy here.
Yeah.
There was a stock in play. There was a news catalyst on the stock.
Zero
The
losing
volume was high, so I
trades.
look at RWAL as well. We're going to talk about the strategy on the next section of the video. But because of the news catalyst, the volume was high, and it's a very trending market. It's a very trending stock. You have an edge right here. You don't have any edge right here because you're going to keep like buying maybe here. I don't know, like if you buy here, you get stopped out here, then it goes towards the upside, like whatever, right? It's very difficult to make money in forex, especially with 500 to 1 margin because we are one trade away from blowing up.
Yeah.
With stocks, you don't get that, which is a good thing as well. There's something called PDT rule that if you want to day trade stocks, I day trade stocks, but I use options as my asset, which I bet you're going to get to later. But that is the reason I stick with stocks. The main reason is the volatility, and because you can also look at the volume and the stocks and the futures,
trust that
but
data.
not forex.
Yeah.
So that is the reason you have to look for inefficiencies in the market. And also one more thing, I read a lot of books. I actually listen to a lot of books because on Audible, Market Visits, you know about these books. So when I read those books, listened to those books,
True.
a lot of, not everyone, they have a lot of good forex traders. That's why I said like there are a lot of good forex traders, but you need to be extra disciplined. It's like, okay, you can size up a lot, but it's very difficult to make a living out of forex, which compared to stocks or futures. Stocks is very easy because you get these anomalies. Futures, you need to be way more disciplined with futures to wait for some sort of news that's moving the market. And then forex is very difficult. In those Market Visits book, a lot of people, what I notice is like they trade stocks.
Yeah.
And they trade futures. Like futures, it's very like there are like pros and cons of trading stocks as well, which I'm going to get to a bit later because I run into liquidity issues sometimes. So you're going to look at a recording as well. Like when I trade options with stocks, it's still difficult, but because I trade options, sometimes I'm like the 40% of the volume at the market open. Like right at the market open, eventually it increases, but my fill is a bit more skewed because of the volume in the options market.
It's kind of like the payoff, right? So like the pros and cons is that as we come lower in this
On
scale that we
Tesla?
have drawn out, and then beneath this could be like your small cap, as
Is
you
that,
mentioned.
is that true?
But
Is
like
that
if you-
possible? I mean, I'm curious what stock he's talking about here. I can't imagine he's 40% of the options market on some of this shit.
You go into the small cap, this
Did I like not hear that right?
Like right at the market open, eventually it increases because I run into liquidity issues sometimes. So you're going to look at a recording as well. Like when I trade options with stocks, it's still difficult, but because I trade options, sometimes I'm like the 40% of the volume at the market open. Like right at the market open, eventually it increases, but my fill is a bit more skewed because of the volume in the options market.
it's kind of like the payoff, right? So like the pros and cons is that as we come lower in this,
Yeah, seems odd, right? Like, I assume he's not talking about like, cause some of these things have like huge options markets, so I'm not sure what asset he's referring to. But he says he's gonna mention the video. So I suppose we'll see.
scale that we have drawn out, and then beneath this could be like your small cap. As
But
you
I don't think
mentioned.
he's trading like huge size. A specific option, yeah.
But like if you go into the small cap realm, you're looking at huge.
Because I know that Invest Answers guy, for example, like in the bear market, he like basically cleared out like the clean spark options single-handedly. It's quite easy to be 40% of the volume on one strike. Yeah.
fluctuations in price, which yes, you could say edge and volatility, but equally liquidity becomes a real issue once you're trading, even not a significant size, right? It could still run into that issue, as well as being trapped in trades essentially on that smaller cap side. So there's always like the pros and cons to be aware of, even just as through the example that you've shared here as well.
Yeah. So as I mentioned, like for example, the leverage is going to keep on going down because broker never wants to lose money because of your trade. So the leverage will keep on going down as the market becomes more inefficient. But that's good because you have an edge in the stock market. You don't have it in the forex market. The broker is giving you.
That's not true anymore, right? Because now, like on Hyperliquid, and even like on BitGet and whatnot, you can trade like equities on there now. I'm not sure if Hyperliquid caps them. Let's kind of just take a look. Hyperliquid, like Google. Can we see? No, not this. Yeah, you can do like 10x leverage on this thing. And I'm sure like as this becomes more widespread, kind of just trading tokenized equities I'm sure some people will provide like much higher.
on margin, or they even have book B, like it's called B book, right?
Yeah,
B
B-book, that's right, yeah.
because they are betting against you losing money.
Yeah.
So they want to keep the money, they want to keep the commissions. It won't happen in the stock market. I know, like with big brokers like IBKR or whatever, interactive brokers, if I buy something and they have shares to sell from another kind of their own client, they're going to give it to me, but it's still going to be registered as a centralized volume. You will see that volume in the market because when I sometimes place an order, I have the recording of it, I can see the volume going up. So it's very centralized. I actually see it in real time, but with Forex, you can't see it. So the leverage, the high leverage, especially like anything you see that is very high leverage, that means it's too good to be true. If it's too good to be true, it's too good to be true. So if it's 500 to 1 margin, I know like very good Forex traders, they won't use this margin. They will use maybe like 10 to 1 margin. Use the margin because it's not moving a lot, 1 to 2%. So you need the margin to make money, but don't use like 500 to 1 margin because you're going to keep blowing up your account unless you know what you're doing, which is again, very few selected Forex traders. So let's now talk about my strategy, which is the market DNA strategy. I gave it this name because it's fun one to give name because everyone is giving name like ICD SMC. But again, like ICD SMC, they all work. Everything works if you know what you're doing. Like I said, the bull flags work, the bear flags work. Everything works. ICD works. SMC works if you know where the buyers and sellers are because ICT doesn't create the market. The buyers and sellers, the buyers and sellers create the market, and then the market creates these patterns, ICT, SMC, and the indicators and everything. So what creates the market is, as I mentioned earlier, buyers and sellers. Buyers and sellers, they create the market, and then the market creates the price action that you see. Price action, just PA, and the price action creates the indicators that you see. So I talk about this a lot. When you start out, you start focusing on it, which is the wrong side. If you start focusing on it, everything will fall into place. So you need to start
in a way,
focusing.
people start backwards, right? They start indicating, and then they might, if they're lucky, go to price action, and they go this way versus the other way.
Yeah. Now there's another thing I briefly touched on this topic, like more buyers and more sellers. So I'm going to ask like one question to our viewers is that, say if you have like 100 sellers here, people say that there are like, okay, more sellers and more buyers, it moves the price action. I actually know what they mean, but it's just like my brain, I can't understand the fact that if there are like 100 buyers and 100 sellers, it's like it's a weird, like you won't see that in the market ever, like equal buyers and equal sellers. But if there are equal buyers and equal sellers, nothing is going to move. I always think about that why, like because you need to keep asking the question why. When you journal as well, you need to ask the question why does this happen? Why do the indicators work? Why did the bull flag work at 250 and now it's not working at 480? Why? So if there are like equal buyers and equal sellers, the market is not going to move. I don't think so. It's still going to move. It depends on how aggressive the buyers are and how aggressive the sellers are. So for example, the buyers are more aggressive. Let's take the example of Nintendo Switch 2 again, recently released. So if the buyers and sellers are equal, but there was a lot more seller for that because now what happened with Nintendo Switch 2 is like it came down from 800 to 700 to 600 to 500 or whatever, right? So now it's at 500 because there was a lot of supply. But if the buyers were still aggressive, more buyers again. I understand what people mean, but it's just my brain because when they're like, why? Like there's a buyer for every seller, there's a seller for every buyer. So how can be there more buyers? Where are they going to buy? They're buying from sellers, right? So I just think about that because in my university and school as well, I'm like always why? Like why does this happen? Like when you prove a theory to me, I'm like why? I was that one of those kids. I'm just gonna keep asking why. So there's a buyer for every seller, there's a seller for every buyer. Like, okay, buyers are buying, where are they buying from? So the thing about me, like when I understood this, I understand where they were coming from. But for like beginner traders, they don't understand like more buyers or more sellers because it just contradicts the sentence, there's a buyer for every seller and there's a seller for every buyer. So it doesn't mean more buyers or more sellers. It's like, are the buyers aggressive? Because a lot of times I'm going to take real life example of there are going to be like more sellers, but the stock is still going to go up. For example, let's take an example of NVIDIA. I traded this stock. We're going to take a look at the example as well. But that example is after the earnings. But recently I saw like NVIDIA is near 140s at the moment, 145. Let's say like it's at 140. NVIDIA, which is the
hold on, we're
biggest
gonna pause
AI, I would
this.
say,
We're
company.
gonna
They had
pause
it going
this,
100.
get some food. We'll be back before the 30-minute candle. We'll rush, right? We'll go in there sprint. Be back in like 5 minutes. Gotta take a piss too.
That's it. Now they feel it. Feel good. Came up solid, now the screen glow. Midnight charts for the world slow. Profit hit, watch the pace grow. Made it off the map, not the bankroll. Stress bill, I ain't fold. Used to pray for a line to hold. Now the villa got marble floors. Made it from the noise with the charts, I suppose. Back when it hurt, they ain't care. Now they DM like save me a chair. Used to stare at the screen in the dark. Now the room glow blue from the charts. No flex, this is life on code. No guess, this is levels I wrote. Fib drawn like a sniper scope. Price hit pixel, then it flow. Jet black whip through the market zone. Limit order set, then I'm gone. Trade talk quiet, bank roll loud. I'm moving decimals, none in crowds. Came up solid, now the screen glow. Midnight charge for the world slow. Profit here, watch the pace grow. Made it up the map, not the bankroll. Stress bill, I ain't fold. Used to pray for a line to hold. Now the villa got marble floors. Made it from the noise with the trust I spoke. Whispers in the candle wicks. Zones hit deep, then it rips. Told him I went off the wrist, not a ghost, I exist in the script. From the dark to the data. No love, just layers. They chase, I calculate. Marcos made it off the way to the tape.
Marcos. Island breeze, charties, we up the bliss. We catch the long, me never stress. Try deny me eyes on sky. Fibonacci levels and price gon' fly. Golden pocket, me not deny. Entries clean like suit and tie. Pull back sweet, we buy with size. Max so crisp, me no need feel like. Profits jump like carnival ride. Trading night, them hate us cry. Stepping below charts on screen. Split roll fat, my mind stay clean. Price come test me zone, that mean. Whole squad up, no in between. MetaMask loaded, wallet stay fat. Breakout coming, me double that. Island girl, watch me stack. She say Marcos, you too exact. Trading eye, me eyes and sky. Fibonacci levels and price gon' fly. Golden pocket, me not deny. Entries clean like suit and tie. Pull back sweet, we buy with size. Max so crisp, me no need feel like. Profit jump like carnival ride. Trading night, them made us cry. Hey, babe. Hey, babe. Hey, babe.
Like this one, straight reggaeton. Got all kinds of stuff. It's all Reddit all over. Got all kinds of goodies. Bum, bum. I mean, not the most interesting of videos so far, but seems like quite a thoughtful traders. Curious to see how he actually trades.
100%, 200% towards the upside. 140.
Mhm.
Now let's say there are like sellers sitting at 145, which is like say 5 million shares.
Yeah.
I actually have seen like recently last week I saw like a 2.3 million shares order on the stock at one level, which was 145 level, I think. So let's take that example itself because this happened in like real time or whatever. So there was like a big seller at 2.3 million. This is real life example. I traded the stock towards the upside.
Mhm.
This was last week on Monday. Again, I don't know when this episode is going out, but there was like 2.3 million shares, and under anything above the price is going to be a seller, obviously. Like anything under the price 135, say for example, there are like buyers sitting here 1 million shares. So these are the passive buyers and passive sellers.
Mhm.
But again, like how aggressive the buyers are, because to take this seller, yes, there are more sellers at the moment, but the stock still pushed towards the upside.
Mhm.
Why? Like that contradicts the theory, like more seller or more buyers. It works out. Like I understand what other traders mean, but if you think about why is like, okay, the aggressive sellers, the aggressive buyers, they pushed the price towards the upside. They broke this level. They consumed these sellers. These sellers got exhausted and we
Yeah.
saw a push towards the upside. So new buyers came into the picture. Again, that says like, okay, there are more buyers in the market because the new buyers came into the picture. I always want to know how aggressive the buyers are or the sellers are, because just looking at more sellers and more buyers, because if I look at the market depth,
Yeah.
that I'm going to show you the platform, it will say 2.3 million shares seller
Yeah.
and 1 million buyer.
Yep.
If you think about that, if you're explaining this to a beginner trader, they will be like more sellers.
So,
Yeah, more sellers, less buyers. Why don't you short it?
Mhm.
But they are like, okay, there are the other market orders that
so
are
we'll be
coming
able
in.
to see how we can identify aggressive buyers or sellers.
Yeah. So there are like, I would say, two participants in the market, those people who are sitting and those people who are actually putting the orders in.
Mhm.
So these are sitting in the market. What people are doing on the sidelines, because this everyone can see. You
Yeah.
can't trade based on this.
Mhm.
Like there are more sellers than the buyers, but the stock still pushed towards the upside.
Mhm.
What are these people who are waiting on the sidelines they are doing? That's what moves the market. They don't move the market.
Mm.
They want they want the shares. Like, okay, 2.3 million. Okay, they want to sell the shares or maybe short sell it or whatever. But the people who are sitting on the sidelines, are they more aggressive buyers or they are more aggressive sellers?
Mhm.
That's what moves the market. If I'm seeing an order at a major level, I get this question a lot from my students and the Discord community as well. That why did you short it? Because why did you long it? Because there were like more sellers here. I'm like, okay, there are sellers at obvious level 145. I expect them to be here, but what is the anomaly? Anomalies are like, okay, if there's the people who are sitting on the sidelines,
Yeah.
are they more aggressive buyer or they are more aggressive sellers? That's what we want to know. We don't want to care, like, yes, we should care about the passive seller because before this day, there was the same level. It had 1.3 million shares or something like that.
Yeah.
So we know, like, okay, to take this order, we will need a lot of buyers.
Mhm.
But that, okay, even if that order gets consumed, gets exhausted, we will need new buyers to take it towards the upside.
Yeah.
Otherwise, you're going to see a fake out.
Mhm.
So that's why, like, why, if you ask the question why did it break out versus why did it fake out? That's what you can get the answer by looking at the buyers and sellers market
Yeah.
depth. You can't get that answer by looking at the indicators.
Mhm.
A lot of like break and retest, I trade that strategy a lot, break and retest. But my brain of again asking the question why, we can take an example as well. A lot of times the break and retest is going to work. This is the break of a level. Say break of a level, retest of a level,
Mhm.
work towards the upside. Break of a level, retest, it's going to fail.
Mhm.
It's going to fail. Like, okay, you take a loss right here, which is completely okay. And it worked out. This is your risk. This is your reward, which is really good. It worked out. But again, I just want to keep asking the question why. So
Yeah.
there was an example on Tesla recently. We're going to take a look at that example. 350 pullback. Once it pushed towards the upside, other time it got rejected.
Mhm.
And I can see that on the tape. Why did it reject? I trade this break and retest towards the upside, but then the next time it failed, I shorted the stock as well. So break and retest, bull flags, they
Nice,
everything work.
broke
But if you just
through.
focus on the buyers and sellers,
Broke through what? Oh, like this thing? I mean, we'll see. This 30-minute candle just started. Curious to see if they start going. Same with this. If these alarms start going off, I need to start paying attention. Because I need to decide if I'm going to TP here or not. We're not.
it gives you that extra edge and extra sort of confirmation.
Yeah.
That is the first thing. And the pros of buying and selling is that if you focus on this, your risk to reward. There's a very common saying in the market that hold your winners and cut your losers.
Yeah.
Hold your winners and cut your losers, right?
Mhm.
My main issue recently has been holding my winners because I don't have any issue with cutting my losers.
Mhm.
And my risk is very small in most cases compared to the reward. That it's so small that I cut my reward very, very quickly. I'm going to show you like a few examples. I could have made like $100,000, $50,000. I made
Mhm.
like $3,000.
Wow.
So yeah, the reward part now is risk to reward. It's called risk to reward, but it's actually reward to risk because when people say risk to reward, it's like 2 to 1, but the reward is 2 times and your risk is 1. So you're risking say $1 to make $2. Say for example, 4 to 2, for example, says 2 to 1. So you are focusing on increasing your reward right here.
Yeah.
But that is kind of a linear growth because if you focus on the, I don't know what is called denominator is this, I don't know what this is called,
Mhm.
but if you focus on lowering this will go up exponentially. I'm going to take 2 scenarios. The first scenario is going to be you increase your reward by $1. That means it goes from 4 to $5
Mhm.
and the risk remains the same, $2. In this case, your risk to reward is say 2.5. And the next scenario is going to be say you keep the reward the same, which
Yeah.
is $4. You reduce the risk by $1. Same, like I just added, this was 4 plus 1 right here and kept it the same. This is 4 and 2 minus 1. So in the first case, I added 1 to the reward.
Mhm.
The risk to reward is 2.5. In the second case, I kept reward the same. I reduced the risk by $1. It's $4.
Yeah.
Mathematics.
Mhm.
Amazing, right? 2.5 versus 4. So it's more worth your time to focus on lowering your risk, which you can do with the help of market DNA strategy, because then you can look at where the sellers are actually shorted right. That seller, like I'm going to show an example just after this.
Mhm.
NVIDIA had a big seller right here. I shorted this like, okay, it sold off. I shorted this right here. If you just focus on price action and the indicators, you might short it right here.
Yeah.
I shorted this stock right here. So my risk is this much, your risk is this much. And the reward is going to basically be like maybe right here, 141 or something like that.
Yeah.
So my reward is higher, right? But my risk is significantly lower.
Mhm.
So that lowering of risk, that means you're focusing on the denominator. If you focus on lowering that, the reward to risk ratio goes up exponentially, because if you focus on lowering the denominator, the whole value goes up exponentially.
Mhm.
So that's my strategy.
No, I love that. And I think risk to reward is such one thing I've noticed from interviewing like verified traders is once they have their consistency down, risk management becomes a large part of their growth, when it comes to scaling their trading journey and their capital and returns. which is fascinating because it's such a, as you say, it's a very simple formula and simple things that you can do and adjust, but it has such a exponential change to your trading. One thing I did want to ask, and something that's kind of like a theme, is how important do you think it is for traders, regardless of whether it's this or anything within what they're doing within their trading and trying to learn, of asking questions as why this happens, right? And not only asking the question, but then actually going out, because I'm sure you did the same, where you asked, but then you went and found the answer, right? And research and took action to find the answer for that question. How important is that as a trader, though, to be able to ask good quality questions and not just, someone said this is a bull flag, this is how it works, and you just follow that. That's it. How important is it for you to ask, okay, why does this work? Why does this happen? Why does, when this happens, this ends up happening on this other, asset or pair, whatever it may be?
Yeah. So the question why, it's very important when you look at the technicals, but also emotionally as well. Because when I look at my journal, when I started out like in 2019 and 20, my journal, okay, yes, you can look at, okay, I'm looking at the 9 and the 50 EMA, or 9 and the 20 EMA crossover, I'm shorting it, but why is it happening? That led me to this path of looking at the buyers and sellers. The other part of is like the mental side. For example, a lot of journals are going to be, I look at a lot of traders because I want everyone to succeed in the market, which is statistically not possible. Like maybe 5% of the people, I don't know what the statistic is, like maybe I would guess 10% of the people make money, but 5% are actually making money, because if the other 5% are going to be better off having a job or something else, because they're pretty much breaking even or maybe slightly green. And out of those 5%, that 1 or 2% are going to make the big amount of money.
Yeah.
So I would say I'm still in that 5%. I want to get to that 2 or 1%, still early on in my journey. That's what I feel like. But the mental side is like, okay, people are like, I held on to my winner, or sorry, I held on to my loser. Holding on to winner is a good thing. I held on to my loser. That is the only journal. Okay. The journal will be like, okay, screenshot of a chart or TradeZilla. You mark your mistakes, and the mistake, like I have a mistake on TradeZilla. I held on to my loser. Held my loser, which hasn't happened in a long time now. I just cut my loser based on my strategy. I held my loser. Why did you hold on to your loser? You need to ask the question why. Like if you just mention that I held my loser, you're gonna keep doing the same thing tomorrow.
I mean, yeah.
Like, you need to answer why.
sense.
Like, okay, there was something going on in your mind. Maybe you sized up a lot, that you did not accept the risk. For example, you sized up on this trade. In your head, you were only willing to risk $100, but because you were down $200, you couldn't exit, and you were hoping that it's gonna go back up. That is gonna be a proper review. That means the next day you have an actionable step that you need to lower your position sizing. But if you just say, okay, I held on to my loser, I'm not gonna do it tomorrow. Tomorrow again, you're gonna take the same size, face the same emotion, make the same mistake. So if you ask the question why, it becomes very easy. Keep asking why until you get to the root cause. Why did you size up? That might become personal, like, okay, I need to buy a Ferrari tomorrow or something. So this is like, you just need to keep asking why. Like, okay, I held on to my loser because I sized up. Why did you size up? Do you want something to pay for? No, my life is good. And why did you size up? Take it slowly. Like, okay, if you want to size up, don't go from 100 to 200, go from 100 to 120. Or 100 to 140, something like that. Slowly size up. Don't go from 100 to 200, because then you're going to again face these emotions. So when you look at the emotional side, technical side, if you keep asking the question why, you're going to find your issue, and trading is very personal. The issues I had in my life, or like what is money for me, it's going to be different for each and every individual.
Very true. Yeah.
So you need to ask your why and work on your why, and then answer that.
Definitely. Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZella. TradeZella is profitable trade, makes journaling, no matter if you have to do, taking your specific traders predefined. See 20%. Go check that. And let's get
DNA strategy, you can lower your risk exponentially. You're actually focusing on the market sentiment, what moves the market. The bull flag, bear flags, everything works. So it's what moves the market. You're looking at the market sentiment. You can lower your risk exponentially, and this can be traded in any sort of market, because buyers and sellers is what create the market. So if they stop, the market won't stop. So you have bigger things to worry about then.
Very true,
if the market is not there. But if you're focusing on it's very universal. Like if I look at the market, the buyers and sellers, I can move to futures. That's my next step, because I run into, as I mentioned, liquidity issues. That's my next step for this year as well. I need to learn more about futures and get into a bit more futures. So it's very universal. I would say the con of the strategy is nothing, honestly, because everyone says that, okay, the con of the strategy, it won't work in this market environment. This is going to work everywhere. Like the market DNA, looking at the buyers and sellers, is going to work in everywhere. But the con is only, I can say that depending on the market conditions, you have to size up or size down.
Okay. Yeah.
Because the thing is, when I'm looking, I know I don't.
Okay,
do
hold on. I'm
very
gonna brush
well
my
in
teeth, and then
rainfall.
we'll finish this.
Which I
Might even speed up a bit. It's a bit too slow for my liking.
Digital wings on Island Nights as Marcus.
Top down, charts up, Marcos. Trading in the Lambo, charts on the dash, watch it go. Money moves in turbo mode, speeding through these fibs, I know. Lights flash from the prophecy, minute cruise with the candle lit. Wheels spin like the entries do, making bands with the cleanest view. Marcos. Marcos.
Let us see time map tapped in, let the market roll. Left lane with the TP sets. Wind blowing like a spreads, I bet. Rear view full of missed regrets, but I'm chilling now. No stress, no sweat.
Nights so young, we chart and glide. Pinks and greens up on that drive. No back test, I'll pass that vibe. But this one, ooh, is prime to ride. Trading in the Lambo, shots on the dash, watch it go. Money moves in turbo mode, speeding through these fibs, I know that. Lights flash from the profits hit, flash. Midnight cruise with the candle lit. We'll spin like the inches do, making bands with the cleanest view.
Marcos. 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 Roof built back and the charts align. Sunset sky and the map divine. TP hit, then the stars combine. That Lambo hum like a victory sign. Fast lane, no seatbelts on. Big trays, I'm in that tone. Summer flex, that VIP chrome. On Marcos trays, we set the tone. Marcos. 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 That 618 hitting nice. Marco's in the booth with the blueprint. You already know what time it is. Do the math, run it back. Price hit fibs, now I'm on attack. Let's take that shot, take no cap. That 702 hit clean, no lag. Clean, do the math, make it clap. Profit hit, now shorty's throwing back. Map that zone like a piece of art. Now we charting on the dance floor smart. Pulled up with the 5-0 levels blowing. Price touchdown, now the gains keep flowing. Top long gone, now I'm zoning golden. Dead op charts in the pack, we rolling. Late night plays where they all guessing. Now the slide with math and a little discretion. Auto TP hit clean, perfection. Marcos don't miss, just learn the lesson. Do the math, run it back. Price hit fibs, now I'm on attack. Take that shot, no cap. That 786 hit deep, I snap. Do the math, that blast. Baddies love it when the levels match. Chart lit up like a neon spark. Trading art with a club beat heart. No emotions, just that code. Perfect feel, yeah, that's how it goes. Don't chase green, I just align. It's all math, baby, every time. Do the math, run it back. Hit my zone and it fades to black. Never hope, just map that path. Fibonacci lines got me feeling that cash. Do the math, let it stack. She whisper in fear while she arch her back. Map that trade, then danced it out. Now the club's in sync with the route, no doubt.
Yeah. Stay off the drain. I'm off the math. Can't hear you from the tarmac. Goofy. Marcos. Marcos.
Woke up in the villa with the windows blue tint. My Carlo light trays hit while I ran. Say steak while the euro slid 5 pips. Didn't even check the chart, it's all instinct. She said, you good? I said barely. Off the map drifting, slow in the McLaren. AP looked like the chart I sketched, no cap. The face even showing resistance levels. You panic when the price go parabolic. I just lean back in this Paris-loft melodic. She ride like a trend off CPI lies. I had your love in the penthouse sky.
Off the math. Off it. I ain't even here. Nah. Jet too loud. Gone. Wrist too clear. Draw down fake. Profit too real. They want the alpha, but they can't feel off the math. What? Lost in charts. I bought that zone, then I bought that car. Ferrari wide like a weekly gap, and the field hit hard like a market stop.
Charles paid lunch, didn't even log in. Bot took the scalp, now I'm jogging. Palm trees bend where I parked the Rose. Price came back, then I split that soul. Lamborghini yellow like Euro strength. She curved like fib, I marked her length. Back test cold, but my heart on rest. Yacht hit waves, but the stats digest. Dubai high rise, wrist look fine. Chart like silk when she whine in time. Told her, baby, don't guess, just breathe. Price gon' come, just believe the speed.
Off the math. I ain't even here. Jet too loud.
Risk too clear, draw down fake, profit too real. They want the alpha, but they can't feel off the math. Lost in charts, I bought that zone and I bought that car. Ferrari wide like a weekly gap, and the field hit hard like a market slap. Off the weed, that's childish. Off the lean.
I can know from the buyers and sellers.
Mhm.
So I just have to size down here. So there's no con of the market DNA, because you're actually focusing on the buyers and sellers. Like I can't say, for example, if you're focusing on the 9 EMA strategy,
Mhm.
the con is that it's going to work in a trending market.
Yeah.
It's not going to work in a range bound market. But I personally like to stay away from the range bound market, and I can short it depending on the market DNA as well.
Mhm.
So that is the pros and cons. Yeah.
Cons wise, this is also not necessarily like what's bad about this or anything. It's more so like what to be aware of. Would you say that because obviously you, when looking at buyers and sellers, would you say are there any time restraints or commitments you would need to have when looking at the market in that way?
Yeah, that is a con that you need to work a lot. So I have screen recordings. I record my trading session every single day. I have the bookmap feeds as well that I can go back and look at the live trades and whatever happened in the market. And I also have my execution screen recording. We're going to go through maybe 1 or 2 screen recordings as well. I record my executions, my emotions. I can actually see my face. So I look at my face like, am I too uneasy or something? So it's like, that's why. Like my why is that I'm going to keep looking at myself when I'm trading. Sometimes like I took a really good trade, I exited early. Then I look at my emotion, like I was scared. I was not willing to accept the risk or something. So I record my screen every day. And that's why a lot of people say that, okay, I don't know what to look for in level 2 and the market depth and everything. The first part is the knowledge, what to look for. Because when I started out, you don't know what to look for. You just need to look for, I have talked about this word multiple times, anomalies. That's what you need to look for on the level 2. We're going to take a few examples.
Yeah.
And once you know that, it's all about then executing your trades. And then your execution will come into play when you look at yourself. Like I like to record the screen.
Yeah.
I have been recording my screen for the past like 3 or 4 years. I have like external hard drives and everything. But then recently, a few months ago, I exited one of my Tesla trades very early. And then I was like, why am I doing it? Like, why am I like, I need to look at myself when I'm trading. And then I think I watched one of your podcast. That guy records his screen. And then if that guy is uneasy or feeling uneasy, I don't know, like if it was your podcast or somewhere else. So I started recording myself.
Yeah.
So the screen recording is there. I have a small face of myself as well. So when I'm feeling like, okay, I'm just like, I like slouched over or something, I'm like, okay, I'm uneasy. here. So I need to take a backseat or something.
Yeah.
So it's, you have to go through your screen recordings, market DNA. It takes time because to understand bull flag or whatever, you might take 1 or 2 days. It's going to work out. But with market DNA, you have to put constant efforts because the market keeps on changing and the DNA also keeps on changing.
You have to adapt.
Yeah, the buyers and sellers keep on changing how aggressive they are. Like if they're sitting on the sidelines during the Trump market, you see aggressive buying, aggressive selling. So you have to keep adjusting and learning from the market DNA. And when it comes to, as I mentioned, I trade stocks, but I use options to trade stocks.
Yeah.
So options is kind of a leverage product for like stocks. It's also for like futures. But it's similar sort of, I would say, Forex margin in the stock market.
Okay,
That's what I
great.
like.
Yeah.
So the pro is that you get a lot of leverage with stocks. I'm going to take a few examples that the options move like 200 to 400%.
Wow.
You're looking at 500 to 1 margin, but for example, you invested $200 on one option contract that moved from $200 to $800 in like 5 minutes or 10 minutes. So it's very nice, but sometimes you run into liquidity issues. Like last day itself on Friday, that was the last trading day. I placed an order on Tesla, same day expiry, 0 expiry, 400 contracts. And like when I placed my order, the total volume on that option contract was like 1.4K.
Okay.
So I basically did like 30% of the volume. So as of now, I haven't faced that issue. And that also happened because it was just the market open. Like if you wait for a while after, because when you look at the
Orders go in,
options, the volume starts with 0 with options every day. Every day with stocks as well, the volume is going to start with 0, but eventually it picks up.
rewind that.
But when I
Also
place my
noticed that looking at
because
some of
so I
this data
basically
for this
not
trade.
1 is that you get a lot. So options is
Okay, we're done chewing on this fucking thing. Bum, 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 bum. This be what? Okay. Bum, 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 bum. Hmm. Probably not. Probably not gonna TP here, to be honest. But if we does start to like kind of lose the zone on like a more meaningful time frame, then like yeah, we'll do it. There's really nothing going on, right, in terms of like bears, aside from like Coinbase selling off a bit. Maybe we should. So there's a lot of people TPing up here. 2,000, 2,300. Okay. Boom, 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 boom.
This kind of a leverage product for like stocks. It's all also for like futures, but it's similar sort of, I would say, forex margin in the stock market.
Okay,
That's what I
great.
like.
Yeah.
So the pro is that you get a lot of leverage with stocks. I'm going to take a few examples that the options move like 200 to 400%.
Wow.
You're looking at 500 to 1 margin, but for example, you invested $200 on one option contract that moved from $200 to $800 in like 5 minutes or 10 minutes. So it's very nice, but sometimes you run into liquidity issues. Like last day itself on Friday, that was the last trading day, I placed an order on Tesla, same day expiry, 0 expiry, 400 contracts. And like when I placed my order, the total volume on that option contract was like 1.4K.
Okay.
So I basically did like 30% of the volume. So as of now, I haven't faced that issue. And that also happened because it was just the market open. Like if you wait for a while after, because when you look at the options, the volume starts with 0 with options every day. Every day with stocks as well, the volume is going to start with 0, but eventually it picks up.
Yeah.
But when I placed my order, like I could see it, my order was a bit pending because the liquidity issues again. But if I place an order right at the market open, sometimes I face that issue, like 400, 600 contracts or something. When you trade like Tesla, especially with SPY, it's pretty easy. That's why you have to be selective with the tickers you are trading. You can't just trade a random ticker and expect options to have volatility based on the size I am taking.
Yeah.
So you have to be selective based on watch contracts, and eventually it's going to catch up. So I know that I'm going to reach a barrier that, okay, when I say, for example, I can't place like 1,000 contracts off the open. I'm going to get filled, but it's like I'm going to fight for the fill, and most likely I'm going to lose money because of the not getting a good fill. So eventually I'm one like, okay, I want to incorporate ES into my trading as well, because what took me, I know this sentence nicely, I stand by it, that what took me from say 3K to 7 figures now is not what will take me from 7 to 8 figures.
Interesting.
So I need to change some things, because from if I'm trading the same size,
Yeah,
like
your
1,000
size changes
contracts on
how you have to
Tesla,
trade a
my goal
lot.
is to invest $200,000, which I have done previously, on options, which is a lot, because then your risk is like 15-20%. So I'm risking like 20-40K on one trade. So that is my goal moving forward. So which is going to be okay with like 200,000 investment or 500,000 investment, but I can't imagine placing $1 million worth of position on Tesla option contract right off the market open. So that's where futures will come into place as well. So at the moment, I'm developing a strategy, or I'm working on trading futures. I have opened an account and everything. So I'm going to start trading futures as well, because this will take me like from 1 million to 2 million or whatever. It's going to be slow growth. But if I incorporate futures as well, and one more thing like swing trading as well, higher time frames, which is kind of against it, what I do, market DNA, because I'm looking at quick buyers and sellers. Yeah. But swing trading is going to be another arsenal, that because with swing trading, especially with options, like you don't even have to look at for these like $200 to $800. Sometimes you risk the whole amount. For example, that if you're sizing for 0.
Yeah.
That's
You
my goal
know,
for swing
we're gonna
trading.
pause
You have to
this
size
for a
zero,
bit,
because then
'cause I want to be looking at this stuff while we're moving up into the zone. Kind of circle back to that in a bit.
That's broke. I'm off the math. And I'm still.
I'm gonna be able to use this monitor. Put this over here somewhere.
You chase that? Nah, I'm chillin'. Margot's never rush it. Let it come back. Watch this. There's always another one. Math gon' line me up. No need to chase that run. I let the chart show love. There's always another one. Price pull back, I slide. Y'all FOMO just for fun. I catch it when it's right. Let's ride. They buy green, I sip tea. I don't chase, I let it be. Play that zone like poetry. I'm in
Ba-bum, ba-bum, bum, bum, bum. 945, 945. Where's ETH right now? I'll have to be a lot more careful with the ETH position. It's like my main TP on the ETH thing is much higher. It's like at where are these poor highs at? It's like right here. Oh, we might just sweep this. Bum, 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 bum. Oh, so I think this like 1.25 extension ended like right at the red box, right? If I recall. Yeah, it did. Okay. Show to the math.
Money, math.
So where did the other fib go? Did I delete it? I don't know why I'm doing it like this.
Trade, yeah, I'm locked in. Chart said go, so I dropped in. Price is sweet like a mango slice. Took that film,
So let me stand my ass up.
Chart said bite, so I took that fruit. Now I'm outside in the golden coupe. Trade so fat, had to screenshot twice. That juicy entry changed my life. Am I?
Hey, told him watch the numbers. Marcos, man, talk different. Facts. We up. Let's go. Man, don't lie, price gon' tell. I just said that feel didn't chill. 25 touch, that feel was real. 618, yeah, that's the kill. Man, don't flinch, I follow code. Wrist map tight, that profit low. Others hope I
Oh, this person spoofing the book again. Oh, whatever. Okay, let's go back to the video. If these alarms go off, we'll start paying attention again.
They got vibes, I got scans. I don't blink when prices spans. I just read it like it's scanned. Man, don't lie, price gon' tell. I just said that feel didn't chill. If I touch that feel was real. 618, yeah, that's the kill. Man, don't flinch, I follow code. Wrist map tight, that profit low. Others hope I chart and hold. One trade flip that wrist to go. Price her talking, I don't speak. Let that wit come kiss my cheek. Order stack like bricks, real neat. Math hit once, I'm off the seat. Wrote that range like holy text. Every level got respect. They still guess I just detect. Matt don't lie, just place and check. Blue lines glowing on the screen. Night still chart moving me.
With day
When
trading,
you say swing trading, what's your time horizon? Would it
more than
be
24 hours.
More than 24 hours.
Yeah,
okay.
so that is swing, but my time horizon is going to be like a few days.
Okay.
Few days. Yeah.
Sorry. Okay.
So I'm going to trade the next week or the following week expiry contracts or the monthly expiry contracts as well. So there are like every third Friday it's going to be monthly expiry contracts
Yeah.
on that option, and every Friday it's going to be the same the weekly expiry
yeah.
contracts.
Mhm.
So that's what I can do. I can move to from like swing trading, but for swing trading, my goal is that because if I'm getting into swing trading, I don't want it to affect my day trading. So I'm going to size for 0. So I'm going to start out small, and I know with swing trading you can get like 200-300% return as well on like options. So even if you're sizing for 0, it's still 2 to 3 hour trade.
You got you.
Yeah.
So now we're going to go over actual trade examples showing the Market DNA playbook and concept that we have gone over so far on the whiteboard, and we have multiple trade examples, live trades as well, live trade recordings. So super excited. We're going to dive straight in.
Yep. So the first example is going to be, I'm going to take recent examples, except one which is still from February this year. I think January or February this year, because that was based on News Catalyst, one of the easiest trade of my career. But I'm going to take recent examples from May and June this year. And so this is from 28th of May, which is like maybe 2 or 3 weeks from now. We had earnings with NVIDIA. That's why I like trading stocks, because you have these earning seasons
That you know are going to...
every 3 months. So the stock is going to be in play for like those like 2-3 days. So NVIDIA, Tesla, Meta, Microsoft, Amazon. I have these bunch of like the basket of stocks that I trade, and they have earnings like every 3 months. And Tesla is going to have some sort of news every single week because of Elon Musk. He's going to tweet something, and Tesla is going to go. So this was earnings play on NVIDIA. NVIDIA reported earnings 28th of May after market close. So if you look at the chart, this was 28th of May, the day before. The stock gapped up. So now instead of marking, because a lot of people talk about when you have to look at the buyers and sellers, I don't like people say mark your levels on the higher time frames. Yes, you should mark your levels on the higher time frames, but how many? I know a lot of traders, they're going to keep marking like multiple levels. I know a lot of traders, they're going to mark like 15 different levels on the higher time frames. Like, because even on higher time frames, I can mark this level. I can like, it makes sense, right?
Yeah.
This level.
So
Yeah.
resistance.
I can mark like, okay, this day was here. So I can mark this level. Then I can mark like this level. So I have marked like 5 levels already, and then I can mark like high of these days, this day as well. I can go on the weekly chart as well, mark a few more levels, hourly chart, mark a few more levels. But I don't like saying levels, but levels of significance. That's what I like. I want to focus on where the major buying and selling happened.
Interesting, yeah.
So this was a playbook opportunity for me after NVIDIA, because NVIDIA, this was the earning. You can see the green here. So the next day, it reported earnings after market close on 28th of May. On 29th, you can see the gap up.
Yeah.
It gapped up. But now it's a playbook setup for me, because where it's gapping up to this major level. Why is it major? Because if you see before that, this stock moved approximately 26.93% towards the upside.
Yeah.
That is a significant level. We had a 26.93% push towards the upside.
That's your high.
We got rejected from there aggressively, and we pushed down how much? 26.96. Sounds like a coincidence. 26.93 and 26.96. But yeah, it approximately moved 27% push towards the upside. Sellers stepped up there, moved 27% down.
Yeah.
So that is a significant level for me. I can mark the high of this day as well, but these are not that significant. Yes, these are higher time frame levels still, but I can mark 50 at the levels. But before this day, before the market opened up, I just had this one level.
Yeah.
I'm like, this is a level of significance for me, for the market.
And that's where it started, right?
Yeah, after 27% push towards the upside, the sellers stepped up here, pushed down aggressively. Again, it won't be a level like, because when I mark this is 143.44, so it's going to be more like a zone.
Yeah, of course. Yeah.
143.3 to 143.5, something like that, depending on the stock as well. So that is something I'm like, okay, my game plan is if we hold above it, I'm going to look at a push towards the upside.
Yeah.
If we hold under it, I'm going to look at the push towards the downside.
When you say hold, are you looking at specific time frame close, or like a daily, or just once we break above?
That's where the market DNA comes in, because when I look at the market depth, the sellers kept on stepping up at
Gotcha.
143.5. So I'm going to wait for these sellers to finish. And sometimes, like, that's why I took a trade at 145 breakout. Sometimes I feel like waiting for the candle to close is a bit too late,
Okay.
because it messes up with your risk to reward. And that's why the market DNA, when you actually look at the buyers and sellers, and instead of waiting for it to close above 145 or 145.5, you can actually look at the tape that, okay, it took that order. You can look at the market depth. There are no big orders. So why not enter now? Why to wait for the candle to close? Because candle is again formed by the buyers and sellers. So if you focus on the buyers and sellers, you can get a good entry.
Yeah.
So this is a level of significance for me. That's
Yeah,
what
it's
I
not
like. This is a very
necessarily
important
true,
level for
right?
me.
It's not
Even if you look at the
necessarily
week-
true. A lot of algos and people are trading on candle close, so a bit of like, yes, on one hand you're minimizing risk, on the other hand you're exposing yourself to more risk by not waiting for the confirmation of what's happening on the candle close.
weekly chart and the monthly chart, it's going to be an important level. And again, the sentiment, understand the market sentiment. It's not about bull flags or bear flags. Understanding the sentiment, 27% push up, 27% push down, which is insane for a stock like NVIDIA. So I just had this one level, and if it holds above it, I'm going to look at the push towards the downside. By hold, I mean hold on the tape and the market depth, not on the price action, and a hold or maybe a rejection from it for a push towards the downside. So let's now take a look. NVIDIA reported earnings, stock gapped up on 29th May, technical breakdown, which I've just broke down, sentiment around 143.5, which is a level of significance for me because it's a very important level. So this is the screenshot before I placed that trade. I only had this one. Major rejection zone after 27 push up, a person push up and 27% push down. So if we hold above this, look for longs. If we hold under this, look for shorts. what happened after past few years. This is very important to understand because what I feel like it's every stock has a personality. Like every stock has a personality. Like every forex player is going to have a personality.
Yeah.
And especially you can see the personality on the tape as well. For example, on Tesla, 100 to 200,000 shares is a lot. On Nvidia, as I mentioned, 2 million shares. So every stock has a personality, how the buyers and sellers react with each other, how they interact with each other. It's like going to a different sorts of casino and seeing that the vibe at Las Vegas is going to be different than vibe in Dubai. We have a new casino here coming here in UAE.
Wow.
So it's going to be very different, right? So this is a casino. Like we are gambling our money, buyers and sellers or whatever, but the vibe is going to be different at every place. So NVDA, I know the personality of the stock. Even if you go back, sometimes a stock like Tesla, it does a lot of gap and go. It's going to gap up and push towards the upside. With NVIDIA, anything can happen. Like we can see after this earnings right here, I remember this day, I made decent amount of money on this day. I don't remember exactly, but this was 2024. After the earnings, similar sort of setup, gapped up, pushed up, got rejected heavily.
Yeah.
From 150, it got rejected heavily. And we could see the seller on the tape. This was without any news catalyst, gapped up, sold off. We can see a lot of gap ups, they work out as well, like a gap up right here, like right here it worked out. But basically after earnings, anything can happen with the stock. It's like roll off dice at the moment, 50-50%.
Yeah.
With Tesla, I'm going to be more inclined towards the upside because of all the sentiments surrounding it. Usually it does good gap and go setups. With NVIDIA, I know, I remember this day after earnings because I made money on this setup. I remember this time after earnings, we had a gap up. Really good example. Like look at this like red candle. After the earnings, we gapped up, sold off aggressively, straight back down. And this was
That's
how
what
much.
you come in. That's what you're saying in terms of personality. Like Nvidia has shown you time and time again its personality, its hand, what it likes to do on a more frequent basis, and therefore by understanding that, you're already setting yourself up for a bit more confidence, a bit more clarity of what you're looking for, and hopefully not to be surprised. Obviously, we, as you said, like with earnings, anything can happen, but by knowing the personality of that particular stock or pair or whatever it may be, it's going to allow you to just have a bit more confidence and be a bit more prepared for a particular situation because it's shown you that this is what happens time and time again.
Yeah, exactly. And this was 11% push down. So if you're trading options, 11%, say if you went for say 125 puts or 130 puts, this was easily like 400-500% winner on the options. So they moved crazy. 11% push down on NVIDIA is crazy. So yeah, and we also have seen gap ups and gap push towards the upside, but anything can happen with the stock. So it's like for me, heading into the market open, I'm 50-50%. I have my level of significance. If I see strength on the tape around this level, I want to take it towards the upside. If I see weakness on the tape around here, I'm going to take it towards the downside because anything can happen. 50-50%. With Tesla, I'm going to be more like 70-30%. If it gaps down, I'm going to look for shorts. If it gaps up, I'm going to take it towards the upside. 70-30%, something like that. So that is just based on my experience, and that's why I like trading the same bunch of names. The viewers can take screenshots. Like PLTR, I might remove it. At the moment, it's in play. Had a crazy rally towards the upside.
Yeah.
Circle was a recent IPO. This freaking moved up like how much?
I've heard about this.
Honestly, I watched that Cathy Wood podcast with Diary of a CEO, and it was consolidating right here. I was at the gym. I was like, it's consolidating. It's a recent IPO. It might sell off. I wanted to add this stock to my long-term portfolio. I was like, okay, this is just a recent IPO, and it pushed towards the upside like 127%. So this is like, these are the stocks. They will be in my watch list for a while, but eventually I'm going to just remove these. But Tesla, Coin, NVIDIA, Meta, AMD, PLTR has been there for a while now. Apple, Google, Microsoft, Amazon, Netflix, ARM, MU. And then I have this AUD USD because my AUD USD love. And yeah, so I can actually go back and say, look at this NVIDIA's price action, the trends, and compare that to AUD USD. The edge is right there. You can just look at the price action. You don't have to be like, okay, you can look at the price action. So now let's go back and take a look at what happened with NVIDIA. So I have my level of significance, 143.5 zone. And if you reject from there, I'm going to look for shorts. And if you go towards the upside, then I'm going to look for longs. And the personality is that after the earnings, it can push up or it can sell off. So I have my plans for both the directions.
Of course, yeah.
So now this is the 143.44 level, which we marked on the higher time frame. We had a push towards the upside right here, got rejected. We can see that on the price action. It's a doji on the price action. I think it's called a dragonfly or a hammer doji. I don't know the names of the doji, but we got rejected right here. I'm still not taking it short because usually when you see a gap up, it might go for those buyers again.
Of course.
And then might sell off. So you have to understand the sentiment right here. So the first time at 143, I can see, so this is the bookmap software that I use. So it shows the actual orders sitting in a graphical representation, which is very easy to see. You can even see that on the actual montage and the level 2 box, but it's just easier to see where the big orders are sitting. Like 144 has 340K shares, something like that. So now there's like a big seller. Now again, that big seller and big buyer, if there's a big buyer sitting at 141, it doesn't mean anything. It's about what are the other people who are waiting, sitting on the sidelines, they are going to do.
Yeah.
So yeah, 103K shares at 143. We took that order, 143.5, got rejected right from that zone. So we tried to push towards the upside. There was like 170,000 shares.
Oh wow, they really fucked up the production of this. Like this guy's looking at off stuff that's off screen. No, they definitely fucked this up.
Never filled that order, got rejected. I'm like, okay, it still hasn't touched my criteria for taking it towards the upside, but I took a scalp on it from here till here towards the upside. But I had in my plan that if it rejects from 143.5, I'm going to exit my position. I actually made like $9,000 on towards the upside. I'm going to show the recording as well. And then I was able to capitalize on this downside move. So that was the first time. So look at this right here, 143.5 big seller.
Mhm.
It's going down. So this is what is happening here on the 1 minute chart. So I'm looking at the candlestick. I'm also looking at what's happening on the tape.
Yeah.
So it pushed down another big seller, 140K shares at 143. There are new sellers coming into the picture.
Yeah.
So that is the new sellers, new buyers, more sellers, more buyers. But that doesn't mean it has to go down. If the new buyers are aggressive enough to push it towards the upside, it can still go up. So especially for these reversal trades, you actually want to wait for these orders to go through and wait for double, triple confirmation. Like if you're going with the trend, you can be a bit more aggressive. For reversals, you just have to wait it out.
How would you identify sort of aggressive buyers or sellers? Is it just based on the size of orders that you're seeing?
The size of the orders are the passive orders, and these dots are actually the orders that are getting filled. So these are the green dots are like people are hitting the ask price. These are getting filled near the ask price. The reds are getting filled near the bid price.
Right.
So at the moment, we saw some aggressive buying. But if you look at green and red, it's pretty much equal now. I'm going to look at a few of the recordings. You can clearly see a lot of green. The aggressive buyers are coming into the picture. This is pretty much, I would say 50%, I would say like 60-40%. Green. Right here, we saw an aggressive buying. I was able to catch this push
Oh,
up.
that's
but-
so annoying. Like, I don't even want to watch anymore. I don't even want to watch it anymore after this.
After this consolidation, during this consolidation, it's basically 60
Half the shit's off
nothing
screen.
standing out a lot.
Yeah.
So another big seller at 143. I'm like, still okay. It can still go towards the upside. It's looking like a break and retest. If you look at it, we had a push towards the upside, break of this level. It's retesting this level for a push towards the upside.
Yeah.
Can happen.
Mhm.
Go back, 143. That buyers broke that level after a few seconds. This was at 17:42, which is like 9:42 a.m. This happened at 9:42. It just broke that order. We filled that order. Another big seller, 180, 190 K shares between 143 and 143.05. New sellers keep on coming into the picture right here. So we had a sell-off right here. We got rejected from 143 to 143.10. We got rejected, and that's where I shorted it. So we broke that level. We took those sellers again right here. We took those sellers. Then we had another new seller right here. I placed my order right here.
Okay.
And my stop loss was a break above 143. And then I was able to catch this push towards the downside. Let's play the
I mean,
recording
it makes
now.
sense though,
So
right?
this
Just
is
kind of
my
typical
live
book
trade
map
recording
shit.
because I record my sessions every day. You can see myself. You can see me right here at the bottom, but I don't know if it's going to be visible
Oh,
in the
no,
video.
yeah.
Yeah. So we had a push towards the upside. I am like in 592 contracts at the moment, which is, I would say, if you look at 145 calls, it has done 11,000 shares. So which is not 11,000 contracts at the moment. It's not huge. So we had this push towards the upside. Now when I saw that seller coming in, I'm covering my position. But when you look at the selling right here, so I saw the book map that okay, it's getting rejected from this 143. So I'm looking.
Oh,
to trade
interesting. He
140
uses
right?
like the pivots thing. Interesting. Don't see this too often. Pretty cool indicator, right? And there's also multiple ways to calculate these pivot levels. We're playing with that a little bit in the summer.
140. So this is my order window on the right hand side.
Mhm.
On the left hand side is the actual trade and the price action. On the book map I keep on the left hand side. So yeah, you can see I'm glancing on the book map right here. I saw that big seller. I placed my order, 100 contracts. I'm going to start with 100. And then when I saw that big seller, I'm like, okay, this is going to go down. I have
Yeah.
like extra confidence, like it's going to go down.
Mhm.
Based on my experience, there's a 90%. It's not like still 100%. Anything can happen.
Of course.
90% is going to go down. So 300 contracts right here, and then I added to my position 500 contracts, and yeah, so and then I took my profits. Yeah, so you can see like $21,000 on that downside trade. Overall, I made $12,000 on the downside trade.
That's a
nine-
fast trade as well, right?
Yeah, so $9,000 towards the upside trade.
Wow.
But it was a fast trade. I was holding on to my winner for a bigger push towards the downside. That did not happen. Unfortunately, I was like, okay, it's gonna pull back and continue downside. Some buying came in. Eventually, it actually sold off. If we go back and look at TradingView, it actually sold off. But I was expecting a bit more cleaner sell off. That did not happen. But I still made like $12,000 on the downside trade, and my risk was very minimal
Mhm.
because if we go back and look at the recording, my entry was 142.8ish.
Yeah.
My risk is right here. My reward is right here. So my risk to reward is like 4-1.
Yeah.
And I can imagine a lot of traders, based on just purely price action, they're going to enter right here.
Yeah.
I entered right here. So that makes all the difference because, as I mentioned, if you focus on the lower component risk, on
Yeah.
lowering that,
Mhm.
your risk to reward is going to go up exponentially.
Well, do you have like an average sort of risk you take per trade or average risk?
Looks like these things are all about to go, yeah. Potentially. How's this looking? Okay, we'll pause this for a bit. Where's the other tab?
Don't lie, price don't tell. I just said that 50 chill. At 0.5 touch, that feel was real. 618, yeah, that's the kill. Man, don't
The
flinch.
spoof is gone. Okay.
Others hope I chart and hold. One tray flip that wrist to go.
trace, now we attack. Golden zone, no looking back. Fibonacci, feel that zone. 618, we in that zone. Slide. Touch the line, then I'm gone, gone. Profit hit, I'm in my zone, zone. 702, that bounce get wild. 75, now price on trial. 786, that entry vow. Caught the wick with math and style. 702, that bounce get wild. 75, now price on trial. 786, that entry vow. Caught the wick with math and style. Price to the fib, I don't flinch. Stacking at levels inch by inch. They chase green, I plant the seed. Move in silence, let it breathe. Point 0.5, warm up play. 618, the real buffet. Heavy at 7.5, we deep. Catching that wick while they still sleep. It's not hope, it's plotted out. Math be dancing, no doubt. Late night screen glow got me lit.
Bum, 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 bum.
She feel that zone.
Are we about to get a TP spanked in this bitch or what? Boa? Boa?
Profit hit, I'm in my zone. 702, that bounce get wild. 7.5, now price on trial. 786, that entry vow. Caught the wick with math and style. 702, that bounce get wild. 7.5, now price on trial. 786, that entry vow. Caught the wick with math and style. No more guessing, just precision. No emotions, just the vision. They want hype, I want the rain. Chart react, I don't explain. Golden pocket glowing still. Price obeys the math the will. Marcos drew it, price complied. Fibs don't miss, we let it ride. Fibonacci, feel that zone. 618, we in that zone. Just a line, then I'm gone, gone. Profit hit, I'm in my zone. 702, that bounce get wild. 7.5, now price on trial. 786, that entry vow. Caught the wick with math and style. 702, that bounce get wild. 7.5, now price on trial. 786, that entry vow. Caught the wick with math and style. Fibonacci, feel that zone.
Hmm.
Yeah, yeah. Sometimes you win, sometimes the market bites back.
SL slide. Got.
Marcos.
Got SL slides. Woke up cute, but the chart said bye. Caught that wick, no alibi. Shook me out while I sip my chai. Got math went left. Thought I was cooked, but I still look fresh. Bounce right back, no stress. Even when it hits, I flex.
Okay. Okay.
Got SL slides. Woke up cute, but the chart said bye. Caught that wick, no alibi. Shook me out while I sip my chai. Got math went left. Thought I was cooked, but I still look fresh. Bounce right back, no stress.
3-6.
Set the zone, but the wick kept fang. Snipe my stop, then took off dang. Drop my T, spit it on the mat. For the group chat, yeah, I'm back. Got me once, I ain't mad though. Math still sharp like a blade on gold. Double it up, we still move bold. Win or loss, baby, we don't fold. Got SL slides. Woke up cute, but the chart said bye. Caught that wick, no alibi. Shook me out while I sip my chai.
This is tricky. Right? Because there's a role of this becoming just some like lockout type of rally to like the next zone. Well, I'm definitely leaning towards like I have 2 TPs set right now. I'm like 25 kind of thing. Because there are a lot of people TPing up here. And most of the high leverage liquidations are right here as well. But we're probably gonna add back pretty aggressively if we start to like go. I'm thinking that's the best way to do this. Hard to say, hard to say. This is a tricky one. Because really not much, in terms of like a bearish edge taking a short here, there's really not much going on, right? Aside from these like low time frame divs. Like doesn't mean shit, right? Anything will like limit 25, and then manually close it, we start to like SFP of those highs. Yeah, I think one of those two will probably be best. How much would this bring up my average entry? Where's my calculator? Pump it. Yeah, looking like these things all want to go. Looking like they all want to start going. Yeah, I think we'll do that. I'm gonna do just 25 for now, because that way if I add back, we won't move the average entry up too much. And we'll just close it out manually, start to like lose levels. Oh damn. This guy keeps changing his TP. I think he's worried he's not gonna get fulfilled on it. Interesting. There's two people trying to get like massive fills right here, and one guy keeps like one guy moved it down, and the other guy put it like below him.
Marcos running numbers, yeah, the math too tight. All time highs got 'em pressed on.
Or was that red box?
They talking down, we just move.
Can this shit load?
Breaking out the chart while they lose in the fight. All time high, now they mad again. Candle breaking out, price back on 10. Profit in the bag, racks never been. I just ride a math, don't need no friends. Golden pocket hit, yeah, I double in. Haters talking slick, never cashing in. Pixel perfect.
The tape is going crazy right now. Holy fuck. Holy fuck. Getting some late night volatility, okay. Gotta be mindful of the ETH thing though. Ethereums? I have an alarm on that, right? Yes.
Stuck in drawdown, we lap y'all. Price break, range, that's jackpot. I print on rate, they no back talk. Imaginary line still hitting on cue. While they chasing hype, I'm chilling with you. Lambo dreams, that's my walkthrough. Chart look clean like it's dressed in new.
Damn.
Now they mad again. Candle breaking out. Price back on 10. Profit in the bag. Racks never been. I just ride a map. Don't need no friends.
Yeah, damn.
Set the level, draw the zone, place the line. Price tap once, then it bounce right on time. I don't chase, I wait, let it come to me. Hit that TP like a shot from 3. Club lights flash, straight locked in. Profit running like it's trying to win. I ain't emotional, I'm surgical. All my feels look vertical. He's so clean with the wrist control. PT 1, 2, 3, let it roll. Wanna dance while the charts unfold. That Marco's math hit different. Target lock, yeah, hit it with precision. Price pull back, then I nailed the position. Boom, wrist on chart, yeah, the math.
Bum, 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 bum.
Dancing in the green, yeah, we live in the mission. TP get in touch like it's made for me. Math so tight, it obeys the key. Tings love the flows, Fibonacci smooth. 6-6 tag, then we bust that move. Pushing profits like it's late night gas. Stop loss, break even, we moving fast. Winning like I'm wired to the plan. Every target hit, I don't need no chance. Hit that target, hit that line. Math in motion, perfect time. No emotion, just a grind. Marco's lock, profit shine.
Oh, can this shit hurry up? God damn. God damn. God damn.
charts, talking facts, emotions, that's trash. Woo! It's Marcos. Let's go.
The math is the math. Don't care how you feel, just run the stat. You pray for pumps. I plan the path, you scalp that wick. The math is the math. Yo, edge ain't real, that wrist too flat. I don't chase green. I stacked and dash. I said it before. And now you got smashed. Trade too clean. Set up cold. Candle tap, I enter bold. Stop loss tight, I'm in control. You over leverage, pay that toll. Risk per trade, I size that light. You size from hope, I size from right. Edge confirmed, I press at night. Wake up rich, you tweet your fight. No strategy, that's just noise. Back this week, you just a voice. I run that sim, I ride with boys. You trade regret, I trade with choice. The math is the math. Don't care how you feel, just run the stat. You pray for pumps. I plan the path, you scalp that wick. The math is the math. Yo, edge ain't real, that wrist too flat. I don't chase green. I stacked in dash.
Okay, well, until I get tougher, nothing to do, right? So kind of gonna just go back to doing that.
Risk to find you, guess the move. I read the sign. Your trades a wish. Mine's designed. I run the stats, then press rewind. Your whole month, one of my trades, you drop 10K. I just get paid, you scalp that.
Kind of put one once they get past the zone.
I built the game, gamma stacked. Delta loaded. Your stop loss just exploded. I draw that zone, then I encode it. You fake conviction. I'm devoted.
It's not emotion. It's not hype. It's numbers. You lost because you never knew what you were even doing. The math, the math.
The math is the math. Don't care how you feel, just run the stat. You pray for pumps. I plan the path, you scalp that wick. The math is the math. Yo, edge ain't real, that wrist too flat. I don't chase green. I stacked and dash. I said it before. And now you got smashed.
No emotion. No guessing.
To reward you aim to target for a trade?
For me, it's dynamic risk. I'm a big fan of it. So I can go from risking $500 on a Monday to risking like $50,000 on a Friday. So my risk is very dynamic. If I see a setup like this, I took like 400 contracts, I believe 400 or 600 on Tesla. I take like 500-600 if it's a good setup. If I'm just looking for an intraday scalp, I see something good on the tape, maybe 100 contracts. So my risk is
I'm pretty
very
interesting that
dynamic.
this guy
If I-
actually records like even the face cam to review. Honestly, never even considered that. Never even considered it. Yeah, like, at the end of the day, I'm streaming. Like whenever a trade opportunity presents itself, I do have the stream to look back on. But during the day, I don't really bother. Well, probably something worth noting, right? Well, I don't know how much there is to really derive from that. I don't think I'm sitting here getting fucking eyebrow twitching trying to enter a fucking trade. With face cam, maybe though. Maybe who the fuck knows? Out of curiosity.
like a setup like this earnings play, the upside play was like 600 contracts approximately. The downside was also approximately 500-600 contracts.
Yeah.
That is on the higher end of my position sizing at the moment.
Okay.
But if it's not earnings, without earnings, just like a normal price action day without any news catalyst, it's going to be on the lower side of that. So my risk is very dynamic. I have a playbook.
It's
when I see
interesting that
news
this guy
catalyst.
trades earnings. Like a lot of people are like the opposite. Most people kind of try to avoid earnings, or at least like the actual earnings drop.
If everything settles, level of significance and everything, I'm going to size up.
So based on like the volatility and the opportunity that's in front of you.
Yeah.
Mhm.
So, yeah. So let's take another example. This is how I entered. This is one scenario. My entry was 142.8. The stop was 143.5 above that big seller.
Yeah.
Profit target was 141, where I took my profit. Scenario 2, 142 is your entry. Your stop is 143.5 that you enter. I think, 142 is your entry. My entry is at 142.8. So I saved like 80 cents on my entry because of the tape. And the risk to reward in the first case is like 3.5. In the second case is only 1. Because you're risking $1.5 to make $1.5. And in my case, I was risking 70 cents on the underlying asset. I'm trading options, but I risked like 70 cents on the underlying asset and I made $2.5. So the risk to reward is like approximately 3.5. 3 or whatever, like it's higher. 2.5 divided by 0.7. This is 1.5 divided by 1.5, right? So that is my example of my NVIDIA trade. And there's another trade from this year, ARM, News Catalyst. This is a screenshot from like Google. So let's take another example. This was ARM, 22nd of Jan. This was one of the easiest trade of my career, I can say, because the risk to reward was insanely high on this trade. So this is the Stargate project. This was a news on 22nd of Jan that the government will be investing $500 billion. With ARM playing a key role as a technology partner, right? So it was NVIDIA also saw push towards the upside. It's like Microsoft, NVIDIA, Google as well.
Like all the large cap
and
tech
ARM,
did.
basically. So one of the easiest rates of my career. So if you look at ARM, levels of significance again. So what we did, let's go back and open ARM on TradingView. So this was this day. Like you can even look at this chart on the daily chart. It's standing out crazy. So if you look at this day, I only had one level. This was after the gap up. We had this target news. It's gapping up. So it's again stocks in play, and normally in the market, something crazy is going on. ARM is gapping up. I was looking at the other stocks, Nvidia and everything as well. But when I realized that ARM is near my level of significance, I want to focus on it.
Okay.
So kind of similar
how you
setup
would
to
filter
Nvidia.
it then?
Yeah.
Okay.
So kind of similar setup, right? We had a major level, but on ARM, I'm trading it towards the upside because it's very positive news catalyst. With Nvidia, we saw the personality is like gap up can sell off. With ARM, it's like a different case. Gaps down, sell off. Gaps down, like we had this crazy rally. This was kind of an exhaustion squeeze. I have a playbook on it. Gap up, push towards the upside. So usually ARM is a stock that is like, it really moves. It's going to move maybe 5 times in a year.
Yeah.
But the day it moves, the price action is really good. So this is a level of significance because it's crazy. You can see the high of this day is like 164. The high of this day is 164.16. So I'm like, okay, I only have one level. I don't have like multiple levels because you can mark this was after the fact, but this was this day right here. Stargate news. We are gapping up near 160.
Yep.
I'm like, okay, if it gets the news, if it has the news, it's going to have the volume. If it gets the momentum, it can blow past like 164. 164 can be my good entry point. And I'm only looking at this stock towards the upside. I'm not trading it towards the downside.
Yeah.
So let's see what happened here. So ARM right here, level of significance, similar setup to NVIDIA. We are rejecting 164. We have rejected 164 twice before previously. So now I'm just looking at the stock a hold because of this positive news catalyst, a gap and go setups for a push towards the upside. So this was like, look at this price action. Look at this price action. Like there was no reason to exit. And that is what I was telling you. I exited because I was not expecting it to do like this.
Keep going.
And like this was, I only took
Fair
100
enough.
contracts because this was January. This is more like $20,000 worth of position. The trade you saw on NVIDIA was more like 70, 80K worth of position. And with options, you don't get margin. Like I don't get margin. I don't know about other brokers, but that is your own money that you're putting in, right? So with ARM, because it was January, I like to start out the year slow. I don't want to go red for the year and just try to play chasing and
Build that
everything. Yeah.
confidence up,
So just like build up the confidence and then you can size up. So
I mean,
we
don't
had 100
agree, right? Like it's kind of like what a weird statement, right? Like January, December, like New Year, just some arbitrary dates, some made up concept humans made, right? It's no different from the day before.
contracts at $2.0 to $2. They went all the way down. Like I exited all my position at $8.5. They went to like $10. That means, so in simple terms, one contract was worth like $200. In the next 15 minutes, they were worth $1,000 approximately. So $2, like $200 to $1,000. That is a 500% return on your investment. You take it right here, you catch a good trade towards the upside, and I underperformed on this trade heavily because it was January, a bit more scared. I took my profits a bit too early. Still, I made like $20,000 on this. You can take a look at my entries, like 100 contracts right here. The last exit was around 8.49, 8.5. So $200 converted into $850 in a matter of, say, from 931 to 943, 944, something like that. That is crazy. Like easiest trade of my career. For this trade, I won't even look at the tape. I'm like, it's just price action. Don't try to micromanage it. If it's breaking a level, 164, just take it. I'm pretty sure the tape was also really good. I don't have the book map, the feed of this day. I don't have the recording of this day, but the tape I'm pretty sure was really good on this as well. So just like crazy push towards the upside. Don't micromanage this trade. Just went from like, you can maybe exit your position if it makes a new 5 minutes low, something like that. Or I basically exit based on my intuition. You can trail your stop loss, you can trail your profit target, and you can also look at the tape. If there are new sellers coming into the picture, like we saw on NVIDIA, you can take your profits. And so $2 to $10. This is a chart of the premiums from TradeZilla. So I invested $20,000. My potential profit on this trade, which is the highest reward I could have made, was like $80,000. $100,000 would have been the return. I put in my $20,000. I get $100,000, but I underperformed heavily. I only made 20K. So I'm not comparing with any other person. I'm just looking at the potential profits I could have made had I only stuck to my exit criteria. Because a crazy trade like this, you don't have any reason to exit. Like I don't see any reason to exit except only it's just your emotions. It's like you standing in your own way. So I still made $20,000, but no reason to compare it with traders who are making a lot of money. It's only about me. Like when I look at my journal, I could have made $80,000 on this trade, but not trying to catch the bottom or top of the market. If I take my partials as well, if I make like even 50K out of that 80K, I'm happy with that. Making 80K is kind of unrealistic because catching the bottom and top, like no one told me it's going to reject from, say, whatever.
We wish.
Yeah, we wish. So based on the exit criteria, I have an exit criteria. If it makes like a 5-minute candle on high volume, something like that, this is like simple price action, right? If you look at the volume, you saw a red candle on high volume. This can be the exit criteria, and you make $100,000 with $20,000 of your investment. So this was one of the easiest trades, and overall, I made $23,000 on this trade. On that day, I made 20K. I took a loss on Meta or something, 115% return, but this could have been 400% return. So this is a screenshot of my actual trades, one trade on the stock. Now, another example, Oracle from 12th of June, 2025. So this happened like
the
a week
Giga
ago or
Pump?
something.
Yes, the Oracle Giga
reported
Pump.
earnings again, 11th of June, 2025 after market close. Stock gapped up on 12th of May, similar kind of setup to NVIDIA. Let's take a look at Oracle now, what happened. So yeah, you can see clearly what happened. After the earnings, we gapped up. I only have two
Massively,
levels. Yeah. So this was, I think, the all-time high. Sometimes the all-time highs of the stock of these stocks are like in 2000s because of the dot-com bubble we had in
As
2000.
it came back finally.
Yeah, yeah. So that's why I always like to go back on the weekly chart and see. So Oracle, yeah. So the all-time high was 198.31. I have one level of significance, 191.99 right here.
Yeah.
So after the earnings, we are gapping up. We are gapping up near my level of significance. That is automatically my main stock for the day that I'm focusing on. But I exited way too early on the stock because of emotions again. So I'm going to show you. Oracle reported earnings on 11th of June. Stock gapped up on 12th of May. Post earnings number, technical breakdown, which I broke down, like level of significance. Same thing. You can see the theme here. NVIDIA, Oracle, kind of similar setups. Sentiment around 192. So yeah, what happened? Similar to what happened with NVIDIA, we can see that Oracle moved approximately 26%, 192.
Wow.
And then from this level, it dropped all the way back down to the same level.
Exactly.
So it's like push up, dump. Right?
Yeah.
So 192 is a significant level for me. So that's why I'm just not marking 50 levels on the higher time frames. I'm just marking 1 or 2 levels. I'm like, okay, I want to see what
These
happens here.
larger moves taking
Yeah,
place.
the buyers and sellers, the market DNA. So yeah, 26% push up, back down all the way, like smack back down to 192. Sorry, what was that? 156. So now what happened right here? We had a push towards the upside, right? This is opposite to what happened with NVIDIA. So I entered my position somewhere around here and I exited why psychology or something because I know before this day I had a red day. So again, asking the question why. So I just don't want to share my wins in this video because I'm not the best. Like I made like $3,000 on this trade and I could have made like $50,000, something like that. But I exited because I
Guy needs like a
on the stock,
fucking
even though this was a playbook setup.
trader psychologist or something. You just made the same mistake multiple times. It's suspicious, but
I could afford the loss, but sometimes your previous red day can affect your executions.
Of course, yeah.
So if you don't ask the question why, I can simply say that I exited my winner too early. That's it, call it a day. But then why did I exit too early? Because I was a bit too I had a red day previously. So that's why I exited my winner too early.
The hesitation.
Yeah, that hesitation. So if,
I
this
don't
is
get why
opposite to
people like, what kind
happened
of
with
issue
NVIDIA.
is that? Like, why? Who fucking cares? It's a completely different trade. Why are you still dwelling on that shit?
We had a push towards the upside, but NVIDIA, we got rejected from that 143.5 level.
Yeah.
Like right here, we saw a new buyer.
I need a
at
performance
194.
coach.
So we are pushing towards the upside. Then we have a new buyer at 194. So which is right here. So 192. This is the major level, 191.99. We talked about 192 zone on the daily chart. We found support right here, push towards the upside. And when we are pushing towards the upside, we are seeing new buyers coming into the picture. New big buyers trying to support the price.
Yeah.
So the price is going up, and the new buyers are coming in.
Would
as
that
well.
almost class as the aggressive buying as well? Or is that still passive?
This is passive. The passive in addition to aggressive buying, because if you see a lot of green compared to red, so I can say just looking at it, eyeballing it, 70% green, 30% red. So the aggressive buying is coming in. Along with that, the passive buyers are trying to support it. The new buyers are coming into
To
the
try and
picture.
push even further.
Yeah, so I think about it like the wall. Let's go back to NVIDIA example. I'm gonna give one kind of analogy. What happens right here? 143. The buyers are trying to break a wall.
Yep.
You break the wall one time. They're trying really hard. Like they're trying really hard. For example, you're trying to break a wall, and then I tell you there's another wall.
I think this is
after
like
that
I think what he's gonna be getting at is like, it's a team game, right? Trading is kind of a team game when you really think about it. It's like the market orders, the aggressive buyers are like working with the limit buyers. So like, you send in the troops, right? The marketing aggressive orders, and they like push a level, push a level, push a level, push a level, and then once they break through, then the people that had their limits here can now walk them up to the next zone, right? So they're like taking control of the map for the people that have limits to like keep walking it up, essentially. Same thing works to the downside. I don't know what that's what he's about to say, but kind of the thought came to my head when we started mentioning this.
wall.
Okay.
You're going to exhaust yourself, right?
Yeah.
Same thing happened right here. The buyers tried really hard. They tried really hard, but the new sellers kept on coming in. They were like 150K shares, 140K shares, 100,000 shares, 200,000 shares. So finally the buyers got exhausted and we saw a sell-off.
Oh, yeah.
So this happened with, NVIDIA, same, but Oracle was like a completely different story. We saw a hold and push, new buyers coming into the picture. So the wall is now underneath the buyers. They're supporting the wall. So even if I'm holding my position right here, I can trail my stop loss to 194. Trail my profit target to 194 if I'm holding my position. So based on the tape, you can easily see if the buyer gives up. You can manage your trade nicely. You can put your stop loss.
Software do you use?
This is Bookmap and this is like TradingView. I have a combination of 3 platforms: Dash Trader Pro, TradingView, and Bookmap.
Gotcha.
And yes, I made like $3,500 on this trade. But if you look at the chart of the premiums, so yeah, my FOMO it went from 1.7 to $7. I basically exited around $2, and the premiums went all the way to.
The thing with this guy is like,
So that
sure,
means you put in-
as much as I can see her and like kind of troll him about like getting emotional over just fucking trading. Well, at least he's honest with himself, right? Which is not the case for most fucking people.
$170 of your own money,
Yep.
and it went to $700 or something like that. So yeah, Really good trade. I micromanaged it. I exited way too early. I had FOMO on it, but I did not execute it again because that's against my rule. Because if I try chasing it right here, that kind of messes up.
Skews
my
the risk to
risk
reward.
to
Yeah.
reward, If
Let
you
it-
miss out on it, okay. it's
and if
okay.
that worked out though, that would be able
Yeah,
to do it another
that's
time.
like the
another
what-
time.
Yeah, so bad
Always another
habits and then
trade, right?
eventually-
There's always another trade. Only trying to FOMO chase shit with some like, fucked up RR. Also potentially risk being like a top longer.
you're going to lose your account because like for me I have made these mistakes a few times, but chasing is not one of my issues. If I miss out on a setup, I had my edge right here looking at the buyers and sellers.
Yeah.
Here everyone can enter. Yes, they can make money, but my edge is right here. My edge is lowering the risk because I size up. So if I size up, I want my risk to be controlled.
Mhm.
If I'm taking like 500 contracts at 1.7, I can't take 500 contracts at 3.5 because the risk is very, very high compared to the initial entry.
course,
yeah. So yeah, we can't end this video
Yeah,
without
that's
Tesla example.
That's
My
insane.
80-20 stock because I'm a big fan of that 80-20 principle, the Pareto principle.
Yes. Yeah.
Yeah.
but yeah.
So Tesla, if I look at my
For
charts-
those that don't know, essentially it's like 80% of the results come from the 20%. I'm assuming what he's gonna get at here in terms of trading is that like the things that impact your equity curve the most typically is like the handful of like home run trades.
Tesla is a major contributor to my P&L.
Like what I'm trying to do right now, like this trade that we're in, we typically don't size like this large, but like on a high time frame dump like this, I'm trying to get a high time frame swing back up.
P&L.
Mhm.
Like,
This makes a shit ton, right? The gains on this are like not even comparable to some of the other trades.
about 700k or 800k has come from this one stock
wow.
alone itself. Yeah. So Tesla, we can see that tape gives you the answer. Like for example, a lot of time what happens is that we have this break and retest, right? We had a bull flag right here, not the break and retest. We had a bull flag right here.
Yeah.
On the daily chart, we had a bull, we had a flag, push up, push towards the upside.
Mhm.
This worked out. This bull flag worked out. Similar example. Similar kind of thing, bull pennant. People call it bull pennant. It's making a bull triangle, bull flag, whatever.
Mhm.
Same kind of thing. We had a push towards the upside. It's consolidating on low volume. So we can look for a push towards the upside again. But why this worked out and why this failed?
Interesting.
This was actually the last trading day. I took it towards the upside. I was up approximately $30,000 unrealized on this trade.
Mhm.
I exited this trade for like minus
You know,
$1,000.
one thing to
Really?
know about these things is like probability of them playing out in the middle of a range like this is lower, right? Like I typically want the flag to be like at the top of some like extended impulse, and then it flags and goes. Like you don't want to like flag, do like some like 886 retrace, and then start doing the flag at the 0.5.
Because that is the thing with options. I held that trade like it went from 9:30 to 9:33 a.m. I was up $30,000.
And like that applies to like most patterns, right? Like not just this flag specifically. Like, ideally, you want them to be happening at the top or the bottom of moves.
for like 70, 80k
Premiums,
trade.
like, really
Yeah.
aggressive.
And then in the next 2 minutes, they dropped all the way back to break even. So I just paid the commissions on that stock.
Wow.
I exited for break even, but I just paid the
Is that
commissions.
what we were talking about earlier about speed being
Yeah.
so important?
Yeah. But I was expecting it to break above 335. That's how I sized up for. So my risk on this trade was approximately 10 to 20k. So
Okay.
30k was not making the goal. Like that was not the goal. The goal was to make 70 to 80k.
Gotcha.
But it came back to break even trade management. I'm like, okay, exit. Don't take the loss if you don't have to, because I could see that it's rejecting that level. It's
Yeah.
not a pullback. It's
Yeah.
rejecting, so exit.
So in reflection, this trade, yes, it worked out in terms of getting to the 30k, but that wasn't your target. That wasn't your trade idea. So it
Yeah.
doesn't matter that, yes, in 3 minutes it got to 30k.
Yeah.
Regardless of that dollar amount, that isn't the trade you planned for.
Yeah, that's exactly. But usually I take profits. But for this stock, I was expecting it. I get moved from 390 to 392. I was expecting like I'm gonna start taking my profits around 395. I'm not gonna hold for it to go towards like 380 or 400 or something like
But
that.
yeah.
Not 380, like 340 or something.
Mhm.
I'm gonna take my profits at 335. But just like $2 move on Tesla, I was up 30k because I was trading the same day expiry.
You know,
It
the
wasn't that
thing
big.
about this guy is like I suspect that his issues will be like resolved, right? These kind of psychological in the moment issues are going to be resolved when he starts to transition to swing trading, as he was saying. Because you have a lot more time to kind of think things through, right? If you're scalping on the 1 minute, it's like you have to decide on the moment right away. Whereas when you're like swing trading or even like trading like the full session, you have a lot more time to give things thought.
Go for move.
Mm.
So I was waiting for like my 335 was the first profit target. It never hit my profit target.
He's
so
not
I
dumb.
took
This guy's
it
not
as
dumb, right? Clearly, like out of most of the traders that we've seen, this is quite like a well articulated, well thought out trader.
for pretty much break even.
And that volatility, was it because it was the market open?
Yeah, it was a market open. So that's where we can see that at 290 right here.
Yep.
So the day it worked out. So now if you look at why this worked out and why this did not work out, like this one failed and this one worked out, we can look at the tape as well and know. So this was 290 right here. We can see from the
Like,
tape.
yeah,
there was
obviously,
a big
like
buyer.
ignoring the whole thing about where the flags occur, like obviously the data is what really matters. Like I'm not just gonna blindly look at the pattern on the chart by itself.
right at the open, 290 trying to support another wall again.
Yeah, got
The
you.
wall doesn't have to hold, but it's like, okay, it moved from 290, but you're just seeing like green right here, small reds and big green. So, okay, there are no new sellers in the market to take on this buyer.
Yeah.
So it's trying to support the price. And if you look at the time and sales, these are the actual orders going in the market. There's like green. I have a filter right here that it's only going to show sizes above 1,000, minimum size is 1,000.
Okay, got you. Yeah.
So I want to see where the big money is flowing.
Yeah.
More than 1,000 shares.
Something similar I
A lot of
use.
green right here. So this is a perfect example. Like this 290 worked out because we are seeing new buyers coming in. Like the big buyer is holding. There are no new
Because you
sellers
can always
coming into
tell,
the
right?
picture.
If you're using like a tape like this, like I don't even have to be looking at the chart half the time, right? Like if we're watching this interview and I see this thing start fucking going crazy with green or red, I already know the breakout's happening, right? So quite useful in that regard.
Was the Nvidia example.
Yeah.
So it's just like continuing the push towards the upside. I made like $16,000, like $21,000 on this day on this stock Nvidia.
So the first time.
The first time
Yeah.
when it worked out.
Mhm.
The next day I was up 30k and realized, but I lost it. But compare that tape, like this tape, clean buying, no new sellers right here, like
Yeah.
a lot of green on the time and sales. Everything is looking good.
Mhm.
But the next time what happened? Completely different.
The complete opposite. almost,
That's
yeah.
why I go back and look at the screen recordings. So a lot of people don't do it. Like I don't know how to read the tape, but if you go back, it's pretty obvious, right? We try to push towards the upside 332. New sellers are coming into the picture. A lot of red. The big orders are hitting the bid price. You can see that the reds are bigger than the greens.
Yeah.
So right here, the tape completely switched. That's why the tape changes like every few seconds. So we can see big reds right here. Big red orders are hitting the market. That's why it failed. So I can, and that's why I'm like asking why. Why did it work out the first time? Why it failed the second time? The first time, look at the tape
Yeah.
and the time.
Absorption.
It's pretty obvious. Like it's not like rocket science right here.
Yeah.
No new sellers coming into the picture. Or what.
True.
But you just have to go back and look at the recording. And once you look at the recording, go back and look at the screenshots and everything. I play the recording of it every day, every time, and then you will have the confidence to actually execute.
Yeah.
So we had we tried to push towards the upside. New sellers coming into the picture. I covered my position somewhere around here, locking in my break-even trade.
Mhm.
But then I caught it towards a downside. Like basically we had like new sellers, and we can see like a lot.
Also,
of red.
I don't get like
Now what happened?
me, like when I get stopped out break even, like I'm accounting for the fees. Like I'm not getting stopped out break even and then paying the fees on top of it. So I'm not curious why he doesn't do that, because he said you have to pay the commissions on this. Like I'll to me break even is the fees included. If not, it's not break even, right? You lost money.
A lot of traders will be like, in this instance, the break and retest also failed because we had a push above 330. I'm going to open it on TradingView. So if you go back, Tesla, 1 minute chart, this was just the last day. Yeah. So 330 was a major psychological and the daily level on this chart, right?
Yeah.
So we had a push towards the upside. The break and retest is going to be like, okay, enter right here, right? But I can see that on the tape, like we are not seeing a retest. It's a reversal. It's not a retest, right? You can even see that it never retested it, so it's not even break and retest. It tried to retest, but if you're taking it long right here, I can imagine myself taking it long right here
Okay.
without the tape. So if I don't have that,
Okay,
I can imagine myself taking long right
Really?
here. It's a
Why?
valid setup. We had a push
Why?
towards the upside, green candles on high volume, red on low volume, basics of price action. You enter right here for a push towards the upside, but I can see that on
I
the
don't
tape, yes,
know
the volume is
about
low, but there is no green volume. There is no aggressive
All
buyers
the
in the
sellers
market.
are there.
Yeah. And the new sellers are also coming into the picture. So
Yeah.
at the moment, the aggressive selling is coming in and the new selling is also coming in. So that is the passive sellers along with the aggressive sellers, which is opposite to what happened previously.
then
I
the
mean,
lack
like
of
that
aggressive
thing you just described. I don't know about that, right? That's a pretty fucking risky trade to be taking.
Buyers.
Yeah.
Results in one thing.
And then I caught this towards the downside. Towards the upside, I sized up a lot. I took like, do I have a screenshot of it? Yeah. So we can see like 330 retest kind of failed. It just went all the way for low of the day. I was up 30k on this stock. Like this is a screenshot from my trade seller. 30k right here. You can see like 30k. I covered the position for 0. So I took like some position out right here. Basically, I paid the commissions for it. And yeah, so right here. And then downside, I basically made like $5,000-$6,000 because the downside was not a playbook setup for me. Like I mentioned, if it's a playbook setup, I want to size up. But
Yeah.
the downside, usually I like to trade gap and go setups on Tesla. But the downside, I only took like 100 contracts, something like that.
Was the
200.
downside more so because you were seeing
Yeah.
what the
I could see that on.
yeah, you could see the volume, you could see the sellers were there. So for you, it was
Yeah,
just
right.
like, this is a
I
no-brainer
do
for
this a lot as well. Like if there's some like setup that I'm taking on a long or a short, and if it comes back and tags my break even stop, and you can tell that its order flow is getting hella bearish or bullish in the other case, you can like just take the opposite trade, right? Because you know that the setup wasn't validated for the long. It depends. Very contextual though. I don't always do that, but like there are times when I end up doing something similar.
take something here.
Yeah.
But I'm going to reduce it down because
Yeah.
it's not my playbook, not my A plus that I'm looking
Yeah.
for.
So that is a dynamic sizing coming into the picture. The first trade was like 400 or 600 contracts, something like that, 400 contracts, and then liquidity issues. So I'm going to show you this one last recording that right here. So this is what happened on this specific trade. That's why I want to get more into futures as well, because I'm just like coming
More
back.
liquid.
This is me.
That's why I like trading Bitcoin over like low
This
caps
is
because it's like I
approximately
can't
the
trade
market
large
open. I
size
have
on
my order.
those
So
like small
yeah,
shit
this is
coins.
335 calls,
Yeah.
200 shares. The total volume is like 800 at the moment. So I'm like 25% of the volume. And then I place another like at this point like 400 shares.
This guy
I
looks
got
like he's
400
like in
shares,
hella nervous.
and the volume total is like 1.18k. So I'm like basically doing 30% of the volume at the market open. So I can't imagine myself taking like 1,000 contracts.
I'm
or
curious if this
2,000
guy has
contracts
like a. You should also like look into getting like a heartbeat monitor or something, right?
right off the open.
Of course.
So I haven't hit the limit yet, but that is something that I have to keep in mind. What took me to 3k, from 3k to a million, won't take me to multi-millions. So
Interesting.
that is something that I'm working on.
No, we'd love to hear it, and then definitely when you've worked that formula out, we'll come
Yeah.
back and do another
Yeah.
playbook. From
Yeah,
there.
for sure. So yeah, this is the issue I'm facing at the moment, the liquidity of the market open. On SPY, it's a bit more easy to size up. 600,000 contract SPY has a lot of volume. With Tesla, like Tesla still has a lot of volume. But if I'm trading stocks like Meta or Microsoft also has a lot of volume, like specifically Netflix and
Yeah.
Meta, they have low options volume. So you can't size up a lot aggressively on those stocks. And then I keep a track of all my playbook
Unfortunate for
setups.
him.
So the viewers can take a screenshot and just go back and look at these playbook setups. So I track my playbook setups here, like manually, and I have TradeZilla as well. I have all my playbook setups in there.
Of course.
Yeah.
And that's one thing I was going to ask before we wrap up. Those trades we just looked at, as an example.
I take profit. No, we haven't made it to the thing yet. I have a limit set there, so we get here, kind of just chilling. Let's get rid of this. Like, someone's taking profit up here on like a massive order, so kind of just that's why we've been sitting here for a while, just like ramming into it. How much is left on it? How much is left on that thangity thing? There's still like 300 Bitcoin left on that order. Like usually when this happens, like at some point someone comes in, just markets a massive order and just busts through the whole fucking thing in one shot. Usually, not guaranteed, but because like there's people that like they're calculating, right, like how much it's gonna cost them to break the wall, and then how much they're gonna lose from slippage when it gets to the zone, and like they're doing the exact math of this movement, right? So it's worth it for them to like market smash this with a huge order and then like close right here, and like they get this little bit of profit once you exclude the slippage. It's really close to that last peak. This, yeah, I'm sure it's the same story here. It just has one guy. Like everyone else has their TPs up here. There's like a massive one. There's like 1,000 Bitcoin getting TP'd at 945. There's like 500 getting TP'd at like 941. Or they're taking shorts potentially. We don't know, but I would be a bit cautious to have a limit set here for a short, given how things are looking. But kind of give it some time. No need to rush. Just let the math. So what was I about to write? He just said something. I was about to write it down.
On look at these playbook setups. So I track my playbook
yeah.
setups here, like manually, and I have TradeZilla as well. I have all my playbook setups in there.
Of course.
Yeah.
And that's one thing I was going to ask before we wrap up. Those trades we just looked at, as an example, of like this wasn't in the playbook, so we sized down. But how important are those trades still to your overall performance? Because those are like your little base hits that can then fuel that sizing up on the next trade.
Yeah, exactly that. Because on Monday, I was like, just for example, last week, on Monday, I was up like 11K. On Tuesday, I think I lost like 1,000, 2,000. On Wednesday, I made like 1,000, 3,000, something like that. 3,000, that was before FOMC. So Wednesday, we had FOMC. So I sized down during FOMC again. So if I like lose 1K, 2K, make 1K, 2K, and still like, okay, I'm not losing a lot.
I disagree. Well, like, not really disagree necessarily. Okay, if you're trying to trade on FOMC day, like, you're kind of trolling, right? Because you're probably going to get, either A, you're going to get fucking whipsawed out, because they're going to stop out both directions before the real move, or B, like, you're going to enter, and, like your setup is not reliable, right? Because one fucking sentence comes out of this guy's mouth, the market doesn't like, and it's just going to all go the other way. So me, personally, what I do, and most people that I know do, you try to position going into FOMC. You want to have like your long and short positions ahead of time, and then whichever one ends up running, amazing, right? See, if you pay attention to the higher time frames, like FOMC usually leads to like pivots in the market, right? Like he dictates monetary policy, and then everyone positions accordingly afterwards. Yeah, on a day of, especially during FOMC, yeah, you're kind of trolling.
Of confidence, because market is a way of like, it's not about the money you lose on that trade, because if I size up on a stupid opportunity and if I lose money, it's not about, okay, I'm losing money on that trade, I'm losing the confidence. So that is going to carry forward for the next few days and the next few weeks. So I have to think about that as well.
The whipsaw is why options trading for FOMC is generally profitable. Maybe. I'm sure a lot of people go into it thinking that and then they don't do anything.
So sizing down and still getting like base hits or getting the reps in, that is also important sometimes. But a lot of times then it's like market is very uncertain.
So another
It's best
hour?
to just take a backseat. It's not like don't get the reps in. It's okay. You need to learn to sit on your hands as well.
Definitely. Well, thank you so much for breaking that down with us. And I hope that a lot of people out there are able to really start to incorporate, as you say, the market DNA, like the buyers and sellers, into their strategies, whether they're using indicators or other concepts. That's absolutely fine. But it just really showcased how important it is to understand those buyers and sellers and just identify them. And then you can have a lot more confidence behind your trades. You can even be able to just manage your trades better, which, as we talked about, is like one of the key things that will allow you to be more and more profitable long term.
Let's to reward.
Do you want to win 7 figures in challenges without having to do
You
anything
acquire
at
it a
all?
few days
Seems too good to be
early,
true, right? Well, at
and imply
propfirmtrader.com, that is
volatility is low, then
exactly
sell it
what
right
is
before
possible.
when
You are
it's
buying
high.
PropFirm challenges anyway. Well, at propfirmtrader.com, not only will you get the best prices and be able to compare your PropFirm challenges, but by automatically using PropFirm over 200k in the entire and up to subscription offer to make sure to match get back
Hang on for the day, because this talk 8th of October.
figure giveaway every single week. Now let's get back into the episode.
So it's 8th of October, 9 a.m. and I'm going to be watching Tesla today, the only stock I'm going to be focusing on for the day, because this stock had buy the rumor and sell the news twice in a row, twice in the past 4 days. So on 2nd of October, Tesla released the delivery numbers. Everyone expected Tesla to blow past the delivery numbers because of the incentives of the EV vehicles. They went away last quarter. So anyone who actually wanted to buy an EV vehicle and who actually won the EV vehicle on a discount because of the government incentives, they're going to buy it in the same quarter, last quarter. That's why we saw a nice push towards the upside. So buy the rumor, and as soon as the news came out, it actually sold off. So that was a nice setup. Now yesterday, Tesla X account, they actually teased that they are going to be releasing something on 7th of October, and everyone expected that it's going to be a cheaper Model 3 and cheaper Model Y because of the incentives. We don't have incentives anymore, the government rebate. So now they are going to be releasing cheaper models, and that's what it was. So buy the rumor and sell the news again. So now the good thing on the technicals, if I show you guys on TradingView, is that it actually closed near the low of the days, which is what I like, because sometimes when we close near the low of the days, we might see some continuation push down. So that means we had a bearish bar, which is okay, which was on high volume, which is also nice. So we can see red candles on high volume, green on low volume, red candle on high volume. Satisfies the basics of price action. And last week also we closed like a doji, so especially if we make a new weekly low, so I mark all my weekly levels in yellow, so I'm going to mark it in yellow, which is 416.58, a bit too far away from the current price. But if we get under the yesterday's low, near the yesterday's low with panic on the tape right here, so I'm going to be watching the book map of this stock. If we get panic on the tape, I'm going to be looking for my shorts on this stock. Shorts, not my physical shorts, but I'm going to be looking to short the stock near the prior day's low for a breakdown under 430 towards 425, most likely 420. Let's see if you're actually seeing any panic selling or not. So that's what I was saying. If we open and if we close near the lows, that means the bears, the sellers who are in control towards the close of the day, that actually makes it a nice play. For example, on 2nd of October as well, we had a nice bearish bar. The following day, we actually had a continuation move. So this is what I call continuation move. We continue the sell off from the prior day, or we continue the buying from the prior day. So same thing happened right here. 11th of September, nice push towards the upside, and then the next day we had a continuation move towards the upside, especially because on this day as well, it actually closed near the high of the day. So this was a really strong green candle. Now it looks like a strong red candle, not like a very strong red candle. On 2nd of October, we had a huge candle. This is still a small candle, but it closed near the low. So I'm going to be looking for some continuation move towards the downside. I'm going to be doing a live voice session with you guys, and you guys can see in real time. This is going to be my execution screen. You guys will see all my orders right here, and I'm going to be focusing on this, the time and sales, the montage of Dash Trader Pro. I actually have trading view windows as well right here, but I won't put everything in this like small screen, and I'm going to be focusing on bookmap as well. So I might not be able to show you guys the bookmap when I actually execute. I mean, I'm going to try to, but if I'm unable to do that in real time, I'm going to explain what I saw on the bookmap.
It's a hassle,
once the
right?
trade closes,
Doing this
or
stuff
once
is
I
a
take-
hassle, like kind of inconveniencing yourself to show people this shit. Like I get what he means, right? It's like you're already trying to focus as is. You're not be sitting here going like, okay, let me stop paying attention to show you guys the bookmap.
my partials,
Especially if we're
market
just
is
doing
a
on the
bit
1
more
minute like this
relaxed,
guy.
then I'm going to do a review of why I enter based on the bookmap if I see any signs to enter. But yeah, I think it's going to be fun. I'm just going to pause this recording now. It's 9:05, so no need to waste the next 25 minutes, and I'm going to start the recording again around 9:29. The market is about to open.
Typical kind of thing though, right? with most traders, plan prepared ahead of time, know exactly what they're looking for. If they don't get it, sit on your hands and do nothing. So I fuck with that.
It's 9:20.
But to be fair though, like me, like I try and have every trade planned, but there's times when something happens, like in between two levels of interest, where like an obvious trade appears, right, that you weren't planning for. And when that happens, yeah, I'm taking that shit. Taking that shit quick. But typically, I'm the same kind of thing, right? I know exactly what I'm looking for.
9
Like,
approximately.
I already know for shorting, like, this is gonna be the first zone I'm watching, and probably not gonna be taking it because I'm not liking what I'm seeing just yet. But then the next zone is gonna be like this, right? Maybe we SFP these highs potentially, maybe here, but like, realistically, it's gonna be this zone. And for the long, it's not gonna be until we get down here, right? I'm already in a long, so don't need to worry about that. But let's just suppose that we closed out and we start to like correct in a more meaningful time frame. It'd be like these lower levels, obviously.
Approximately, we have just about a minute to go before the market opens up. I have a few other stocks on the sidelines I'm watching, Nvidia, Apple, and AMD. But if I take a trade on those, like on the other stocks I mentioned, I'm going to break it down why did I take these trades and everything later, because now we don't have any time. But yeah, good luck to me. I mean, trading is not about luck. I mean, it's about luck. You need to be at the right place at the right time, but it's luck with skill. That's what Ronaldo also said. He says that luck without hard work is nothing. So you have to work really hard as well. So yeah, for now, Tesla is pushing towards the upside, so not a big fan of it. Yeah, I think it's going to be more about waiting and watching. 438 is a zone that I'm watching on Tesla. We can see that rejection yesterday as well. So that might be something interesting. If I see that the tape of Tesla on Tesla is actually weak, I might start a small position, but I'm not definitely, I won't take like the big position sizing or my usual position sizing. Tesla actually got hammered from 438-ish. Yeah, it got freaking hammered from 438-ish. Damn. Took a position on Tesla. Looks really weak on the tape as well. We are near the prior day close. If we break the yesterday's low, it can get ugly for this stock, which is 432.45, right around that level. Nice. Yeah, we are near S3. Apple is also moving. I'm gonna put Apple on the secondary. Okay, Apple is not doing anything much. Tesla got a big buyer at 433, which we can see right here. I can see it on the book map as well, but there are a lot more sellers still in the market. Yeah, I think this S3 is gonna be major. The real time and sales looks really bearish. So yeah, Tesla was nice, guys. And
interesting. This is the first guy I've seen using these pivots. Not too common. Not too common. You come across people that are using this.
Apple also hit my alert, but not doing much. I'm in Tesla. If we continue holding under S3,
I think TradingView added this too, right? Somewhat recently, I recall. Yeah. You guys can play around with it if you want, right? There's lots of different types of pivots too. How's everything else doing?
looks nice. Yeah, yeah. For now, I think S4 is the next level. I just want this 5 minutes to close under S3.
No, actually, we need to write that down, actually.
Worst case scenario, under the yesterday's low. Best case scenario, it closes under S3. But yeah, we had a few new buyers on the book map. But yeah, the tape, I mean, the real orders going to the market are just hitting the bid price. We are seeing a lot of red. A lot of red. I don't know why I took 430 puts. They're already in the money. I think I should have taken 425 puts. Yeah, the bits are getting hammered. 428 has a big buyer. I haven't taken partials, but I think the reward is nice now. So if we see any sort of pullback, I'm going to lock in 50%. The thing is that this is similar to what happened on 3rd of October. I think 2nd of October was the news, delivery numbers. 3rd of October, we had a continuation sell-off. This is just repeat of that. Rinse and repeat. Same. Control C, Command V. Same. Still holding my whole position. If we see any sort of pullback, I'm going to see that on the tape. Yeah, I covered 50%, guys. Yeah, in theory, I should not have covered, but the premiums have paid nicely. And I was in decent size. This might be one and done for me, guys. This might be one and done for me. If you catch a move like this, what else do you want? S4 is on Tesla. Next major level, 425. Yeah, cycle level. Damn, this paid. I was not expecting. I told you guys, sometimes the market doesn't look that good, but we just get good moves. Continuation play, this was just like rinse and repeat. This was the only stock on our watch. Same continuation play, 3rd of October, 2nd of October, we had a sell-off, 3rd of October, continuation sell-off. Same thing. Yesterday, we had buy the rumor, sell the news, 7th of October, 8th of October, again, continuation sell-off. Same setup. So unless and until you journal, you won't know
No,
how to
honestly,
execute on it.
I like how the other options trader does this more, right? Like he like swings these on like the weekly or monthly calls.
Setups.
Like that guy juices a lot more because of it.
So I took 100. I'm out 70 now, holding 30. We are near S4. I might actually risk 20 contracts if we get into the breakout zone under S4. Yeah, for now, I should have, honestly, I should have held my whole position. Should have, would have, could have. And people say that no one gets broke by taking profits, which I understand. But as of now, I don't see any reason to exit. So I just exited because I had big size, and I exited because I was nicely up for the day. Those are not good reasons to exit because the market did not give me a reason to exit.
This is the 3rd time. This is so he had the same issue on the interview in the past at the start of the new year in 2025. Then he had the same issue again in the middle of the new year in 2025, and now he's doing the same thing again in October, or I don't know, maybe this is August perhaps. A bit suspicious, right? Is like acknowledge the same issue 3 times in a row and has not come up with some kind of systematic way to approach it.
That is something I'm
It's gonna be hard to rank up doing that, right?
working on. That if the market is not giving you a reason to exit, why do you want to exit? Are you exiting because of your P&L? Market doesn't give a shit. Market doesn't know how much you are up for the day. There are like billions of dollars flowing through the market. I'm only in 20 contracts now, guys. We touched S4, as I mentioned. So if we break down and hold under S4, I'm going to maybe look for my ads, but I'm really happy with this trade. My DAS is, yeah, this is my internet, not my computer. Yeah, it's okay now. Yeah, we are seeing some buying near S4, new buyers come in. So yeah, we can see right here, we had these big buyers right here near, on the book map I'm seeing near 429. And even before that, when we tried, we had a push towards the upside. This was the big buyer I was talking about, 433 around. And after that, even though we had a big buyer, but the tape, the real orders going through the market were like all hitting the bid price. So I have a filter set on the book map. It only shows me orders above 1,000 shares. And that's what we saw. We were just hitting the bid price. If I go back, this is around 932, 750, 532 my time if you go back. So you guys can see right here, reds versus greens. We're just seeing red. 80% of the orders are like red. On the pullbacks, yes, we are seeing a bit of green, but not at any major level. But near 430, 429, right around here, 433, you guys can see 433, like smacking the bid, smacking the bid, smacking the bid. All the big orders, 4,000 shares, 1,000, more than 1,000 shares. Most of the orders are smacking the bid price. So yeah, that was a good trade. Yeah, I think good exit near S4. Nice move. Nice move. We might make a doji at S4 now. Yeah, we might make a doji. So yeah, I think I'm going to cover the rest of the remaining 20 contracts as well. Yeah, this was nice trade, guys. Nice trade. There will be a bit of mix and match because I'm actually recording this video for the Chat Fanatics podcast as well, and I'm talking to the Discord members as well. So yeah, this trade was recorded. I mean, I broke down everything before the market. We only had this one stock, Tesla, on the watch. So yeah, this live trading video is going to go up with the Chart Fanatics episode, guys. I mean Discord members. Yeah, I mean, that was nice. That was nice. Now, the thing is, we could have bounced similarly from S3 as well. So, yeah, I mean, I took my 50 contracts out a bit too early, but that's because it actually pushed towards the downside. So, it's all in retrospect, it's all subjective. Because we could have seen the same bounce right here. And I would have felt like,
I'm
"Thank
fascinated by how much emphasis he puts on the pivots, right? Because it's like a pretty. The thing I want to research about it is like a. I suspect there is like a lot of algorithmic usage of this, right? I suspect. 'Cause in terms of like manual traders, you don't see this too often. Pretty niche.
God, I took 50 contracts out at the right time." Yeah, it's back up. I think Tesla on the daily still looks like it's going to find support. So this was just like maybe a stop loss hunt, but the tape was really clean. We might reject from S3. I'm going to
Like
give
the
it
only
room
other person I've seen talk about this is like a notable trader is like Brian Shannon.
to S3. What's the point of exiting now? So I'm going to see, yeah, Doji on the 5-minute chart as well. Yeah. So honestly, because I'm talking so much, I should have managed these 20 contracts slightly better than the way I did. I'm going to give it room to S3 now because what's the point? I mean, at the moment, the risk to reward makes sense because if my stop loss is 432, if we drop back to 425 makes sense. Covering my whole position near 428 was nice. I did not do that, but now exiting at 431 might as well give it room to 432, which is the yesterday's low. Is this a good add? I won't add because I don't like the doji on the 5. But yeah, I covered my whole position, guys. Doesn't look good. It looks like a V reversal. So yeah, now I feel like, thank God I took partials at the bottom. But when it was actually pushing towards the upside, I was feeling like I'm the stupidest trader in the world. So that's how trading plays with you. Every single minute of the market open, not even minutes, seconds of the market open. 1 second you're gonna feel like you're the smartest guy in the room, and the
I think
next
that's just
second,
how it works, right? Realistically, like even us, like dwelling over this thing, like how to approach the TP here and splitting it up. There's a like you can literally clone the world, right? The exact same clone of the world, and everything is the exact same. All the data is the exact fucking same. Blah blah blah. And then the reaction that happens here can go either way, right? Because for all you know, in one of these worlds, some random person just decides to sell a massive order and it reverses, and in the other world, someone tries to buy it a massive order and it just keeps pumping. And there's no way to predict that. No data, no instrument, no tool, like nothing. So I have to accept what it is, right? Stick to your plan, make your decision, go from there.
you're gonna feel like you're the dumbest guy in the world because 10 seconds ago I was feeling like I'm the smartest guy in the world. Now it's actually rejecting from 432. So now I feel really dumb. But yeah, now the best case scenario is that we actually hold under S4. I don't want to short it right here. That 5 minutes doji is on relatively high volume right at the level we were watching, 425. So yeah, it's not the smartest idea to short now. Also, 12 minutes workday. I am up 24k for the day, guys. 24k within the first 12 minutes, which is insane. Happy with that. Happy with that trade. Let's see, this rejection was kind of expected, and that is the reason I was holding 20 contracts. But the thing is, we still are, like, it's not the cleanest setup on the 5 minutes now. 15 minutes candle is about to close in the next few seconds. So let's see. But yeah, happy with this trade. Nicely executed. Nicely executed. Another thing is that if you focus on the 1 minute chart, it looks like a nice shot near S3, which makes sense, but 5 minutes is not looking too good. Can it push down to 425? Heck yeah, it can push down to 420. But do I have any edge here? I just have to stick to my edge and size up on my edge. I don't want to trade each and every setup. It's not Pokemon. I can't catch them all. I just want to catch my setups. And that opening flush was my setup. That's what I got. Yeah, my maximum, I think I took 10 contracts out at 10.65. My fill was approximately 7. AMD hit my alert. What the hell is that stock doing? Do I want to give back my profits to AMD? It's near R4. Price action is a lot cleaner today. AMD premium's nice and cheap. Yeah, let's go all in. Let's go all in. Advanced Money Destroyer. Yeah, that's the acronym for AMD in our group. Yeah, it's above R4. 217. I had my alert right under 217. Let's see. At the moment, it's too extended. If we get a bit of a pullback, and if we actually hold strong, then yeah. Like on the 5-minute chart, it has already moved from 212 to 217. That is a $5 move. And if you guys remember, AMD's ATR was like $5 a few days ago. Now it's like $10 because of that 25% gap up day. Yeah, see, Tesla pushed towards the upside. So on the 1-minute chart, it was looking like a decent short. But on the 5 minutes, if you just focus on that doji right at the level we were watching, based on, and the tape changing the direction, that was actually, I think, yeah, even on the book map, I was not focusing on it. Every time we tried to push, yeah, there was a clear sign on the book map near 425. That is going to be the low of the day. Or maybe a short-term low. I don't know the low of the day. The market dynamic changes every second. But if you guys can see the book map near the low of the day, we broke that 426, big buyer, big buyer, big buyer. And then this is what I call the ladder support. Big buyer, big buyer, big buyer at 430, 428,
This
427.
is what I was
and as
talking
soon as
about, right? Where like the aggressive people start pushing the price up, and then people start walking their limits up to support it. Team game, right? Team effort.
broke that 425 level, 425 zone, along with the level we had on the daily and the S4 Camarilla levels, we had new buyers. So that is technical analysis, along with tape reading, along with nice entries and exits. That's what makes you a consistent trader. Yeah, AMD freaking squeezed, guys. AMD squeezed. Today is the day for AMD. Anyone in it? AMD? I'm not in it. But yeah, it might be a day for AMD to go. So if we get a pullback, I want to pull back. Like, it was a good trade, but I just don't want to chase it. Are you in, Arshad? Like, I'm serious. Yeah, from R3. You're in from R3. You're in from R3. Damn. 213.7. That's nice. Damn. AMD is going. This is the squeeze kind of tape I was expecting yesterday, which we did not get. And yesterday, as I mentioned...
I'm curious to watch this guy now, see how he uses this. I mean, I'm assuming he just has like the pivots indicator on, and when price interacts with them and then does like a break, for example, like that's when he considers it like a valid level of interaction. Well, that's probably the most logical way to do it. Because I'm a bit suspicious of just using them like so drawn out like this. And also from like reading just now about them being used in algorithms, doesn't seem that prevalent either. Curious how he came about using this. Very interesting though, very interesting.
All like these levels were so extended. Today we are actually in the breakout zone, so it might squeeze. Yeah, any sort of pullback, I'm going to try taking a position. And I want to, because AMD premiums get really jacked up. So if you enter at the breakout, the rest of what doesn't make sense. Like at the moment, it's freaking extended. Like I was talking about the extension like 3 minutes ago, but now it's like crazy extended.
Yeah, this is when you become a top longer.
Oh, yeah, AMD R6 is 222 point. I'm actually feel cold. I need to turn the aircon off. But AMD 222.53. Tesla is trying to hold under S4 on the 5 minutes. S3, sorry, on the 5 minutes.
I guess everybody
So
needs
for the
Discord
chart fanatics
uses that.
people, I'm talking about R3 and R4. These are the Camarilla pivots levels. So I actually made a video on my YouTube as well, explaining everything. Like I explained everything how I trade around these levels. You guys can watch that video as well. But these levels don't make sense without
True.
any higher time frame setup. These are just like guides. So I talked about the zones. If you're actually holding above R3, this is the launchpad zone. This is the overdrive zone. I talked about everything in my YouTube video. So if you guys want to learn more about these levels, you guys can watch the YouTube video I posted on my channel.
Discussed pivots on his channel.
So is this a pullback on AMD, guys? We had another big seller at 220. I don't
Go
want it
find
to
that
pull back from
video.
220. That's the thing. I mean, a break and retest of 220 makes sense.
What was his name? Jay Altani.
But I think, yeah,
Pivots.
I'm going to not like size up on it. But yeah, I think it still looks good. And because I'm green, I can risk a bit of my profits. Damn, that was a good entry actually. Yeah, it's in squeeze mode. We can see the speed of the tape as well. Yeah, that was a good entry. Let's see if... I think I'm waiting a lot. I'm not being aggressive. Which is okay. Sometimes you're aggressive, sometimes you're defensive.
The secret levels institutions use. That's the name of his video. Interesting. Interesting.
225 calls moved from 2.6 to $3 in like 30 seconds. That's the beauty of trading options. And the other beauty is that you get FOMO every single second. I had my order ready as well on AMD, just did not execute. I was like, it's gonna give us like a bit more pullback. I waited for the 5 minutes close. I was expecting like a bit of a pullback on the 5 to 219. It just pushed up. Yeah, that's like another 7-8k. I was planning to take 100 contracts on AMD. Yeah, okay, missed out on it, which is okay. Life of a trader. You can't catch them all, like I said. Because mentally I was done. I'm like one and done. I have mentioned this previously as well in the Discord group that sometimes you're trading to make money, sometimes you're trading not to lose money. Off the open, I was trading to make money because I was flat for the day. I was zero for the day. But now because I'm green, I want to preserve that. So I'm trading not to lose money. There's a big difference. You're getting defensive now. So that doesn't end well. That is not good for you taking another position. Yeah, that was a good ad on AMD. Perfect, perfect. This is just another example. If you wait for the news to settle down and wait for the camera pivots to tighten up, like yesterday, the range between R3 and S3 was like $40. Again, for the chart fanatics, you guys can watch my video on YouTube to understand what I'm talking about. But so yeah, today the cam levels tightened up and we got the breakout. I'm pretty sure, like I can't be mad at myself because I'm pretty sure I would have entered AMD near 216 if I wasn't in Tesla. That's the thing. Because I was in Tesla, I missed out on AMD. Otherwise, I would have executed on it. We all know I would have executed on it. We are watching Tesla and AMD. Yeah, it's near R6 now. Can it go for the overdrive? Might even go for all-time high. Let's see. Let's see. I think I'm ticked out for now. If, like, say, my entry in an imaginary world, I entered around 215, 216, then yeah, I would have just held on to my trade until I see a reason to exit, like the Tesla trade. But now it's freaking extended AF. Yeah, AMD was also tight on cam. Yeah, so just have to wait. You just have to wait for camera levels to tighten up. Tesla's still holding under S3. So there's a chance that later in the day it might sell off. But now the best bet is to actually wait because it's just like shitty, choppy price action now. The best bet is to actually wait for hold under S4. That is the low of the day. Yeah, AMD just went, man. Breakout zone, overdrive zone, to the moon. Ah, that's the thing. Even though I'm up 24k for the day, I still feel like, not like share, but I still feel like I could have made more. The day I made 93k, I was like, I could have made 200k. These are the feelings you go through as a trader. AMD overdrive on above R6 overdrive zone. Damn. Not even a single pullback. Not even a single pullback. AMD was nice to me today. It was nice. It was not nice to you. It was nice to the market. And that's why it was nice to you. So we closed above R6. But my heart, my brain, my trading experience won't just allow me to enter here, man. Look at the 5-minute chart. Staircase to heaven. It has moved $13 for the day. But yeah, whoever traded it, I'm pretty sure 225 calls. I'm going to actually check. So if you entered AMD 225 calls near R4, say 216, 217. So yeah, that was like 944. Premiums were like $2 to 4.5. Double your money, more than double. A nice entry, even like not even 2.7. I'm talking about R4 breakout. So the premiums were like $2 to $4.5. That is like 125% return if my math is correct. That was your entry, yep. I might personally call it for the day, guys. I think I might call it. The longer I sit here, the more I'm gonna get like FOMO on the stock. Now the thing is, yeah, it might go for all-time high, but need at least a 5 minutes.
I don't know, like it's such a terrible approach to have it, right? Like if anything, when you miss out long like this, then that means if you want to keep playing this stock, just look for the short setup, right? You don't have to try and weasel your way into the FOMO into the long. It's coming down sooner or later, right?
I've got to pee really bad, so I'm gonna go pee and come back. So yeah, wait for me. Not you guys, I want AMD to wait for me. Yeah, I'm back. Can it go for all-time high? That's the question now. Yeah, I'm going to wait for this 5 minutes to close because it might even go for 220 or maybe even 219. That is going to be a good entry. Ideally, I wanted to hold above R6, but it's just like this $1 pullback is not enough after it moving like this. Not enough for my trading, so I don't want to enter right here. So I'm going to wait for the next few minutes. So yeah, guys, you guys saw me live. I entered at 9:30, 9:42, 12 minutes of the market open. I made $24,000. I think, yeah, 6.9, the maximum was like 10.65 premiums. So a contract, which is like $365 a contract. Had I entered my whole position and exited my whole position at the bottom, making the most amount of money, this was like a 36k trade. But you can't think like that because no one told you that this is going to be the low of the day. So that is one thing you need to make your peace with. You can't ever catch the top and bottom of the market. So I'm just gonna take a screenshot, journal. I'm gonna call it for the day. I think AMD is a bit too extended, so I won't be trading it. And so usually my process is I'm gonna trade. I'm gonna wait it out the next 5-10 minutes. I'm gonna go maybe grab a tea, and then I'm gonna take a few screenshots, mark my entries and exits, note that down in my notional journal, and I'm gonna call it for the day. So thank you for joining in. Hope this video was really helpful for a few of you guys to see how real-time trading. So Tesla, I'm gonna break it down again very quickly. So Tesla was a continuation play downside, and this was similar setup to what happened a few days ago, 3rd of October. This was 2nd of October by the rumor sell the new setup. We sold off. Next day we had a continuation goes down. This was again 7th of October, and then 8th of October we had a continuation goes down. The premiums moved approximately from $7 to $10 a piece, which is approximately 10.5, which is approximately 50% return in a matter of 5 to 7 minutes. So yeah, thank you for joining in. Hope you guys like this session, the live recording, live recap, live trading, and emotions I went through, because this is it. Like trading, sometimes you feel like the smartest guy in the world, and then the next minute you feel like you were really stupid. But if you just stick to your plan, that's the best you can do, because market is going to be erratic. If you're trying to make sense of the market, think about this. You're trying to make sense of what humans are thinking at that point. Humans are algos. Algos are also coded controlled by humans or whatever, right? So you're trying to make sense of what bunch of humans are going to think and what they're going to do next. So they can be more irrational, right? Buyers and sellers can be a lot more irrational than you can remain solvent in the market. But if you just stick to your plan, that's the best you can do. In this live recap of Apple trade, we will take a look at a really good setup based on the technicals, but how tape reading helped me take my partials at the perfect time, and also adjust my stop loss based on the actual buyers and sellers instead of just trading around random levels. Even though I was up approximately $40,000 on this trade unrealized at one point of time, but I still walked away with making $24,000, which is going to be another lesson that how as a trader you need to adapt to moving markets as the dynamic between the buyers and sellers changes every second. Now before we jump onto the actual trade recording and my live executions, I want to show you guys a daily chart. I'm going to use a replay feature just to show you guys how the chart was looking like before the day I took this trade. So we can see that on the daily chart since the iPhone 17 event launch, we had a crazy push towards the upside. So you have to look at the overall market context and what is the force driving the stock towards the upside. Since then we have been consolidating. We can see that we had these green candles on high volume followed by consolidation on low volume, which is good. Basics of technicals. This looks really good based on the volume analysis as well. But this is a level of significance on Apple around 257, 256 to 258 zone. Why? Because we had this push towards the upside. Since then we have been consolidating right here. But this is the last straw for the sellers to hold the stock under this level. Why? Because after that we directly have all-time high. We don't have any other technical levels. If we actually get above 258, we might see a break of all-time high, and people who have been shorting the stock, they will have to get stopped out. So this is the last straw for the sellers and last straw for the buyers as well to take the stock towards the upside for the break of all-time high. That is why it's very important to see where the stop losses are placed of a lot of traders and where the emotions are going to be really high. That's why this 258 is going to be a level of significance. Yes, I can mark 15 different levels on the higher time frames. On the daily chart, people say that mark your levels on the higher time frames. You can mark 15 different levels on the higher time frames, but only one or two of those levels are going to be really important, and these levels are called levels of significance. And now here's the live recording of this trade. This is 9:31 a.m. 44 seconds, and we're finally getting a push above 258.6. As I showed you on the daily chart, we have quite a few high of the days near 256, 257. So if you get the momentum, this stock might as well go for all-time highs. So I entered my position at the hold above 256. I entered 200 contracts, overall 400 contracts, 202 orders, 257.5 calls, and we just had a quick push towards the upside. My stop loss based on the technicals on this trade is going to be this pre-market high, which coincides with the yesterday's high as well. But now, based on the bookmap, you guys will see that we had a bit of uncertainty right here. It closed like a red bar, a doji on the one end, not the best thing in the world. But if you look at the tape, now that is very important. That before I'm thinking of exiting this position, I have to look at the tape if the buyers or sellers are actually holding strong or they are actually holding weak. So right around 9:32 a.m., this is when we were trying to push towards the upside. This is the big green candle we just saw on the price action right here. This candle followed by we will have a doji right here. So we closed like a doji, but as soon as we closed like a doji, we had another big buyer at 255.40. So this was a positive sign. Even though my stop loss on this trade was if it makes a new 1 minute low or if we get under the pre-market high. Now I might give it room towards 255.4 as well, because we know that we have a big buyer at 255.4. We might go grab this buyer and push towards the upside. I don't want it to happen, but even if it happens, I just have to be prepared. So based on the tape reading, I can prepare myself that we might see a pullback to 255.40. And if we are unable to hold above this buyer, we take it, we go for this buyer. And if we are not able to reclaim back above this level, that has to be my maximum stop loss. That has to be the last straw. I have to exit right there. But ideally, I don't even want it to go towards 255.40, but this is just a positive sign that at the breakout, the volume also increased. This is another component of the market DNA. We have good technicals. The volume is actually increasing. Our vol, which is the relative volume, started around 70% on the second minute. It has increased from 70% all the way down to approximately 82, 80%, 81%, 82% in the next 2 or 3 minutes. So at 9:32 a.m., the R vol was 70%. At 9:34, R vol is 82%. That means this move is actually backed up by volume. Volume is actually flowing into the stock now. And now after that, once we broke above this high of the day, my thing is that we just have to hold this position unless and until we see a sign of rejection. 258 is going to be
using this on. I'm not familiar with this platform. How often is that updating? Can you see in the settings? Whoops.
Above this high of the day, move is actually backed up by volume. Volume is actually flowing into the stock now. And now after that,
The dash. This is like the DAS, right? DAS R vol. Interesting. I mean, that's why I use vector candles, but it is interesting that this thing has like a quantifiable percentage on it.
once we broke above this high of the day, my thing is that we just have to hold this position unless and until we see a sign of rejection. 258 is going to be an important daily level because after 258, we directly have the all-time highs. So I'm going to see if we see some sort of uncertainty around 258, here we are around 258. I'm going to think about locking in a bit of my position. So maybe 50% of my position. And the premiums, I entered at 1.7. So based on options, like if you guys don't trade options, 1.7, 1.68 means I paid $168 a contract. So overall, my investment on this trade is 1.7 multiplied by 400. It's going to be approximately $70,000 worth of position. And the same premiums are at $280 now. So that means I paid $168 for the premiums. I took my partial position, 200 contracts out at 2.76. That means at 9:31 a.m., I entered a contract for $168 each. At 9:36 a.m., 57 seconds, I exited those contracts for $276 each. That means I made approximately $108 on an investment of $168 per contract, which is insane. And right around here, near 255.8, I'm going to lock in another 50 contracts because I saw a bit of uncertainty around 258.6, and we can even see that on the book map. So earlier on, when I entered my position, we had a big buyer trying to support the price, which is good. But now, if I play this and if I move all the way near like high of the day, today near 259. We will see what happens. So we are trying to go for 259, which is the last draw. Then after that, we directly have the all-time highs. I covered 200 contracts at the break of 250. I covered 50 more contracts somewhere around here. But you guys will see what happened. We had a big buyer right here. Now we have a big seller, which is the opposite to what happened when we were pushing towards the upside. So we had a big seller, 259. Then we have another big seller at 258.80, and then another new seller around 258.50. So this is what I call the ladder resistance. That means we already had approximately 43,000 shares sitting at 259. Now we have another big order of 56,1800, approximately overall 58,000 before the break of 259. So think about this, like the buyers are actually trying to break the wall. It's very difficult for them, especially with the stock being this extended. And as soon as they were trying to break the wall, they see that there's another big wall in front of the already big wall. And this wall that is in front of 259 is even bigger than the wall we have at 259. We have 56,000 shares here and 43,000 shares right here. So 56 is actually bigger than 259, which is what I call a volume anomaly. This should not happen. Ideally 259, which is a good cycle level, it should have a bigger order. But now we are seeing a bigger order right under 259, which is a bit of a negative sign. But now that doesn't mean that we are just going to see a V reversal, because we can see two scenarios now, maybe three scenarios as well. We might just see a straight push towards the upside. But in most cases, when we see something like this, that means a consolidation or a V reversal is coming. So you can either lock in your position.
It's an interesting thing to note of. Nice little nugget of potential alpha to pay attention to right there, right? I'm curious if that's like a high frequency trading firm. Probably is, right? Almost certainly is a high frequency trading firm front running that order.
Take your partials right here. That's what I did. But you can just prepare for what's about to happen. That is what tape reading gives you, because it prepared me off the open when I took that entry that I might have to exit at 255.40 and maybe adjust my stop loss accordingly. Towards the top, it actually told me that, okay, take your partials because a short-term pullback or maybe a V reversal is incoming. So that's where I locked in my partial. Now let's play this recording and we can see that I added more to my position right around here. I added 200 more contracts, which is not a big size, which is approximately $1.4 a contract. These are like 260 calls now. I invested approximately 28,000 because I knew that I'm up approximately 20 to 30K on the first trade. So I can risk a bit more to make more money. And I was not very confident with this trade. That's why I only added 200 contracts instead of 400 contracts because of this thing what was happening on the tape. So if I play this now, you guys will see that this is what I call the ladder resistance. So right around here, around 941, 942, we had these big sellers right here. Now another big seller right here. You guys can see the red line. Another big seller around 258.50, 0.55 approximately, 0.50. Another big seller at 258.30. You guys will see, I can see the ladder. So this is what I call the ladder resistance. We had a big resistance at 259, another resistance, that means another seller, another big seller, another big seller. Now there will be a very negative sign right here for a push towards the upside. We have new sellers coming into the picture, but we will see one of these sellers step down. In the next few seconds, it happened on the same candle. We're going to try to push towards the upside. Another big seller. So this seller just stepped down. He had this order, he or she or whatever, I don't know, it's a bunch of sellers. You don't know that from the book map. But what happened? That order was at 258.30. That order stepped down. Same order. You guys can see right here, 6,000 shares. And if I go back slightly, we had approximately 6,000 shares. So the same order stepped down. That means this seller is eager to get out of the position because, for example, if you own something or even if you want to short sell it, you want to try to short sell it or sell that position at the peak. You want the highs because if you sell it right here, you're getting a really good price. But these sellers are not very confident. So now they are trying to lower their price and they are not very confident that the price is going to continue towards the upside. And when I saw that, I covered my partial position for a loss. I entered at 1.42, covered my position at 1.17. But the initial position, I had a really good entry. I'm going to give it room to 257 because we might still bounce from 257. We have a big buyer right here, approximately 13,000 shares, whatever. So we might bounce from 257. So for the last position that I'm holding the 150 contracts from the open, I have a really good fill price on that position. For that position, I'm going to adjust my stop loss to 257 because we might still grab these buyers and push towards the upside. And when we actually drop down under 257, that's where I covered my position at a fill price of 1.8.
That was a weird ad,
150 contracts.
right? That was like a really weird ad.
So on my
not sure why you did that. Especially given everything we were just talking about.
last position that I'm holding the 150 contracts from the open, I have a really good fill price on that position. For that position, I'm going to adjust my stop loss to 257 because we might still grab these buyers and push towards the upside. And when we actually drop down under 257, that's where I covered my position at a fill price of 1.88. I still made money on the remaining 150 contracts, overall making $24,000. So on my first trade, I made $30,000, approximately $29,980. On the second trade, that was the ad, I lost $5,300. So at one point of time, my first trade itself was approximately $45,000
Yeah, that was very odd, right? Very odd.
up and realized. But you guys just saw that how in real time I was able to adjust my stop loss, adjust my position sizing, and adjust my profit target as well based on what was happening between the buyers and sellers and the dynamic between the buyers and sellers. Are the buyers stepping up? Are the sellers stepping down? What are we seeing on the tape? And this is what I call the market DNA strategy. You're looking at the technical analysis, which is what 99.99% of the traders do. But now you're also looking at the real-time dynamic between the buyers and sellers and how it's kind of shifting every second of the market open. And you're adjusting your stop loss, your profit target, your position sizing based on what is happening between the buyers and sellers. Also, one more important thing is that I mentioned at 9:32 a.m. the R wall was approximately 70%. Near the highs, it's 110%. That means the move is backed up by volume. So now you're looking at technicals along with the tape reading, along with volume analysis, and trying to join everything to look for a high quality setup. And that is what I call the market DNA. In this live trade, you will see me execute on a $50,000 trade with my real-time emotions and executions. I actually did not speak during this trade as I just wanted to zone in. It was a playbook setup as per my game plan, and I wanted to lock in and not think about speaking or recording myself. So to understand the trade better, I will first break down why I took this trade, why I sized up on it, and then we will get on to the live trade because it's going to be fun to see how this trade actually raised my heart rate in real time. I'm going to use the replay feature just to show you guys how the daily chart was looking like the day before I took this trade. I took this trade on 9th of October. On 8th of October, we can see that this stock has been making a new all-time highs, and we are pulling back, making a bull flag on the daily chart. So the technicals are good. But on 9th of October, it had a bit of news, and this stock was holding stronger than the market with the gap up. So now I'm going to select the bar and see what happened. So I'm going to select this bar. You guys can see at the market open, we were gapping up, and this stock was holding stronger than the market. So that is what I call relative strength, which is one of the criteria to satisfy a playbook setup as per my game plan. Let's now take a look at the intraday price action from that day and see what happens. So we can see that in the P-market, we are holding strong right here, and then we pulled back and pushed towards the upside, right? But then again, I always talk about levels of significance. You don't need to mark 15 different levels on the daily chart because everyone tells you to mark your higher time frame levels, but I can actually mark like 15 different levels on the higher time frames. The only level on that day I had on my chart, I like my chart clean. The only level I had was a prior all-time high, which was 191.05. Remember this number, 191.05, because it's going to be important. So that was my game plan on the higher time frames that the stock is gapping up above all-time high.
Curious, what is this, right? What indicator is that?
Only have this one level. I want to see how the stock reacts around this level to look for my entries. And I'm going to look for my entries off the open as well if we just go towards the upside for a breakout. And you guys will see me execute on this trade real time. And I'm also going to show you guys the book map because for me, as I told you, the market DNA strategy is a combination of technicals, market context, holding stronger than the market, tape reading as well. So I'm going to show you.
Oh, we found it. We found it. Interesting. So we'll look at that later.
You guys what happened on the tape near the prior all-time high. There was a clear signal to enter your position. And here's the live executions of this trade, and it's going to be fun to see my expressions. My expressions are real time that you guys can see on your screen, and it's going to be fun to see that how I actually bend forward when I take this position because I sized up on it. It was a playbook setup and I actually made good money. You guys will see everything in real time. So this is 9:30 a.m. NVIDIA had a slight push towards the downside. As I mentioned, this was the main stock I was focusing on off the open. I also had Tesla on the sidelines, but NVIDIA was the main stock. So that dip was getting bought back up. So it was looking like a decent setup on the 1 minute chart. So I had my safety order ready. This sell position that you see, it's just a safety order that like whenever I enter a position of the market open, I have a safety order that if it rejects aggressively, I want to exit my position at the market order. So right here near the close of this candle around 9:30 a.m. 45 seconds, I entered 500 contracts on this stock because which is a big size. It's approximately $100,000 worth of position. And if you trade options, that's pretty big size because you can actually make like 50, 80, 100% on the option. So my profit target on this is easily 5-figure, like multi 5-figure. So that's what I'm sizing for. And even the risk can be 5-figure. So we're going to talk about the risk a bit later when eventually we get onto the winning trade. But you can see after a bit of uncertainty on the second minute, it was pulling back down. It was pushing back down. And that's where I covered my position. I'm going to give it a bit more room. I'm just going to wait for the next few seconds to see what happens. But if we drop back and if we go for 192 level, I'm going to exit my position. So when we drop back around 192.3, the tape was not looking that strong. And I just knew that it's going to go for low of the day first. I covered my position for practically break even. My fill price was 2.07, the small number on the right hand side of the screen, and my sell was also at 2.07. But because I entered 500 contracts, I actually paid like approximately $800-900 in commissions. I'm talking about commissions just so you know that, okay, for now I was red for the day. Even though this was a break even trade, I was still red on the P&L because of the commissions. And you guys can see, as expected, I just forwarded this recording by a few minutes. It went for low of the day. So my exit kind of made sense. And now I want to see what happens near low of the day. And remember that number I talked about, 191.05 was a prior all-time high. Now, before we discuss what happened near 191.05, I'm going to show you guys the book map of the stock and what I saw on the book map. So here's the book map of the stock, and I have the 1 minute chart on the right so that you guys can reference what's happening on the technicals with the price action. So the time on the book map is 17:34, which is 5:34 because I live in Dubai, and it's going to be 9:34 a.m. So this candle that you're seeing at the moment, 1734 is this candle, 34 this one right here. So yeah, we are going for low of the day, like I showed you guys on the live recording as well. And yeah, so I want to see if we are actually seeing some weakness around the tape, because if we want to flush down, if we are going against the trend, because this stock is holding stronger than the market. So if you want to sell off, I want to see panic on the tape. That's what I want to see. In other cases, like if it's just slowly going down, I'm not a big fan of it, because if the stock wants to go in the opposite direction of the strength in the pre-market, opposite direction of the overall sentiment, we need to see panic on the tape. And we will see what happened right here. So this is
yeah, like you usually don't want to see like a controlled downtrend, right? You want some like a inefficiency to the downside to get in on the long.
which is 9:35 a.m. EST. I'm just going to just X2, X3, just not to waste your time. Now we can see that we are near a major level. So this is the level that we marked. 191.05 was a prior all-time high. We have this level marked right here. This is the gray line. And the low of this day was 191 point. The low of this candle was 191.06. That means it touched that level approximately to the penny. 191.05 was a prior all-time high, and the low of this candle is 191.06. And we did not see any weakness on the tape. You can see right here the red dots were coming in. But then that dip we saw green on the time and sales, which is going to get better for the buyers. I'm just going to play it, and you guys will see that and kind of get a feeling in real time that you're not seeing panic on the tape. If you want to break under the prior all-time high, especially with the stock holding stronger than the market, I want to see panic on the tape. I don't want to see a lot of green. I want to see like 80% of the orders hitting the bid price, which is signified by red, and maybe 20% of the orders hitting the ask price, something like that. So now this is 9:36 a.m., which is around this candle. So now when we were trying to break down under this 191, we had another big buyer right here, 191.25, 12,000 shares, which is big, but not very big. It's not alarming big, which is okay. So we went for that buyer, but you guys can see big red dots right here. That is very important to know, that there were big red dots. Sellers came into the picture. There was selling happening at the bid price, but it got absorbed by the buyers. So we are seeing action from the sellers, but we are not seeing the reaction on the price action. There's something called action and reaction. If there are like buyers in the market, I want to see the buyers react. I want to see the reaction of the buyers. At the moment, we saw a bit of red. We saw like these big red dots, but there was no reaction. We can see like on the price action as well, we saw sellers come into the picture, but it did not react. The price action did not react. We did not even break 191. Even before 191, the big orders are coming in. So what is happening? Someone is selling the shares before 191. We are seeing big red dots, but those sellers are getting absorbed by the buyers. So the buyers are so strong that even after that much selling, it's unable to break towards the downside. So there's action from the sellers, but no reaction on the price action. And we will see that happen multiple times. So we are going to go for it again. And we have to look at the time and sales as well. Yes, tape reading takes a bit more time, but it just gives you a bit more insight. What is happening near the levels? Yes, anyone can focus on the prior all-time high, but what is the context? What is happening? So we saw absorption of the sellers by the buyers. That was the first thing I saw on the tape. And then we had this big buyer. So already near all-time high, like the prior all-time high, I'm like, okay, I don't want to short it. And this is not me explaining after the fact. You guys can see this is what I posted in the Discord group. We have a community. I posted that in real time. Took a break-even trade on NVIDIA for now that I showed you guys off the open. NVIDIA real weird now for now. Held prior all-time high and no panic on the tape. This is 5:33, which is 9:33 a.m. on 9th of October. This was in real time, which I was typing in the Discord group. So it's not like I'm going after the fact. I'm actually noticing everything that is happening in real time. And if we hold under prior all-time high, might get some nice downside. And then this is a bit later what happens. I'm going to show you. So let's play this recording. We are going for that buyer again. A lot of red on the tape. We went for that buyer. A lot of selling. Sellers are trying to push it down, but getting absorbed again. So we are unable to, even after that much selling, we are unable to break down under 191, which is a negative sign for the sellers. Eventually, they're going to give up. If there's a lot of selling pressure and all of that is being absorbed by the buyers, the sellers are going to give up. And now this is where we see action and reaction. This is completely opposite. We are seeing big green dots and we are seeing the reaction. Previously, we saw big red dots, no reaction. The price action did not even go down under 191. But now there was buyer. We can see like big green dots and the reaction. This is what I want to see towards the downside if I am thinking of taking it towards the downside. But this green candle, we can see is right here. There was action from the buyers, and you can even see that the volume slightly increased on the green candle. Action from the buyers and reaction on the price action, which is good. There were buyers, and the buyers were able to push the price action towards the upside. That means there was reaction. Earlier on, there were sellers, but no reaction. Now there are buyers, and there is reaction. So when I saw that, I was already like, okay, I'm going to look for my trades towards the upside now. I just want to wait for a pullback, see what happens. See, the buying, same thing happened right here. Big red dots, no reaction. Now we are seeing big green dots, and we are seeing the reaction. So now I'm going to look for my entries. This is this candle. And now this is the basics of price action again. Even if you just don't focus on this, it gives you the insight, it gives you the confidence, and that's why I sized up on it. We can see green candles on high volume, red candles on low volume. This is the basics of price action. So most likely this stock wants to go towards the upside. And the green candles on high volume, we are seeing the reaction. It's actually pushing up. It's not like a green doji on high volume. It's actually like a green bar on high volume. So the buyers were there in the market, and we saw the reaction of the buyers on the price action. So now right around here, I took my starter position, and now let's get back to the live recording and see how I executed on it. So right around here, as I saw on the tape and the book map, the stock was holding strong. But off the open, if you guys remember, I took 500 contracts. Now I just took like 50 contracts because I'm still inside, like we are still inside the daily's range. So I don't want to size up. I'm starting a small position just to put some skin in the game. And then if we actually go above 192.5, that's where the seller stepped up on the 3rd minute. If you guys can see on the 1 minute chart, I'm going to add to my position. So I'm just in 50 contracts. My risk is most likely like $1,000 on this stock at the moment, which is way less than what I'm willing to put in on the stock if it actually pushes towards the upside. Here's when I started focusing on Tesla, because Tesla actually went for low of the day. I'm going to switch my charts shortly. I'm looking at the other screen, the other layout I have on my screen, but I'm going to move. I took Tesla short as well. successful. I was only in like 50 contracts on Nvidia, so I'm not too fussed about that. But I entered my Tesla position 425 puts for a breakdown towards 420, which was not like a playbook setup, but I know Tesla and how I know how to manage my risk. So on that Tesla trade, I was risking somewhere around $4,000 to $5,000 on that stock. I'm gonna switch my charts to Tesla shortly. Give me a few seconds. And actually, before switching to Tesla, I actually covered my Nvidia because Nvidia was trying to push down slightly. I still was like, it's looking really good, but because I just don't like entering two positions or managing two positions at the same time, Tesla was kind of a big size, 100 contracts. That was approximately for $47,000 worth of position, which is 50% of what I'm willing to put in on Nvidia, but it's still a decent size. I started focusing on Tesla, and after a few minutes, it wasn't a playbook setup anyways. I'm gonna cover that position for a small loss. Now, when Tesla was holding 429, I was like, okay, this is not gonna go. This is not even a playbook setup, and most likely on the 5 minutes, it's gonna close above 429 or maybe above 430 as well. So I covered my Tesla position just to focus back on Nvidia. If you focus on the order window above my face, I exited my Tesla trade at a fill price of 4.23, so I lost approximately $5,000, which is 10% loss of my position, which is what I expected. But now back to Nvidia, and this was really exciting. I'm gonna switch back to Bookmap and show you guys why I took this trade, where I took it, and why I sized up on it. Back to real-time gem, I entered my position at 9:45. This is 9:44 a.m. So what gave me the confidence to enter this position big size again was what happened near the low of the day. We held the prior all-time high to the penny, and we had absorption of the sellers by the buyers. Then we had buying momentum, action and reaction from the buyers, and we saw the reaction on the price action. We are pushing towards the upside. It's satisfying the basics of price action. Green candles high volume, red candles low volume, and then green back high volume. And that's where I entered my position 9:45. But why? There was another sign on the tape. I'm gonna play this Bookmap, and you guys will see in the next few seconds is at X8. I'm gonna lower it down to X4. Another big buyer at 192. This is what I call bid refill. So what does that mean? We had a refill of the buyers at 192. So because of what happened near low of the day, we had the bid refill right here, which is 37,000 shares, which is quite a big size for Nvidia compared to what we saw earlier on 12,000. 37,000, I'm like, okay, I'm gonna enter. My stop loss is 192. If we go for 192, I'm still okay with it. We might go for this buyer, but if we actually hold under 192 with a lot of weakness on the time and sales, I'm gonna exit my position. And you guys can see the tape completely switched here on the time and sales as well. I've told you guys that if we want to see some panic, I want to see 80% red, 20% green. Now we are seeing 80% green and 20% red. That is good for upside, along with this big buyer, along with the absorption of the sellers near low of the day. So everything is now joining together, and I'm thinking of everything in real time. And that's what I mentioned.
Pretty
right here as well
suspicious,
on
right? This past 5 minutes, like, pretty fucking sloppy. We'll say that, right? Especially like the Tesla thing.
Discord. 5-minute doji close right near prior all-time high. We'll see the 5-minute chart. We close like a doji right near the prior all-time high. Again, a doji by itself doesn't mean anything. But with the overall market context and tape reading, I'm joining everything, which is what I call the market DNA. And we will see. It's 9:44 at the moment. Let's increase it again. That's where I entered my position. And my stop loss was right around 9:45. I entered my position. My stop loss was if we come back under 192, I'm still going to give it a bit more room to see what happens. But if we actually close under 192, that is going to be my stop loss. Now let's switch back to the live executions because it's going to be fun to see how I actually bent forward to focus on what is happening on the day. This is where I entered my position at 192.5, right above that with a stop loss 192 worst case scenario. But based on my experience, it won't go there. But still, even if it goes there, I have accepted the risk. I entered 500 contracts, so my risk on this stock is approximately $7,000 to $8,000. My fill price was 2.14. Most likely, I'm going to exit the premiums around 1.95 or $2. So yeah, $7,000 to $10,000 is my risk on this trade. But now you guys have to look at my expressions. That's the amazing thing. When I go back and watch myself, I'm like, okay, this is stressful. This is definitely not healthy. And we had a bit of a pullback right here, but it was still satisfying everything. There was no weakness on the tape. So I was 90% confident that it's going to go again. Nothing is 100% in the market. But because of everything joining together, the market DNA, I still like it. So it was just about holding this trade for a squeeze above 193, which is what we got. At the moment, the only job you guys have to do is just focus on my expressions. I'm going to bend forward as well. Give me a few seconds. And right near 193, we had a bit of a pull. Last remaining 100 contracts, I was just like, okay, if it goes above 195, it's okay. Otherwise, I'm going to exit back under R6, which is going to be approximately 193.4. Now you guys can see my order.
Actually, I want to watch
my
his
position at
pivots thing.
955. Overall, making $50,000, approximately $49,000 on the Nvidia trade. But because I took a loss on Tesla as well, overall, I made $44,000 on. Most traders draw random support and resistance lines. Some use Fibonacci and others just guess based on indicators like the moving averages. But what if I told you there are hidden levels that institutions have been using for decades and they are shockingly accurate? And these levels are called Camarilla pivots. And if you actually learn what happens near these levels, it's kind of insane. These are the spots where the market often reverses on a dime or goes into those wild squeeze modes that catch everyone off guard. In this video, I will
Come on, we gotta make a notes section for this. Where's the other document? Camarilla pivots.
show you exactly what Camarilla pivots are, how to use them, and why once you start watching them, you will never look at intraday trading the same way again, which is what actually happened to my own trading. So what exactly are Camarilla pivots? These pivots offer a more comprehensive approach than standard pivots, because while standard pivots calculate just one support and one resistance, Camarilla pivots provide 12 levels, 6 as resistances and 6 as supports. Now, two things before we start. I will refer to these levels as Cam levels, just a pet name because Camarilla is a bit long name, and if I repeat Camarilla 100 times in this video, you're going to start dreaming about Camarilla. And for all the math nerds out there, don't worry about the calculation because your trading platforms handle this automatically. Focus instead on how to use them effectively because that's where the money is made. So now these levels are labeled as R1, R2, R3, R4, R5.
I mean, you probably should explain the math, right?
R6 for resistances and S1 through S6 for supports. The most important ones for my own trading are R3, R4, R6, 3 for resistances, and S3, S4, S6, 3 for supports. Enough of talking, let's see how to actually make money. R4, R6, 3 for resistances and S1 through S6 for supports. The most important ones for my own trading are R3, R4, R6, 3 for resistances, and S3, S4, S6, 3 for supports. Enough of talking, let's see how to actually make money using these levels. So as I mentioned, R3, R4, and R6 are the 3 important resistances for my own trading, and that's what I'm going to teach you how to use these levels to make money. S3, S4, and S6 are the strong supports. Now the zone between R3 and S3 is called the range bound zone, and these levels, R3 and S3, are called the reversal levels because the price tends to reject or reverse from these levels. We can see that at S3, we bounced, we reversed for a push towards the upside. At R3, we got rejected, but we also reversed for a push towards the downside. So R3 and S3 are ideally reversal levels, and the zone between R3 and S3 is called the range bound zone. So now what is the significance of this range bound zone? So that means if the price is in between the zone, I'm going to stop looking for breakouts because personally I like looking for momentum. I'm a breakout trader. But if the price is in between this zone, range bound zone, that is R3 and S3 intraday, then I'm going to stop looking for breakouts towards the upside or breakout towards the downside. I'm going to wait for the price to actually hold above R3 for a potential breakout, which we're going to talk about a bit later, or a hold under S3 for a potential breakout towards the downside. But in between R3 and S3, the chances of a stock staying in between this range are a lot higher than having a breakout. Talking about breakout, let's talk about the breakout zones now. So the zone above R4 or the zone under S4 is called the breakout zone. So that means if the price is actually holding above R4, the chances of having a good breakout are a lot higher than being in a range. Similarly, if the price is holding under S4, the chances of a breakout towards the downside are a lot higher compared to the stock holding above S4. So now just to recap a bit, because if you're learning it for the very first time, it gets a bit more daunting, I know. So if the stock is between R3 and S3, it's called the range bound zone. If the stock is actually holding above R4, the chances of having a good breakout are a lot higher. And if the stock is holding under S4, similarly, the chances of having a good breakout towards the downside are a lot higher. But now, all the nerds out there again, what is the zone between R3 and R4 and S3 and S4? So these are the zones I call the launchpad zone or the collapse zone. So that means if the stock is actually holding above R3 but under R4, I can look for my entries for a potential breakout towards the upside because that increases my risk to reward. If I'm looking for my entries right near R3, maybe at the retest of R3, based on a lot of other factors as well, which we're going to talk about a bit later, I call this a launchpad zone because if I'm able to score a really good entry near R3 for a breakout above R4 towards the upside towards R6, which we're going to talk about later, then my risk to reward is a lot higher than actually waiting for a hold above R4. And that is why the zone between R3 and R4 I call the launchpad zone, because in this launchpad zone, the market is gearing up. If the price actually rejects at R3, you will often see a clean reversal towards the downside, but if it pushes towards R4, that's where the breakouts and squeezes happen. Think of it as the market changing its engines. It either blasts off or it's going to pull back really hard. Now, similarly, we have the collapse zone, right? Because the collapse zone, the launchpad, the market is gearing up for a push towards the upside. That's why it's launching. But if it's going towards the downside, the rocket is going in the opposite direction. I call it the collapse zone. So in this zone, the market can actually see a clean flush towards the downside. And if it's holding above S3, we might see a reversal back in the range bound zone. That's why if you're looking for a trade towards the downside and if the market is holding under S3, that is called the collapse zone. It might actually collapse aggressively and you can look for a really good risk to reward trade, or it might just go back up and get back in the range bound zone. So now if you ask me, Jay, what should we do if the stock is in between the launchpad zone or the collapse zone, right? That is very important, how to make money. Now this depends on many other factors and your experience as well. A lot of other factors like tape reading, volume, if the stock is holding relatively weaker or stronger than the market, or it has some sort of news catalyst like earnings, you can find your entries with very high risk to reward trades near this zone. So for example, the stock is actually holding above R3 and you know that this stock is actually holding stronger than the market. So if the market bounces, for example, you are trading a stock called NVIDIA, everyone knows about NVIDIA, and QQQ is selling off. That means the tech sector is selling off, but NVIDIA is actually holding above R3. So that means if QQQ bounces, I can look for my entries because this stock is already holding stronger than the market. So that's why you have to look at other factors apart from these levels like tape reading, volume, relative strength or weakness, news catalyst, and all these other factors to look for good entries. Similarly, on the other hand, if NVIDIA is holding a bit weaker than the market, for example, it dropped from R4 all the way to R3, but the market is going up. Now I'm not going to look for my entries for a push towards the upside because this stock is holding relatively weaker than the market, and this is the zone where tape reading gets very, very important. The zone between R3 and R4, the launchpad, and the zone between S3 and S4, the collapse zone. Tape reading is going to give you an idea if the sentiment is actually bullish near R3 or actually bearish near S3. Now let's talk about R6 and S6. So R6 and S6 are called the exhaustion levels, and the zone above R6 and under S6 is called the overdrive zone. So near this overdrive zone, near these levels, the price often reverses aggressively. It's either the high of the day or low of the day, or the price gets into squeeze mode. So by that, what I mean is that sometimes what happens, the stock is stuck between R3 and S3. Eventually, we bounce off S3, we hold above R3, we get into squeeze mode, we are holding above R4 into a breakout zone. We go towards R6, that is the high of the day, approximately approximately R6 and then we reject aggressively. This is the first scenario. The second scenario can be that the price actually opened near R3. The stock is actually opening near R3. We have a push towards the upside. At R6, we go above R6, we retest R6 and it gets into squeeze mode and it defies all the laws of technical analysis, and that's where the squeeze happens. For example, a stock moves approximately $10 on an average on a daily basis, which is called the ATR of that stock, average true range of the stock. Now, if the stock is actually holding above R6, it might actually move $15 or $20 for the day. So if the stock is actually holding above R6 or holding under S6, the chances of going into squeeze mode are a lot higher. Now let's try to understand this with two examples. The first example is the stock is actually opening near S3. We open between S3 and R3. We make a new low of the day near S3. We bounce from S3 because that is the reversal level. We hold above R3. Then we have a breakout towards R4, a breakout above R4 for a push towards R6. Now in this case, for example, we have to look at other factors as well because these are just levels. You need to be good at your own trading as well. So for example, the ATR of a stock is approximately $10. And from S3 to R6, it has already moved $12 for the day. So in that case, the ATR, that is the average true range of the stock. That means on an average, on a daily basis, the stock moves $10 for the day. It has already moved $12. That means the chances of seeing a reversal near R6 are a lot higher compared to a push towards the upside or the stock going into squeeze mode. Similarly, let's take another example. The stock is actually opening near S3 right here. We have a hold under S4. We get into the breakout zone. We have a breakout towards S6. Now what happens? Let's say the ATR of this stock is also $10. The ATR is $10. But it has only moved from S3 to S6. That means it has maybe moved like $5 for the day, right? That means there's a lot more room for the stock to get into squeeze mode. And that means you want to see the tape reading around S6 and R6 because if the stock is getting into squeeze mode, the tape is a lot different now. That's why if you have been reading the tape for a while, a hold under S6 means we are going into squeeze mode. And in this case, the stock might actually move $20 for the day, which is 2 times the ATR. And if that is going to happen, you will see a lot of panic on the tape. And that is why tape reading is very important near S6 or near R6. Similarly, if the stock is holding above R6, we open near R3 right here. We open near R3. We have a push towards the upside. We hold above R4. We have a breakout towards R6. And the stock has only moved, same example, $5 for the day. And the ATR of the stock, ATR, is approximately $10. That means the chances of the stock going into squeeze mode are a lot higher. But now tape reading is going to help you. On the tape, if you're seeing a lot of green, the big orders are hitting the ask price, right? The shorts are getting squeezed and people are just interested in buying, then the chances of the stock going into squeeze mode are a lot higher compared to a reversal at R6. Now here's something I need to make crystal clear, that these levels can feel magical when you first actually see how often the price respects these levels, but you can't trade them blindly. Trading is always a combination of technicals, market sentiment, and news catalyst, and above everything else, what creates the market? It comes down to the buyers and sellers. Buyers and sellers are the people who create the market. And trust me, buyers and sellers can be more irrational than you can ever imagine. And that's why the stock can go into a squeeze mode above R6 because technically speaking, the stock should not move more than $10 for the day. But we all have seen that stocks can actually move $20 for the day, 2 times the ATR or 3 times the ATR. A setup that looks perfect on the chart can fail instantly because of a headline, earning surprise, or pure emotion in the order flow, and that's why tape reading is also very important. Use Camarilla pivots as a framework, a way to understand where key battles might happen, but always remember, it's not the lines that move the market, it's the people. It's not the Camarilla pivot lines or any lines that you draw based on the Fibonacci levels or even the moving averages or any indicator. What moves the market? It's the people, the buyers and sellers. And personally, that is where my edge lies, combining everything into what I call the market DNA, studying price action, tape reading, and the behavior of buyers and sellers around these levels, which is what I call the DNA of the market. Buyers and sellers are what creates the market, and these are the DNA of the market. If you want to learn everything I know, join the waitlist for the Summit Academy by clicking the link in the description box below. I have personally condensed my 7 years of experience into one academy launching in January 2026. And we are offering a special launch pricing that's honestly a steal. I invested about 7,000 below resistance. So levels will overlap among all traders, but the rest, all the levels are going to be subjective. And that is why I can't stand when gurus say mark your levels on the higher time frames because all the levels are going to be subjective. Instead, I use what I call levels of significance along with these secret cam levels. We will cover levels of significance in the next video, so subscribe and click the bell icon to get notified when that video releases. And now the next step is to actually how to add these levels to your trading platform. So I'm going to give you guys 2 examples. The first example is going to be of TradingView. The second example is going to be of Dash Trader Pro, but you can follow the same steps on any of the platforms that you guys use personally. So let's take a look at TradingView because this is one of the but this after hours. So Camarilla pivots are going to be adjusted as per the after hours session. And if there's not a lot of movement in to change it to game plan first and then look at these levels. What are we doing around these levels? So Tesla has been rejecting this 440 zone for a while now, which is a major resistance on the weekly chart. Now we might actually close like a doji on the weekly chart because it's been rejecting from 440. So intraday, I'm going to look for downside moves, and especially if we make a new one day low. So that means the prior day's low on the stock is 429.03. If we get under 430 and if we make a new one day low, we might actually see a nice sell off. So that was my game plan without even looking at the Camarilla levels. And now how to execute based on the cam levels? I'm going to open the 5-minute chart. You guys will see the cam levels right here. As I just discussed, S4 is the breakout level. We actually opened right near S4. We had to pull back to S4 and then we sold off. I was able to catch this move towards the downside. Then we found some support near S6. We can see it's not exactly, it's a zone. We had a double bottom right here near S6, held S6 again, held under S6, went into squeeze mode. We had a quick sell off right here and then pushed back up. And now this level, which is the S6, started acting as resistance. So in short, this was a breakout play. We were holding under S4. We were in the
At the end of the day, it's just arbitrary levels that you're seeing if they have a reaction or not. I mean, they're not completely arbitrary. Like, there is a calculation behind this, but like you said, right? Whether you're using like fib levels or whatever it may be, it's just something that you can strategize around.
breakout area, we moved from S4 all the way to S6. Eventually, later in the day, we had a squeeze under S6 as well. I actually recorded this session live. I made $8,000 on this trade, which was approximately 50% return on my investment. If you guys want to watch that video, I'm going to link that video in the description box below and somewhere around here. So that is actually live trading, and you guys will be able to hear my thought process, how I'm executing around these cam levels. Now let's take an example of NVIDIA, because I don't want to give all the examples of Tesla, right? So NVIDIA was on my watch on this day, which was 22nd of September. We also had news on this day around 12 p.m. mark that NVIDIA is going to be investing $100 billion in OpenAI. I already had my alert on this trend line, so that means I had a higher time frame setup. On the weekly chart, this stock was looking amazing. So if you look at the weekly chart, this was a Monday, so this was candle. This candle just started on that day. The past week, we had a doji right here. The week before that, we had a strong green candle followed by an inside bar on the weekly chart. So I was looking at the stock anyways this week for a push towards the upside. So that is my higher time frame setup. If you go on the daily chart, I had my alert on this trend line. So let's see what happened intraday and how you could have executed this setup even after news catalyst based on camera levels. Let's go back on the 5-minute chart and see what happened. We were consolidating the whole day. Let's actually go back on the 1-minute chart, because this was a news-based play. You actually have to go on the lower time frame 1-minute chart to look for good entries and exits. So the whole day it was consolidating right here. I actually made approximately $17,000-18,000 on Tesla on this day, which I posted again a video, live trading video. I'm going to link that video as well in the description box below and somewhere around there. But on this day on NVIDIA, I got another trade. I posted that video around 12 p.m. I got this trade, and overall I actually made $30,000 on this day instead of making $17,000, which I posted on YouTube because this was an afternoon trade. So what happened? We had this news. I missed out on the first push towards the upside, because after the news, it's very difficult to catch the first move towards the upside, because this is most likely algo driven, right? So there are like algo searching Twitter and X for all the news, and whenever the news kicks in, these are the first round is the algo. For a human trader, it's very difficult to catch the first move towards the upside or downside based on the news catalyst. But then see what happened. We actually made a new high of the day. We pulled back to R3. That's where I entered my position. We held above R4, we held above R6, and it got into squeeze mode. So this was a really good entry because we had news catalyst as well. We made a new high of the day on the pullback to R3. That's where I entered my position. And the fact is that the premiums that I entered at 1.5, they went all the way to $6.5. I actually covered my position making $10,000 to $11,000, but this was a potential $50,000 trade for me. But yeah, I should have listened to my own advice that once it got above R6, it got into squeeze mode. I had no reason to exit. This doji, 1-minute doji on high volume, was a good reason to exit, and this was a prior all-time high as well, 184.48. We actually made a new all-time high, faked out all the buyers, chasers who entered right here, and then we sold off, and that was a high of the day. So this was a really good exit. I should have listened to my own advice of expecting a squeeze above R6. So I gave you guys 2 examples in this video. I can give you guys plenty more examples, but this video is going to be 1 hour long, and that is the whole reason for this.
This guy is like multiple times talking about how he's making the same mistake and then like not following his rules, blah blah blah. Very interesting, right?
Have more than 20 hours of education material. But the main goal is to understand that you need to have a higher time frame setup. Just looking at cam levels intraday when the stock is
I don't know if this guy's gonna make it to whale status doing that.
You're going to overtrade and drop your account. So you need to have a higher time frame setup, and then you have to look for the selling ranges, buying ranges, collapse zone, launchpad, overdrive zone towards the downside, upside. You have to look at these zones to look for good entries and exits. All right, if you're still here watching until the end, you're my kind of people. So let me drop a hidden gem for you, only for people who stuck around until the end, and it's going to be a game changer for you guys. So everyone marks S6 and R6 as just like extreme levels. That is what the definition says. But what traders don't pay attention to is the distance between S6 and R6. And honestly, that range, the distance between S6 and R6
happens. Not really, right? Not really.
It tells me a lot about.
Like once, twice, sure. Like 30 times in a row, like you have a problem that you're not addressing.
That day. Can we expect a breakout day or a range bound day consolidation day? So let's take 2 examples. In the first example, the distance between R6 and S6 is, say, for example, just like maybe $10, right? $10 is the distance between R6 and S6, and the ATR of that stock is, say, $15. The ATR of that stock is $15. And in the second example right here, the distance between R6 and S6 is very wide. Say, for example, the distance is approximately $15, and the ATR of the stock is approximately, say, $12. So the chances of that stock having a breakout are very, very high on the days the R6 and S6 are very close.
I was at 5Gs today and got greedy. Yeah, but that just means that you didn't plan enough. Like you're not planned. That's also what that means, which is a mistake.
Close to each other compared to very wide apart. It's actually common sense. It's very easy because it's going to take the stock a lot less effort for a breakout above R6. It might only have to move $5 for the day for it to come back above R6, retest R6, and push towards the upside, something like that, right? But on the other hand, if the distance between S6 and R6 is very wide, and if the stock is moving S3 to R6, maybe it has already moved $10 for the day because the distance between S6 and R6 is very wide. That is why you guys need to understand, if the distance between R6 and S6 is very tight, that means the range is very tight, you can expect a breakout day. And if the range is very wide, you can expect a consolidation day. And that's what happens. Sometimes when you know that the stock has been consolidating for a while, for example, the stock is just stuck in a range, you guys will see that slowly and steadily every single day the cam levels are going to get tighter and tighter and tighter. And the day we finally have a good breakout, the cam levels are going to get very extended. And that is why after a good consolidation period, and if the stock is holding near cam levels, I can expect a good breakout. And after a good breakout day, we might see some choppy price action, consolidation price action, because after a good breakout day, the cam levels are very wide. That means the distance between S6 and R6 is very wide. Most likely the stock is going to be stuck between R4 and S4 because this range is just consolidation range for that stock, and it's the safe zone for that stock after a good breakout day. So now next time, just don't look at the levels, actually look at the space between them. It's going to give you a lot more insight if you can expect a breakout day or a consolidation day. That's a little bonus insight only for those of you who stick with me until the end of this video. That's why now you know that you have to watch all my videos until the end for some cheat sheet and bonus tips.
I mean,
now,
if he explained the math, we'd be able to know that, right? Kind of like any other indicator that does the same kind of thing. It kind of captures volatility, like Bollinger Bands, for example. I'm curious if he's ever tried any of the other pivots, because this is like one of many. Also, never explained this whole statement, right? The secret level institutions use. Highly suspicious of that statement. Anyways, enough of that. Interesting nonetheless. I trimmed and it ran, and I was hesitant to trim again. I mean, same response, right? I'm not planned enough. and even if you're like, let's just say you're in the scenario where you didn't plan out enough in advance, there should still be like some kind of protocol, right? Like I already know if this thing reverses, I already know I'm drawing my fib and I'm starting to shave out on these candle closes below these fib levels. There's no thought is no thought required. Options is a whole different level of, you're just making excuses, right? I'm not even gonna read the rest. If you want to make excuses, then make them, but if you feel that way, then don't trade options. But don't get back money and then say, oh, it's too hectic. Is this thing gonna start going? How's everything else doing? Oh. It'd be nice if we reach this zone before we go to bed, but might not. Probably start setting some alarms in advance, yeah. Put one at the VWAP. I'll put one at the single prints. I mean, it is though. I'm not saying I don't enjoy it, it's just more difficult to plan for. Don't know price points until the market opens. What does that mean? What do you mean? What do you mean you don't know price points? Are they not all like on the chart? Or am I not understanding correctly? Like the value of the option. Close that. How's the order book looking? Where is the order book? Did I close a tab? No way. Oh, I was about to say, fuck.
Marco's trade. With a hat. Pepper look mad. I'm up 6 figs off a Farcoin bag. Yeah.
There's another massive order up here. Come on, bro. Need something more chill. Actually, let's leave it on this. The bid-ask spreads are extremely erratic at open. I'm gonna don't trade at the open, right? Like, I don't like all these, everything that you're saying has like some solution to it, not some like a solutionless issue. Oh no. What day is it today? I'm losing track of time. Wednesday tomorrow. Oh yeah, tomorrow's like the ADP labor data. Let's retrade them. Grab 34% premium at a gap up open. mean, doesn't seem like anyone else that was doing that has that problem. Like they're all kind of planned and prepared ahead of time with their levels. Core PCE. This is loud as hell. I was sold 10 at 150. Second later was 175. No, I mean in terms of like the chart, not the options price. This thing's about to die. Damn. Can we go? Can we go here or no? Or no? My MacBook's about to die. This thing's like frozen. The chart only somewhat reflects the options pricing. I mean, yeah, but like at the end of the day, like, this is what you're trading, regardless of what the options price is gonna be, right? We need to charge this thing. I'll be back in like a minute. Can we get past this level here or no? Or no? How big is this order? Interesting. Cause like you know, I can tell you for sure, right? If I'm in like a low time frame scalp trade and I'm watching this thing, and I've taken partials, like I already know what I'm doing. If I'm not gonna be on my computer, I'm putting a trailing stop. If I'm here, I'm like walking it up with each high or low. If I haven't hit my main TP, I'm closing out with a fib on the retrace. or just potentially like stopping out the whole thing on the pullback. Like the multiple different protocols to approach taking profit and not getting greedy. So in the moment, nothing to freak out about. Like, I already know what I'm doing. Just kind of going through the motions at that point. Because the stability is different. Paper trade option sometime. Fair enough, fair enough. Fair enough. Is fair enough. Seemed like that guy was doing the same thing though, right? Like that I'm describing. The exact same price, but the liquidity and bid ask gets you a very different fill. Price of the underlying could be the exact same price of the underlying, but the liquidity and bid ask gets you a very different fill. Interesting. Let's look at Tesla. Like, because I mean, from looking at this, it's hard to see like how can these things not be liquid, right? People are putting in like fucking 20,000 contracts, etc. Just seems odd. And I guess a lot of these aren't 0 day to expiry though. I'm not sure if that's what you're trading. I think you said you do weekly. The price is basically up to interpretation by the price is opening. Like, don't all the chains use like the Black-Scholes model? Interesting. Usually a quick back and forth to find price stability. It depends. I mean, that the other guy was doing like for instance, what was his face? The guy that was explaining the hammer candle was like doing it 15 minutes in. The guys are not stable by that point. As opposed to like the opening minute.
Marcos in the B-side. We don't chase pumps, fool. We fade 'em. Bump the math, Pyro print.
Skirting for the beat, dude.
Treetop faders, catching that top. You loan too early, we letting you drop.
All time the open is the highest price and option will trade at all day.
I don't chase no bounces. I don't
Even if the price slowly goes up. I'm talking about options I have and hold overnight.
red like a set on flame. Stop hunt clean, who you think run game? Bugatti parked on Rosecrans stripes. Penthouse high, but the wrist on ice. Ops go long, we laughing back. Got 'em smoked out.
Mm.
Pack. Ran my fibs, let the chart drift slow.
Yeah, that is true. What does like the liquidity curve look like in terms of options?
Hit that zone, now your margin broke.
Like suppose this is like 0 date expiry, and let's say this is like 1 month out at the start of a new month. Like what kind of shape is it? Is it like this, or like this, or like, you know what I mean? Or are they all relatively equal, perhaps? This thing about to go finally, or what? Or what?
Running fast, we lay that plate. SL hit, that's chain reaction. You bought fake highs, we fade with passion. B-chain swing when the field get placed. Double R drift like it's past your pace. You beg for trend, we pray for range and bleed the top.
Depends on the strike and expiration.
Why red? I said that's clean. Red Rari deep like treetop lean. Back this red, but the profit's green. B on my belt, but the chart's
Hmm.
lean.
I mean, yeah, it makes sense. I mean, the logic of that makes sense. Actually, out of curiosity. A lot of stocks have very liquid options change and they suck to trade. Oh yeah, but like I mean, I figured most people would ignore that, like knowing that that's an issue ahead of time. But yeah, it makes sense. Still makes sense. I mean, that's what that guy was saying. What do you say? Like Netflix and what else? Some other surprisingly large cap was the same way. Options on leverage ETFs, interesting. Futures swept. Okay, okay. About to go. Any of the Mag 7 are pretty good. Yeah, you can typically, you can like called. Just check the like the highest volume options chains. Well, interesting. 'Cause I'm reading about the. Like trading futures versus options. Like seems like futures is the better tax option in the U.S. Leverage options. Leverage ETFs, right? Double leverage. Yeah, I mean, yeah, makes sense. This thing just died, are you kidding me? Let me open the book map for CME. Okay. Contract for Q shares. Slaps redirection hits. What if it doesn't though? What if it does not? Options you kind of know your max loss. Yeah, yeah. Well, I like them out of all the options traders. The only one I really liked how they traded was like the only options whale. You know, is it not funny to you that the only options whale on all these things is the one that swing trades? All these 1 minute scalpers are like don't trade any size. And that's the case with most traders.
exhaust. You hold hopes, I hold the pulse. Wrist on gold, book on stealth. Draw down low, account got health. They crowd forms, beg for help. I fake candles, print from wealth. Ain't no demo, this real depth. I don't bluff, I just press left. You see a wick, I see a check. You ride fear, I ride finesse. They think it's test, but it's all real. Live, big trade hit, bang. Then I sign deals, done. Stress on charts, them. I'm just chill. They can't believe it. Nah. The math too ill. They think it's fake. Nope. It's just that tight. That stop too clean. That entry's light. They said you semi. I said you dreaming. You stuck in beta. I'm out here scheming.
I lost my tab.
This ain't sim. This ain't look. This is math. Marcos.
I still gonna kind of scale my bag. Sell some on the pops and rebuy to lower the cost basis. This is generally a 2-week window movement. Yeah, there has been no real like most of those things that I've watched, because like I've seen most of them now. Like that was one of the only few ones left we haven't seen. But almost everyone on there is like a low time frame trader. There was like one person that traded like the weekly, and then one guy had some like super obscure setup. Like it gives him like 2 to 3 trades a year, like extremely high win rate. And everyone else is just doing like the same kind of like low time frame stuff, just like order flow, trading, scalping. Or like the other guy doing like the 15-minute orb. Should have dumped and rebought. I mean, whatever, in the past now. I'm curious, cause what's the one guy mentioned? The Notion. Cause I use this when I used to like, have a job, but I never considered using it for trading. I just like journal things myself in like a big spreadsheet. Because when I first started like doing this journaling stuff, I had like the 1 month free of Tradezilla, and after that I was like, fuck this, I should do it myself. Where's this thing? Damn. Okay, we gotta already do a juice box here. Get some of this lower time frame data.
They study in the players, but the math too clean. Let's go. They envy the feel. I'm deep in the charts, got that sniper skill. I don't chase no hype, I just sit and chill. Nah, they moving with fear. I move with will. Facts. I'm floating above them. That V-Walk thrill.
Interesting.
I trap they stops,
sand. Big orders led from the top to the land. They clicking in fear, I type with one hand. Extensions long like the clip on the stick. 7/8 tap, then the profit came quick. They plot on my downfall, still I uplift. They tryna front run, but I'm running the script. Ready to fill, yeah. I'm deep in the charts, got the sniper skill. Scope. I don't chase no hype, I just sit and chill. Post it. They moving with feel, I move with will. I'm floating above them, that V-Walk thrill. I trap they stops, then I press for the kill. They draw fake zones, I bend the field. They team look shook, I just broke they shield. Math hit me like a Bentley swing. Cuban link heavy when I step
It goes up here, right? Where was this thing? Back when I wasn't streaming still, where was it? Oh, we won the 4 hour, I'm stupid.
They don't want smoke, they just want a pill. But Marco's cooking filet with the steel. Envy the feel. I'm deep in the charts, got the sniper skill. I don't chase no hype, I just sit and chill. They moving with feel, I move with will. I'm floating above them, that V-Walk thrill. I trap they stops, then I press for the kill. They draw fake zones, I bend the field. They team look shook, I just broke they shield.
I mean, in terms of a juice box,
She don't move off vibes now. She move off Fibonacci. Golden pocket, baby, come ride the retrace with me. Oh. I see you watching from the 0.5, but I know you want that deeper dive. I don't just move for any touch, but baby, you rate me just enough. You wait for pullbacks, I love that pace. You trace my curves like a fairy trace. I drop it low, right on the zone. That golden pocket, I call it home.
tricky. This is a bit tricky. This is a bit tricky. It's pretty late for the long, right? Pretty late for the long. Like, if you didn't, like, we've been covering this for a while. Like, we talked about this, talked about the pullback here, breakout up here, blah 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 blah, right? multiple opportunities to like get in and on either scalps or swings at this point. Yesterday's view up was like here, right? There's like a big liquidity cluster like right here at 90k. Like it ends at the first single point, and then there's like another massive cluster down here. Not massive, but like these are the only two notable zones in terms of liquidity on perps. And the problem with this though is like it'd be pretty bearish, right? It'd be pretty bearish if we'll say this, if we tap this zone and start going lower, and we come all the way down to here, a little bit suspicious, right? A little bit suspicious. It'd be a bit like a sign of weakness, essentially. Because this is like a pretty critical zone to be fighting for right now for both teams. So, because like if this gets lost, then like this 98k box is like in the scope for sure, like certainly, right? And the next major target one's gonna be looking at. And it also like setting up like the whole failed auction retest on the higher time frame. Ding 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 ding. So like you know like bears losing this can lead to like a quite the aggressive move to the upside, especially given how open interest is looking in terms of all these shorts to squeeze. Not only that, but we have an outside day today. So if we come back and start to lose a value area high from yesterday and do a bearish retest into the zone, it's like setting up this whole trade, right? The rotation to the value area low to like grab both sets of liquidity. And a lot of people are gonna be eyeing that trade, right? How are the indexes doing?
I wake up fed, your candle closes my Rolex thread, and your stop loss just pay my spread. I don't guess, I don't pray, I do math. Golden pocket entry, run it back. Top long, but I'm sure that's your path.
Yeah, I'd be careful with that, especially if this starts to like roll over tomorrow. Like come back to like retest this like BWAP and whatnot. Get these single prints. So a little suspicious with this like all this like shit building down here. Also in terms of the options data, how's this looking? Cause like, there's like a massive like Gex level up here that we cannot get past, and I think like the lower boundary of it was like around this region if I recall. Six, 7, 5, and 6, 8. Yeah, so the bottom of it's like right here, right? Interesting. Yeah, so keep that in mind. If we're trying to do this pullback as this is starting to do that as well, to kind of more confluence to like make the rotation downwards, like this whole thing. So in terms of the math, what's this? This is like the 382, right? Well, let me see how many longs are open from up here. Yeah, looking really suspicious, right? Looking really suspicious pro pullback. Because a lot of people market smash this Breako this level, so there's like a lot of longs here, and there's a few more from here. So we'll kind of leave it as this, right? Just like kind of retest yesterday's VWAP, the 382, and kind of go. But like I'd be careful with this, like, because you're kind of getting set up to get run over potentially. So like maybe wait for some like higher time frame confirmation before getting in on this. On the flip side, there are a bunch of hidden bull divs already printing on the CVD, and like we will get them on these these oscillators as well. Like even if you pick like this pivot, like we're almost already there. So by the time we start to pull back, like it's gonna be having the hidden bull divs. Not gonna have the regular ones, so keep that in mind. On the lower time frames, you might though, right? If you go to like the 5 or the 1 or the 3, and you kind of anything in this range, kind of try and play an entry like that. Yeah, just be careful. Just be careful. Be careful. A little bit suspicious. Ideally, we don't want to be pulling back here. We want to like blast off and then retest the zone and kind of go. Just kind of like 382 liquidity grab. And if not, just be eyeing this zone, right? Kind of finish the full day rotation and get in on the move afterwards. Like kind of typical box, clean these poor lows. Same story on CME, right? One sec. I'd be careful with this though as well, right? Because like how we're saying, this would be like pretty weak if we came all the way back down here. Like you definitely want to be seeing some like strong edge in the order flow and want not to be taking this. Because like yeah, sure, like we talk about this being potentially the low, but it's not guaranteed to be the low, right? There's a world where we end up coming down lower and tapping this one more time to actually retest it for real. No free lunches in this game. Also, we've got some pretty aggressive longs opening. Kind of keep that in mind. Let's say like the full day value rotation liquidity grab. And this stuff we've already talked about, this like higher time frame stuff already covered, so I'm going to kind of review that. And same thing with the upside. We kind of talked about getting in on like the retail flipping this level. Kind of everything on the higher time frame has already been covered. Plans have been previously discussed. A bit awkward though, a bit awkward. Like ideally you're already in at this point. Like trying to get in on this like flip even is not like the greatest of setups. Which is okay, right? Whatever. If you miss the long, that just means the short opportunities are coming, right? Not the end of the world. Always another trade. The shorts, though, the shorts. So where things get interesting with the shorts. Because it's definitely a world where we SFP this high. Like, assuming we even go up from here, right? Could just reverse right now. Doesn't seem like it so far. Like order flow still looking relatively strong. And we still haven't grabbed like the liquidity, right? Like most of the liquidity is at the purple line. And we're spending a lot of time up here too. But I'd be definitely looking for like an SFP right here, right? Probably the main thing I've been looking for right away. Same with like CME, come finish cleaning the high. Just ding. I want to just say like SFP, what do we call it? We'll call it like 93.7. Doesn't have to be an SFP either, right? Could be like any kind of like reversal forming here, but like this is obviously like the first zone people are gonna be watching. A bit suspicious though, a bit suspicious. I think everyone's gonna be watching this zone and probably higher, right? I haven't checked out the sentiment data today, but I'd imagine everyone's yapping about this zone. Everyone knows what's good at this level. So I won't be surprised if we come higher before kind of seeing some kind of pullback. Realistically, we're probably going to come clean this high. Or tap the naked point of control at the 786. And maybe even have like some like exhaustive move up to the 886 to clean this poor high. So yeah, just be careful, right? Sure, if there's like a trade forming here, like take it. But like, you potentially a world where you're getting in front of a moving fucking train, right? So like, do not get ran the fuck over trying to like, take these things. So kind of just say the 98k liquidity grab. And then like the other like levels you mentioned up here, the higher fib levels. Because people are gonna start FOMOing into this too, right? Like the higher we go, the more FOMO we're gonna start seeing. And to the downside. Whether we SFP this high, like, and let's just say you don't take the SFP, but let's just say we do some kind of like 3 drives up here, or some like a head and shoulders type thing, or whatever, like some kind of failed auction at the yellow line, right, the top of this like value region. This thing ever fucking loads. Like this is this volume node. And you happen to not get in on any of those, then like once that confirms and prints and starts like breaking structure lower, and get in on like the loss of the VWAP. Or like losing the value area high, probably gonna be your best bets. Only problem with the Valeria High though one is like the fact that like the box that we were talking about in this region, you're risking being a bottom short at this point because the world where we reverse here like is definitely like in the cards. So if you're like waiting to get into short all the way down here from up here, you might get in and then just yeet later. So keep that in mind. We'll just say flipping the daily VWAP after grabbing the red box into like bearish retest of the Valeria High. And then everything above that we've talked about. Like all these higher levels and like the 100k plus. Already been beaten to death at this point. I'm just kind of copy paste this garbage. That should do it, right? That should do it. Kind of covers everything. Yeah. So shout out to that. Shout out to this trading so far, right? We got the low pretty good. Hedged our position up here pretty good. Good call to close out the hedges down here and profit, or else we would have round tripped the whole thing. So far seems like we're going to be hitting our target here pretty soon. Might have to be awake for a while, unfortunately, because the ETH thing is quite far away. So I'd like to see the reaction up here to determine what I'm going to do with the ETH. But that's just part of trading, I suppose. What's your thoughts on Nvidia charts? I wasn't expecting BTC to come back up this far this quick. I mean, it makes sense, right? Makes sense. Like everything that's happening so far. Especially like this move, like what really happened here in this move, right? When you really think about it, it just stopped all the longs from this whole sequence of price action, and then just ripped on them right after. Also, it happened in the middle of the night, technically, right? Usually how it goes. Kind of stops everybody out, and then just goes without them. While also front running the order book, right? All the people that had the orders in the spot order book down here, then had their orders here afterwards. Like here, they got front run, and here they're getting front run again. By design, right? By design. Caused FOMO. No coincidence. Same with no pullbacks, right? Like no pullback at all here, very little pullback here. Same thing up here so far. Nvidia. I mean, I wouldn't really. Oh, whoops. I mean, in terms of getting a trade right now, probably wouldn't entertain it personally. probably would not be entertaining it. Like, what was the math on this? Yeah, it would have been like this 886 naked point of control, right? Maybe it would have like given it time to get the poor low, perhaps. So a bit late for the long, and they gave you like the retest too. They gave you like a perfect retest at the bottom of like the value node. So in terms of a long, a bit late, and also for the short, a bit like there'll be a short opportunity up here for sure. Especially given the fact that we have like an unfinished high up here. The only problem with this is like you start to get to like low volume up here. So like this kind of zone's looking like pretty juicy. But also world where it starts to just blast off from here, kind of do this kind of thing. So I'd definitely be watching the order flow. But like yeah, I'd be like potentially shorting this, potentially shorting like these highs getting sweeped. After that, I probably wouldn't entertain it because most likely gonna get all-time high. Like maybe it has like a short-term reaction up here, kind of like, whoops, I just do. It comes up here, like does like a pullback like this for a short, then it just goes again. I've got a 195A for December 12, 195. Yeah, I mean, there's a lot of time. It'll be interesting to see what happens at FOMC. It's creeping up. How many days do you have left? 5 days, right? 5 days. We're so close to our TP. Come on, bro. Come on. It'd be such a nice, satisfying way to go to bed. It's right below the purple line. I'm gonna lower it just a smidge actually, just to make sure this thing gets fucking hit. Oh yeah, I guess because they don't consider Oh, I'm stupid. It is 7. I was looking at 5 bars because I forgot that the trading sessions they don't have like the weekend on here. I'm actually brain dead. That's how you know I'm tired. Actually, I'm always brain dead, tired or not. Who are we kidding? Maybe I'll start trading some of this stuff like on leverage, right? The thing is, it's so illiquid. I mean, I didn't try Nvidia, but the stuff I was trying earlier today seems so like illiquid on here. Pretty smart dude. Subjective, I suppose. I don't know if I'd say that. It's not like I was in university at like 10 years old. Like, inventing shit. I think we're all pretty smart. Did we miss anything on this Nvidia thing though? I guess this would be like not a bad potential like long too. Not the ideal price action though, right? Because at that point you're basically doing some like bear flag. Just like come down, then just like. How are the oscillators looking? We're also like not counting for like the morning session excluded. Pretty big gap up here where your thing is, by the way, so kind of helpful in your favor as well, like, right? Pretty big gap at 195. I'm an actual contrarian. Yeah, I am. Definitely am. Well, it's not even contrarian. It's just like. Anyway, I guess it is. But more often than not, I'm just asking questions to make sense of things. Like, what's the book? I mean, I've always been this way, but there's a pretty interesting book on it, like A Skeptic's Guide to the Universe. Pretty interesting read. So it's like also like pretty easy to like fall into like biases of things, especially when you just take people like at their word for what they say. And it's not even that like people are like out to get you, like lying to you or anything like that, but like there's many cases where someone believes something either because like they're misinformed themselves, or like someone misinformed them and they're not even aware of it, and then they tell you it, and then like you just believe what they say because like they're a figure of authority or a friend or whatever it may be, and then you go on like believing this like incorrect thing as well. It's always good to like try and understand like why things are the way they are. Kind of like I was saying in that video, actually, like just asking why all the time. That's cool though, I like my opinions to be challenged. People are generally kind of dumb. Yeah, it's like good, right? It's a good idea, because like not only that. Like, I don't know if you watch like the recent Elon Musk podcast with like that Indian dude. I don't know what his name is. Or was it from that? Was it from that? They're quoting Plato. I think it was from that. Maybe it wasn't. Maybe in another interview. Whatever. They're talking about how like you don't want to like debate things necessarily. Actually, no. It was one of these. It was the Indian guy that was the trading interview. He was like, I don't want to debate things. I just want people to poke my blind spot, help me find blind spots. So it's not about like who's being right. It's just like giving people the ability to think about something they didn't think about, whether they agree with it or not. At least they considered it, as opposed to not considering it at all. We're so close to this TP. It's $100 away. 100 doll hairs. I'm gonna take a piss. Hopefully, it gets hit by the time we're back. Yeah, the more perspective, the better. Yeah. Plus, I mean, I have a sneaking suspicion that being a contrarian in the world of traders on social media and whatnot is probably beneficial. Seems like most people don't really know what's going on. Plus, it's just like in the way the market works, right? Like if most people are bullish on something, terrible B. Don't know why I drew it that way. But most people are bullish, and there's like no one left to buy, right? So like the probability of going the other way is higher. Same thing with if people are all bearish, no one left to sell. Probably plays well in that regard. Tricky though, because at the end of the day, like, consensus in the market can be very powerful regardless of if it makes sense or not. Like, very tricky game. Like, you never have perfect information. It's so close, it's so close. Whatever, I mean, okay, in terms of the trade, if we like kind of swing this, or if we don't get here pretty soon, I'm probably just gonna like leave it hedged, or like shave it manually and then leave the rest hedged, because I'm gonna be sleeping, so I'm gonna be like stressing out about what's going on with this shit while I'm in bed in my dreams. Same with the ETH thing. Same with the ETH thing. I do need to sleep, unfortunately. Sentiment is a big component. Yeah, I collect a bunch of sentiment data for that. Quite useful, honestly. Very useful, actually. Very useful. I mean, these are the trades so far. Brainless coming in. The juice box was earlier. These are the trades. Yeah, the ETH thing's a bit suspicious, because this TP is quite far away on the ETH thing. So I'll probably be awake for a bit reading, kind of see how this goes. But so far so good, right? We were kind of we've been trying to swing trade like these larger time frame moves for a while, since like August basically, and then never got any of them going. This is the first time we finally got one like going for real. So far so good, right? It seems like we're gonna beat the July trade at this pace. Mega juicer to end the year. Hopefully. Yeah. Just wrap things up and get moving out of here. Definitely at a serious resistance point. How's Bookmap looking right now? It's mostly done. Most of the orders are gone now. Like, cause the thing is, like, oh no, they're back. Damn, it just updated. This is the spoofer though. This guy's just spoofing the order books. I wouldn't look at this too seriously. Like, there was like a shit ton of Bitcoin up here, like on this level, and we were just kind of chewing through it slowly, like boom, 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 boom. We finally got through it. The only one left now is this big spoof, but I don't think they're gonna get filled. The next big wall is at like 945, so I suspect this is gonna get got. Especially because like there's a bunch of in the upper part of this red box is like where most of the liquidity is, and all like the high leverage positions are up here as well, which haven't been stopped out yet. But it's very rare that it doesn't come finish the whole thing. If it does, possibly. I'll give it some time though, cause before I go to bed, I'll be doing something. Whether I shave manually and hedge the rest, or like I leave it fully hedged and just kind of go to sleep wherever it ends up going from there. I'd rather not do that though. I'd rather just do the manual shave and hedge the rest. We'll see. The E thing is on my mind because it's still quite far up. Like the first TP I want to get is here. I'm considering closing some manually here. But like we're quite far from that. And if this thing just kind of taps this and starts going lower, we're not making it. So almost certainly we'll be leaving this one hedged overnight. Okay, I'm tired. I'm getting over to a quick chat shout out and get going. Shout out to Lyle. Quite the dedicated viewer, right? New to the community. Can't even speak. New to the community. Quite dedicated though. Shout out to Bebo. And you're always trolling. Bebo never wrong, quote unquote. Oh, that guy sometimes, man. Yeah, I'm out here. Curious to see how this stuff comes along tomorrow. Seems like we're flipping this and going so far, right? So far, so good. Plus, we are like, you know, for the pattern lovers, we are coiling up here. Which is a bunch of garbage to clean right there. And like, once you flip this like gamma level, it's kind of like clear skies. What's like the next one? Next one is quite far. Yeah, it's not until like these highs basically. So quite likely we'll kind of just yeet till at least there. Until then, call it a night, right? Day by day, level to level. I take it nice and slow. A little sad we didn't get this before going to bed, but yeah, I'm out here. Kind of back tomorrow at the usual time, 7 PM or so. But until then, I'm out of here. Later.